bring them up. Hello, traders, friends, family, and everyone else. Welcome to TopstepTV. And once again, here today, we do have an all-star cast that I believe, that I know that you're going to love here today. And of course, on TopstepTV, we have nothing that anybody else has here. Good stuff. They wish they had what we had. Education, trading buddies. We've got some cool swag, market knowledge, and tradertainment. So tell your friends, tell your family, tell your family's friends to come and join us today. Yes, this is opening call. He is Timon and I'm Pumbaa. We have an informative, educational show for you today. We'll be your trading buddy, your trading mentor, newscaster, fellow trader, good friend, neighbor, and the person who keeps singing Hakuna Matata.
Hakuna Matata.
Hakuna Matata. And yes, even that voice that keeps telling you, hey, a true friend accepts who you are, but also helps you become who you should be. I love that one. That's a real friend. So let's get ready and let's say hello to our good friend and trading mentor and the guy who we all look up to, John the Hoagland. Good morning, Johnny.
Good morning, Eddie. You're too kind. Hakuna Matata to you. Hakuna Matata to everybody. Welcome to May. May 1st already. Unbelievable. Unbelievable. It's hard to believe, but FOMC day today. Probably a lot of hurry up and wait, and we'll see what happens at 1 p.m. Central. But as always, my focus here is seeking accurate context, good risk management, and always remaining patient.
Patient.
Patience.
Patience.
Mufasa.
Patience. Trassel, throne. U.S. Let's get to the news here, brother. U.S. Federal Reserve, as Johnny mentioned, we will be seeing the Feds here today. Amazon first quarter results kick some butt. They look really good here. Crude prices have been hit by a large build in U.S. inventories, and on we go. So the Fedapalooza, concluding its two-day policy meeting later in the session, as John said, 1 o'clock Central. We will be on it like flies on things. Potato salad. Yeah. Okay. So the U.S. Central Bank widely expected to hold its benchmark interest rates steady as she goes. No news is good news, I guess. Powell was going to say at his new conference, hopefully he's going to say that we're going to do something, but I highly doubt it. Dow future contracts, as we do see here, made a little run here. We had a number earlier, contracted about 35 points. S&P dropped a dozen, and the NASDAQ fell by Jerry Rice, 80 points. So Wall Street has indices have struggled this past month, if you are just joining us, and sticky inflation data prompt investors to rein in expectations of the interest rate cuts by the Federal Reserve. So we did see the S&P and the NASDAQ lost more than 4% last month, and the Dow fell about 5%. That's the worst monthly performance since September of 2022. Where were you in September 2022? I don't even remember where I slept last night. But anyway, Johnny, what do you got for us to add to this wonderful day of news?
Well, as far as economic numbers are concerned, all my good friends out there, at 6 o'clock a.m. this morning, the mortgage rates and applications came in. Mortgage rates rose another 5 hundredths of a point. Last week, they were at 7.24%. This morning, they were announced 7.29%. That is also continuing to cut off applications. Rates continue to rise, ladies and gentlemen. As far as 7:15, the ADP employment report came out. They were looking for 180,000 additional jobs. It came out 192,000 additional jobs. There was also a revision of last month's from 184,000 to 208,000. The employment sector is doing well. At 7:30, the U.S. Treasury quarterly refunding came out. 8:45, we're looking for the U.S. S&P manufacturing PMI final. 9 o'clock, the JOLTS numbers come out. Job opens and labor turnovers coming out. ISM manufacturing PMI also at 9 a.m. Central Chicago time. And construction spending also due out at that time. At 9:30, the EIA petroleum status report is due out. Now, the API last night announced a 4.9 million barrel boost in crude stocks here in the U.S. The EIA is, however, expecting a small draw of 2.5 million barrels. At 1 o'clock, the rate decision is due out, not expected to change rates from 5.5%. And then, of course, the big guy, the Fed Chairman Powell, will be having his presser at 1:30. We'll be running that live here on TopstepTV. As far as the VIX is concerned, it's a little up this morning, about 3%. Still a paltry 16.3. Dollar index pretty much flat at 106.22 last I checked, and the yield on the 10-year slightly lower at 4.66%. Don't forget, it is the Labor Day holiday in a lot of countries, and mostly in Europe, Asia, and South America. Why they would choose a Wednesday for Labor Day is beyond me, but that is what they do. And that's what we've got as far as known economic data due out today. And back
I like
to
that
you, Eddie.
known. They might add something when we blink. Oh, look, they added something. Oh, they added something else. Dude, where's my crude? Let's talk about it. Crude prices fell today. Looking at crude here right now, we're back around that 80.50 level right there. Bing, bada bing, bada bang. 80.50 here in a recent weak tone after a surprise build in U.S. stockpiles. Strong crude production sparked doubts over tight supply conditions. We did see the crude trade 1.1% lower, 81.03 a barrel. That has dropped here. Brent was 85.42. Now, API came out yesterday and did say that we grew 4.9 million barrels a week to April 26th. That was a bigger jump than the 1.5 expected. John, we use Amazon a lot, right?
Yeah, we do. Santa Claus comes to the house just about every day.
Just about every day. Do you ever return something? I mean,
yes,
you have. Okay.
Yes.
This couple was returning a pair of boots, and all of a sudden they were looking for their little kitty. Couldn't find the kitty. Well, this kitten slips into an Amazon return box and takes a 600-mile trip. Yes, cat from Utah, that state of Utah. Watch what you're packing away there. They said their indoor kitty Galena vanished from their home April 10th, and a frantic search ensued. They didn't know where it came from. Then all of a sudden they got a call from Cat Kingdom. No, actually they got a call that changed everything. The call was from a vet in California, 600 miles away, saying that they scanned a microchip for the cat. An Amazon worker, her name was Brandy, heard something in a box, and by rule they have to check each package. Open the box, and there were 5 pairs of work boots and a kitten. So thanks to Brandy.
Kitty.
Huh?
That poor kitty.
Well, cats are very mischievous. Not like if my
Little
dog
Dickens.
jumped in there,
Little Dickens.
Little Dickens is right. Well, a good ending. I think we need stories like this with good endings. But there's not a good ending. Yeah, that zebra we talked about yesterday is still on the run. And once again, do not attempt to capture the zebra. It is armed and dangerous. They haven't found the fourth zebra yet. Hopefully somebody doesn't have it on a spigot. But anyway, James, are you with us today, my friend? I think James is here. Do you have our tip of the week? There it is. Performance Daily. Review your Performance Daily. One of the things that I used to do, I don't do it anymore, and I suggest it to some people, is, we talk about journals, write down your emotions, write down how you're feeling, write down your trades and so forth. Sometimes we don't have time to write things down. We're too involved. We're too focused. Well, I think everybody has a smartphone. Okay. And it has a little record button on there where you can record audio. Do that. Okay. Record audio, things that go through the day that you can review later in the day when a playback. Take a little time out at the end of the day, rewind, and check that out. So that's my take on trying to keep your performance up each and every day. Johnny?
Yes. I mean, how are you going to improve if you don't review your performance? Think about the trades that you took. Think about the trades that you missed. Think about the trades that you were gonna take that you didn't take that you should have taken.
Mhm.
Just reviewing all that, kind of going through the whole day at the end of the day in your mind, and kind of rerunning some of those scenarios and opportunities. It can't help but improve your performance over time. Today, I'm going to be monitoring my performance to make sure that I don't pay $5 for being on mute today. That's going to be one of my performance requirements today. So we'll see how that works out. Maybe we need to get an over under, maybe halfway through the fast market segment. I'll do something like that. But that's my goal for the day, Eddie.
I appreciate that, Johnny. All right. I want to add before we go to our charts, Johnny's charts. We are aware of what's going on in chat. Okay, we did have the bell to bell. It still is Wednesday morning. We're still on that. If you have not received a code, or if the code is not working, we will fix it. All right. Please stop spamming the chat. Yes, the code, you'll get it. You'll get it. We promised it to you, and I think everybody knows that if we have a promise, we keep it. We will get it done. You will get your free reset if you did partake in only one. We were being very nice here, so be nice to us. And remember, please be kind to the support agents. They're working night and day to keep these issues to a minimum, answering questions, requests. So we will get this done, and you have my word on it. And stop throwing rotten tomatoes and egging my front window. I got to go out there and clean it out right now.
Just so you know,
Um,
I caught the bug. I got the bug. Here he is. It's a little
There's the
gremlin.
gremlin. You
I
got
caught
him.
him.
Kill him.
The problem is going to be solved very soon because I was able to trap this little guy, and we're going to put him back in the cage. He doesn't like bright light or anything, so we'll
Oh,
put him back in his box, and we'll keep him there as long as we can.
I put him in a tanning booth since he doesn't like bright light, little bastard. All right, we're putting the blame on him. But yes, we will take care of it. You will have it. I promise. We promise. As top step. But anyway, let's get back to business here, Johnny. What do you got for our contestants today?
All right. Moving quickly through these charts this morning, we've got the daily in the S&Ps. The decision, I guess, was finally made up near that weekly kickoff high of 5150 yesterday, and we did see some pretty good selling come in off that number, and we saw some continuation throughout the day. We had an increase in volume yesterday, but I'm not looking at that as being very impressive. We lost open interest as well, 9,500 loss in open interest. So there wasn't a lot of new business coming into the sell side. This was more like maybe some profit taking, maybe some long stuck at the top. Just decided they were going to get out and come into today flat for the FOMC meeting, whatever that means. So it is FOMC day today. A lot of times that means it's a big hurry up and wait kind of day. We're going to be patient today. There are a couple of nuances in the profiles that I want to touch over, but first let's take a look at the 30-minute chart and what happened yesterday. So we had some really kind of boring, stuck up at 5150 levels. We checked it 3-4 times the day before yesterday. It didn't, you got to get kind of close yesterday. Then the sellers came in, and where did it take us? Where did this market go? It went to visual levels. First stop, this naked point of control, a naked volume point of control. Next stop, a naked TPO point of control from back here on the 25th. That's where the market targeted. The market targets visual levels. Naked, unrevisited points of control are visual levels that the market will seek when it goes to in a certain direction, and that's where the market kind of finished yesterday. Overnight inventory, we were looking a little bit short. We've flattened out that overnight inventory after the early numbers this morning. Looks like we're going to be opening with a gap below yesterday's range. Well, that puts me into gap rolls, meaning if we can't close the gap relatively early, I understand that's a subjective term, we'll look for opportunities to the short side. There is another nuance that comes from the profile we put in. I understand there's a drinking game going on about this. Yes, there was a late spike to the downside yesterday. A late spike is when the market is, well, it was a double distribution trend day yesterday. In other words, there was some time and volume accumulated here. That was quickly rejected. There was some time and volume accumulated here. And that rejection continued to the downside at the end of the day, extending the range in the last 30 minutes and then closing at the low. That's a late spike. There are general rules around late spikes. Opening flat out below a late spike is an indication of acceptance of lower pricing, higher probability of lower pricing being priced in today. Opening in the late spike, a secondary but still probable situation where the market is going to accept lower pricing. And the base of the late spike can be a useful tool if it is approached. The base of the late spike, write this down in case price gets up to that level. 50.86 half. 50.86 half is the base of the late spike. So we've got some nuances that say this market is likely to continue to accept lower pricing. It doesn't mean you can close your eyes and sell. You've still got to be smart about it. You still got to look for good levels to limit risk. Gap close might be one of those levels. It's that naked point of control. Settlement is right there, 50.67 even. That would be a settlement gap close. And then there's that 5% off the all-time high, which is 50.6675. Also a visual level that was targeted yesterday. Take a look at the NASDAQ now. So NASDAQ, I mean, a similar situation, of course. Volume was higher, but it wasn't great yesterday. A lot of folks really just trying to position themselves for today. We know that Europe, Asia, and South America, there's a lot of holidays today. So you can probably expect some lower participation volume and liquidity today because of that on an FOMC day. We added 2,700 approximately new sellers into the open interest on this push to the downside. The extremes have been set now, right? We've got last week's high and last week's low really kind of enveloping current price action for the last week and a half, maybe even 2 weeks. 17,901 half on the upside, 17,148 and a half on the downside. We're right in the middle of it. That makes sense because we don't know what's going to happen with FOMC. A lot of emotion, a lot of expectations. It could end up being a nothing burger. We have no idea how this is going to play out. I will be relaxing, watching, drinking, eating some popcorn, and drinking some Diet Coke or something of the sort while that goes on, because I just want to watch the fireworks. I don't want to participate. Maybe we'll trade in the afterglow later on, but we'll see what happens. The 30-minute chart also very similar. It was a double distribution trend day to the downside. Some time and volume accumulated, rejected, time and volume accumulated. That's the 5% off the all-time high. That was an early target. The next target was a naked point of control. Down here at 17,705, we got to that. And then we do have a late spike. So a double distribution trend day, late spike to the downside. Opening below that late spike indicates probable acceptance of lower pricing. The base of the late spike, and this is an important level, 17,659. If it is approached, it can offer you that opportunity to limit risk. We're always trying to put these markets in context, talk about ways to limit risk and remaining patient in our trading. So try and stay patient today, even though we are opening with a gap and gap rules apply. If we can't close the gap relatively early, we're looking for opportunities in the direction of the gap, which would have us looking lower. Our overnight low was put in right at a naked TPO point of control from back on the 25th. 17,409. Where was our low? 17,412. So relatively close to it. There's also an afternoon pullback low from the 22nd down there. There's also another naked point of control down there. So there are visuals and weaknesses in structure below for this market to go seek visually. So with the rules for the late spike, opening in or below the late spike, higher probability of acceptance of lower pricing. Doesn't mean you just close your eyes and sell. You got to be smart about it. Let the market let the daytime frame market give you some clues as to what might happen. Now look at this crude oil. If you've been watching, we've been doing some chart patterns. And a couple of weeks ago, I said, this is starting to look like a head and shoulders here. And it almost looks like the market is looking at my chart. I mean, this is I've never been able to do that before, but we put in the one shoulder, we put in the head, we assumed a right shoulder, and that right shoulder is really playing out. Well, where's the neckline? The neckline is 80.30, which is the weekly kickoff low, which 80.31 was our overnight low. That could bring a decent downside opportunity if the head and shoulders plays out the way it's supposed to. Is anything in the market supposed to do anything? The measured move is from the neckline to the top of the head. That could bring us a move down to around $73. I wouldn't mind $73 crude. I'm sure all of us wouldn't mind seeing that. So this 80.30 weekly kickoff low here is going to be pivotal today to anybody trading crude oil. And that's just my opinion. I am not predicting. I got lucky on when I put this head and shoulders on there. And it seems like the market is looking at my chart and saying, okay, well, this is what we're going to do. Hoag says so, but that is certainly not the case. Not predicting, not suggesting, just pointing out the context of the marketplace at this time. All right, so the 30-minute chart. Looks like we've lost our feed here.
But we haven't lost audio.
We have not lost audio. Okay, so we lost the charts. Well, anyway, in crude oil, watch that 80.30 level today. We did open with a gap below yesterday's range, yesterday's low, because, there we go. Now we're back. Thank you, James. Always doing such a wonderful job, James.
He is, isn't he?
So
just remember,
yes.
Hakuna Matata.
So, normal variation, neutral day yesterday. Overnight inventory is short. We did open with a gap. If we can't close the gap, market could go looking for lower levels to facilitate trade, and a break below that 80.30 weekly kickoff low and the neckline from that head and shoulders pattern could provide a pretty decent opportunity. At the very least, it will allow you to limit risk. Now we'll take a quick look at gold. Gold. All right. So yesterday we had pretty decent down day. How was the volume? How was that volume yesterday? Not great. I mean, it was a little bit higher, but still volume has been trending lower as we've been coming off those highs. That's a little bit of a warning sign that this is more of a pullback than a real change in direction. Yesterday on that down day, we lost 5,000 in open interest. Also, not encouraging for those that are looking for lower pricing. I'm giving yesterday's downside move a C-. It did move lower, but it didn't perform well. 2281 is weekly kickoff low. 230460 is last week's low. And somewhere down here, there's an opportunity. I can just kind of taste it in the air. Take a look at the 30-minute chart. There is a lot of visual levels down below, weaknesses down below. But with that break to the downside yesterday on lower volume, it wasn't all that impressive really during the daytime frame. It was a bit of a double distribution trend day. We've got a rounded bottom here. This can be a reversal pattern, even though it did happen in the overnight. This market has to have new business. It has to have some reason to continue this move to the downside. If there is no reason, the market could just kind of return to range-bound trade or eventually continue the move to the upside. I was not impressed with that move to the downside yesterday. The overnight inventory, the kind of a double distribution trend day to the downside yesterday, smaller range, rounded bottom, unimpressive performance to the downside. Look where it's going already. It's already looking like, hey, you know what? Let's just take this thing back higher. I don't know. It's going to be an interesting trading day. Remember, stay patient today. Everybody, take your deep breath. Humble, grateful, creative, and centered in your trading today. Be patient. It's FOMC day. ACH, anything can happen, and we will profit from it. You will profit from it. Let's have a great trading day.
You got it. Coming up next here, Fast Markets with Deeyana. Yes, she's back. A wonderful morning here. JD Hoag and Andre are going to fire it up for Fast Markets. Johnny, I'm going to meet you at the coffee machine here in just a bit. But remember, for those in chat, yes, we do know that reset that we had a little gremlin in the system. You will get your reset. Relax. Let's focus on trading, and we'll be right back with Fast Markets. All right, we are back. Get your boxed kittens in the gates or your zebra, whatever you prefer. And I'm going to pass the torch over to Andre. Good morning, Andre.
Good morning, Eddie. Thank you. Welcome, everybody, to TopstepTV. It is an FOMC Wednesday today. We got Deeyana in the left corner, JD in the lower right, John Hoagland in the upper right. Deeyana, welcome to Fast Markets. What are we feeling today?
Thank you. I'm just on a combine today because of FOMC. I'm not sure I'm going to be doing any live trading today, but I did do a little RB futures, gasoline futures trade, just to kind of test the waters. So I'm sitting up 929 in my combine, which brings that particular combine to 155,196. So, a few more grand, and that can turn into an XFA. So it's pretty cool. But yeah, FOMC, big week. So we don't want to be doing stupid things. So, yeah.
We certainly don't.
Yeah, John, we don't want to do anything stupid. First of the month. Welcome to May. Oh, my gosh, it's May already. It's pretty crazy to think about. Well, like we said, it is FOMC Wednesday. John, opening range, how are we looking on that? Talk us through it.
We're still in the opening range in the NASDAQ and in the S&Ps. If $5 opening range in the S&Ps, $29 opening range in the NASDAQ. We're opening out of range and out of value. This would typically be a day that I would think about doing the opening range, but it is FOMC day. Mm-hmm. And we've got a couple of situations in the S&P and the NASDAQ. We're opening below a late spike, and that is usually indicative of acceptance of lower pricing. Mm-hmm. So if I were going to be looking to do anything, it would probably be to the short side. But we've got almost a 6-handle opening range here in the S&Ps, 32-handle S&P opening range in the NASDAQ. We are opening with a gap. What the market I'm really interested in watching today. I don't often trade crude oil, but
wow, really?
take a look at this.
Yeah, what do you got?
Remember when I put this Head and Shoulders on here like 2 weeks ago? Is the market looking at my charts? If JD's probably got some noise behind him, but
oh yeah, Mick just walked in the door, and there's a dog here.
Gotcha. So remember when we put this on here a couple weeks ago? We were talking about the chart patterns.
Oh yeah, for sure. That was that played out beautifully. It's right.
Yeah.
You haven't moved that either. It's seriously following the lines.
Yeah, that's what I'm like. Are the Goldman interns watching my charts?
Wow, it really played out perfectly. I'll be damned.
Well, yeah, and it's about to play out. I mean, if we can take out the weekly kickoff low at 80.30, that's pretty much the neckline. That could take us down to $73.
I'm cool with that. I like the sound of that. Jeez.
Right? I'm sure everybody's
should we
good
trade
for
some
that.
crude today?
I mean, if this thing goes, it goes. There's no guarantees of anything, but if we're following chart patterns and we take out that neckline, that the target would be all the way down to that level.
Mm-hmm.
I'll be watching it. I don't, I don't often trade crude oil, but that looks like a tasty beverage there.
Stick out like a sore thumb. I like it.
Mm-hmm.
All right, JD. Well, we're gonna play this nice and slow. Like I said, as FOMC, we do have the house account open. We are gonna be looking for levels from our best talent here at Top Step. Please submit your levels. I got John, I got JD, I got Deeyana with submitting levels as well. We're gonna take it slow. We're gonna take it slow. No rush.
Let's talk about the process there.
Yes, the process.
So if we can move over to my screen for a second.
What's this?
Decision tree.
Yeah. So I gave it a bit of a thought how we can do this better, because initially we had the whole issue of we have levels, but then the price would move away from it, and then we were just doing silly trades in the same direction of whatever the people were saying. So we sorted that out. So now we have the level, but then what's been happening recently is that it's almost like we pull a level out of a hat, and then somebody, usually Andre, clicks without actually checking whether we have, whether the market's catching a bid or the offer, like what's going on. So I was just thinking, how can we improve this, right? And just thinking about all of us, the way we trade. I try to include everything in a very kind of succinct way to get us started about thinking of this process. And I would like to invite Nick T, Robert, Isaac, whoever has any sort of a systematic way of trading to help us refine this process. But this could be a good starting point. So what I was thinking, we have the community level, right? So we agree on the price. We might want to check delta at that point with John, which we have done in the past. Obviously, we didn't have John here, I think, yesterday. So that's something to include in that process, because I think that's a very good way to see whether the trade idea even has merit, right? Then to move on to looking at the ladder to find some liquidity blocks, like Rips does things, right? So you want to see whether there are any orders there at all, and they're pretty visible if there are. So that can be an additional way to double check what's happening. And then finally, price action. Now, price action at the level could be something like Dakota's 3-candle pattern. It can be my reversal pattern that smashes through the opposing area. So anything, we can obviously agree and refine this as we go along. And if all of this is in order, then we have a trade. If one of these is not in order, we don't have a trade. I think that would be maybe a better way to approach this process. So
community level, pull level, check delta.
Yeah.
Look at the ladder for liquidity blocks. Price action at that level. If that checks out, yes. If not, no. Then no trade. Okay.
And price action can also be, are we catching a bid? Is there, are the sellers stepping in? It doesn't necessarily have to be just like, price action. Let's just look at patterns. It could be anything, but we do need to have some sort of a confirmation that we have other people with deeper pockets looking at the same thing, right? So I just think this would be a good way to start to improve the process.
I don't want to muddy the waters, but some sort of
Yeah.
confluence, like, here's the level, delta's right. Is there a value high, value low, point of control? Is there something else, some sort of confluence to add in there?
Mhm.
And the last thing, again, I don't want to muddy the waters because there's a lot of chefs in this soup already.
Mm-hmm.
Yeah.
Like that.
Just a heads up real quick here, and coming up in about 5 minutes, we will be having our S&P Global U.S. Manufacturing
Thank you,
PMI, and it is a big number. They're looking at 49.9, previous 51.9, so we'll keep an eye on that in about 5 minutes.
I like that. I like that a lot, D. Let's let some of these numbers pass. We also got more numbers in 9. Eddie, why don't we just go over the let's go over the calendar right now since you got it.
Okay. Construction spending in about 20 minutes here. It's coming out here. We got a lot coming out here in about 20 minutes. ISM PMI job openings. In about an hour, crude oil inventories. We'll be seeing that also. Don't forget here that we do have 1 o'clock. Yes, the FOMC statement. That's going to be the meat on the bone here for today. So let's just be prepared throughout the day. Don't get fixed on trying to get big profits here. The markets might be stale. So keep an eye open, but back to you, Andre.
Thanks, Eddie. Yeah, you're right. So we'll let these numbers come and go, pass, and then hopefully get this house account fired up. We'll keep an eye on that. For the time being, we're going to be patient.
Can you put that decision tree back up? I want to take a screenshot of it.
Yeah. Let me just find it. And I just put Confluence Value Edge, but we can put anything. I can send this to you as well if you want.
All right. I have got it. Thank you. And yeah, it's trading is always a work in progress, but I like where you're going with this.
Yeah. I've been thinking. I've done a lot of thinking.
I appreciate it. I appreciate that very much. We appreciate it. Oh, Hungus. Already starting off bright and early with the wise cracks there. I appreciate it. Thank you for coming here. All right, JD, what are we looking at for levels here? Anything crossing showing up on your radar over here? I got the ES and I got the NASDAQ up.
Yeah, I'm looking at the NASDAQ too. I'm not really looking for much. Probably get a nice easy range 2-way trade before that 1 o'clock FOMC release and the 1:30 press conference. We do have the JOLTS number coming out at 9 o'clock Central Time. That's been a bit of a market mover the last couple months. We might see a little volatility there, but I'm really not looking for too much early on this morning. What's hey D, just curious, it's May Day in Europe, right? Are a lot of people taking the day off?
Not really. See, over here, London Stock Exchange still works. They're still open. But we do have the bank holiday Monday coming up. It's a May bank holiday here. So, actually, I don't think I'm going to be here on Monday, which was something I think I said that to him about a month ago or something. And that's why, because it's not a lot of things open, and we have some plans that have been in force for a long time. But so instead of taking the 1st of May off, we actually take the first Monday of May off as a bank holiday. So that's the difference. Yeah, but I know that Eurex is not open, France is not open, a whole bunch of exchanges in Europe are just not working because it's a bigger holiday over there.
Interesting.
I was really just curious about what market participation would be looking like with a lot of people not in the market today,
Yeah. There was still some movement. If you look at how London was for gold and stuff, there was they did a little bit of trading, nothing crazy. But there was some movement. They kind of stayed range bound until the overlap. So let's see. Yeah, it wasn't the biggest session, but nothing out of the ordinary. It wasn't completely dead. Yeah, but obviously a lot of the party is for these hours now. I might see a failed auction in gold actually, but we'll see.
Okay.
Gold.
Gold. Okay, let's talk about gold. What are we seeing in gold right now?
Yes.
It's very quiet.
Yeah. So we opened inside value. The value is, medium sized, pretty decent. But the nature of inside days is that they can draw responsive activity. What does that mean? It means market makers. So one of the hypos that I quite like on these sort of days is to wait until the price pops outside of the value and then returns to the initial balance, thereby bringing the price back both into value and that first hour trading range, aka the initial balance. So that could be developing here. I'm not too happy about the strength of these candles, though. So if we do reject value with some force and we get participation above it, then this trade idea would be not valid, and we can move on to the next hypo, which would be a pullback into ADR level, which is up at 23.26 roughly, and then also have a recession range level, ASR, all the way up at 23.32. So those are some areas that I'm looking for. So breakout or failure from this value area.
Mm-hmm.
And then if we get all the way up there, maybe another short from those statistical ranges slightly later in the session. But for now, I'm just going to sit here, caffeinate. I don't think I'm going to be trading live. So I want to wait and see what FOMC does. So I think I might just chill in the combine for the day. And then tomorrow we can do some more trading in the live.
Okay, that makes sense. Yes, it's probably gonna be a crazy day, backloaded, of course, with FOMC, and then we have the Jerome Powell press conference, which we will be broadcasting live here on Topstep TV. So make sure you tune in for that. We are off to a bit of a slow start, as expected, I would say. John, nothing out of the ordinary for a day like today. What are you looking at in terms of let's look at the charts here in the ES and NASDAQ. What are we seeing? Any type of price targets, any formation showing? Because we're trading the same damn prices, 50-50 here in the ES and 17,500 in the NASDAQ, call it.
If you will indulge me, I'd like to talk a little bit about what happened yesterday in the S&Ps and the NASDAQ.
Yeah.
And what this big move to the downside that occurred at the end of the day means. That's a late spike. Typically, and it's called a late spike because the market doesn't get the opportunity to accept price at this level through time. When we open below a late spike, it's one of the higher probabilities of acceptance of lower pricing. So that's why it's got me kind of on a short bias here. The opening range broke to the top side. Glad we didn't take it because we would have just gotten taken out of our stop out at the bottom here. The reason we didn't take it is, number one, because it's FOMC day, and we're really close to a low volume node here from back on the 25th. This might just repair from the low from yesterday to the naked point of control down here at 50.38 even. Yesterday's low, of course, we're looking at 50.65. There was an attempt to close it. It did not close. The next downside target could be down to 50.38 even. Look at where the market traded to yesterday. When you guys were in fast in power hour, I put in the chat. I said I think the target to this move to the downside is to this naked point of control at 50.67.5, and that's pretty much where the market settled. So with the nuance of the late spike, the inability to close the gap, I'm looking for this market to rotate to this volume point of control down here. Markets are extremely visible. So the market opened lower. We're really going to have to push price higher if we're going to see value overlapping to higher or inside yesterday's range. When we're looking at acceptance of lower pricing, we're looking at value. Very high probability that value is going to be at the very least overlapping to lower yesterday's value, which the low of that was 50.72.75, or flat out outside of it if the market just kind of ranges down in this area. So, the late spike isn't an opportunity just to close your eyes and sell. The market could come all the way back up to the base of the late spike, which is where price left the range for the day. That was up at 50.86.5. That base of the late spike is kind of the last ditch effort to look for shorts if the market even gives us that opportunity up there.
Okay.
So, but the point being is when we open down here, there's a very high probability that value will end up outright lower or overlapping to lower, which means acceptance of lower pricing. NASDAQ, I mean, same story. Here is the profile for the NASDAQ. Where did it go?
Hey, real quick, Johnny, while you're watching here, we had that number come out. Actually, it was 50, and that means expansion. So it means we are growing there versus the 49.9, which wasn't much. So PMI actual 50 was. Thank you.
Thanks, Eddie.
Thank you.
All right, John, let's keep going. This is good stuff here.
So here's the late spike from yesterday. The base of the late spike in the NASDAQ, 17,659. The low of the day, 17,563. Market left the opening range at the high of the session. Basically, kind of a similar situation. The market seems to be wanting to repair the double distribution day from the 25th. The target for this would be this naked point of control down here at 17,409. What the heck is a naked point of control, and why is it naked? Why doesn't somebody put some clothes on it? Well, it's because it has not been revisited in the regular trading hour session. And these points of control are comfort levels. They're popular places to trade. They're visual targets, and markets are extremely visual, as we saw in the move yesterday. This is basically that same point of control that the S&P traded to yesterday. The NASDAQ didn't quite get there. But now we're kind of in an area of potential repair from a previous profile, just to see if there's any business that we missed on the rejection through this area. Call it a fair value gap, call it single TPOs. It's not even really truly single TPOs. It got run through twice that day, but it's very low volume. Got more time spent up here, more time spent down here. The market could just kind of repair this prior to the FOMC meeting, which again, we know anything can happen. We have the NASDAQ leaving the opening range at the high of the session. We had the S&Ps look above, now trading below, and the Dow. Okay, the Dow opened in the late spike. This is the base of the late spike, 30,072. Price went up above it, rejected it. Now it's taken out the low of the opening range, the low of the day from yesterday. So, if the Dow is going to be a little bit different, it might be an inside to an overlapping to lower value by the end of the trading session today. But this kind of gives you, a degree or a nuance, if you will, that the markets are attempting to accept lower pricing. How do I feel about that, Andre? How do I feel about that? That move to the downside in the S&Ps yesterday and in the NASDAQ, how did it do? Well, volume was higher, but still not impressive for one of the worst days we've seen in recent history in the S&P and in the NASDAQ. And in the S&P, we lost approximately 9,500 in open interest. This was more about liquidation than new positioning. We've set the extremes of price, basically weekly kickoff low, 5,004, and weekly kickoff high, 5,150. And we're right in the middle of it. The market is just waiting for new information here. So if I had to, I would give both the move in the S&P and the NASDAQ a C- yesterday, because the volume was higher, but it wasn't great. Usually when you see a big down day in these markets, there's a lot of volume to them. The volume wasn't that great. And we lost open interest in the S&Ps. We gained a little bit, approximately 2,700 in the NASDAQ. But again, the volume in the NASDAQ on the daily chart was not that impressive. Let me get this up here. There we go. And so higher volume, but it's still kind of trending lower, as the market is kind of falling into consolidation here. And, we've got our extremes set for this consolidation. We've got 17,901.50, last week's high. We've got 17,148.5 last week's low, and we've got the weekly kickoff level kind of inside of that on the downside, because it's kind of based off of profile, and there's a naked point of control near that level, probably, if I remember right. So, these markets are, there's opportunity, but they're so thirsty for new data. They're just sitting there like, somebody get me a beer. Somebody get me a beer. Look at crude. If you were trying to preempt the breakout of that neckline, you're getting smushed. We just closed the gap. So now we could fall into value acceptance from yesterday. Or if we reject, then we get a move back down to that weekly kickoff lower the neckline. And if we can accept below that, that's when the downside move comes into play. The downside move doesn't come into play until it actually comes into play. This, any shorts down here would be preemptive and ill-advised, because this has been supportive. It's weekly kickoff level. You kind of look long above, short below, especially after that. After we get a break in this neckline, which I've pretty close to 80-30. I don't know if that's right on it, but I'm watching this market to see if we do see a successful acceptance below that level, and then maybe we can see a pretty decent down move. If not, I'm long against it. You have to be.
Yeah.
You have to be. So I'm conflicted as far as the equities are concerned.
Because we have the inventories.
Yesterday wasn't great, but we have downside nuance. Okay, I'm sorry. Dee, go ahead.
Yeah, we have the inventories today in crude oil as well, which could be putting a bit of a wrench in the works for the downside. So we do need to see what that number is, let it all shake out, and then we may have some direction maybe tomorrow. So again, I don't think that today it would be a good day to run any hypotheses, because we have so many. We have the inventory is pretty important. It's the biggest number for energies. And we have FOMC, which does. Somebody asked in the chat, does crude oil get affected by it? It does, but nowhere as crazy as ES, NQ, YM. Like equities go nuts, so does gold. Crude oil will have some sort of a move, but it's not going to be like some insane move. It's usually pretty orderly. So if you want to trade something without the drama, you can do crude oil. Just don't expect you're going to get like huge, enormous moves from it, because that's not quite the instrument for that release. The interest rates do have a connection to crude oil, but that's generally expressed over longer periods of time. It's not going to happen on the day. Whereas equities and gold, they're a lot more sensitive to any monetary policy statements, rate decisions, and all of that good stuff. So just wanted to throw that in.
Thanks, Dee.
Yeah, good stuff. Eddie. Good stuff.
Very good. Very good.
Yeah.
We got 5 minutes. This is, I just wanted to say that we've got the ISM coming out, job openings. This might be a big one here. So check your positions. Make sure you're flat if you want to be flat. And back to you, Andre.
Yeah, thank you. Thank you for that reminder. Hit that cancel, hit that flatten all button going into these big numbers. JD, you said Jolts moved us the last couple of months. I think you're right. What do you remember from the Jolts last couple of months? Because I remember it moving us. Did it come in out of line? Is that what really got us rocking, or what happened?
I believe that was it, just coming out of line. I'm trying to looking up some historical data now.
The prior was 8,756,000.
8.7 million. Looking at that, yeah.
Yeah, they're looking at 8,680,000 right now.
Consensus range of 8.5 to 8.7 million is the consensus range.
Okay.
I'm not getting the month by month data, but
JD or Eddie, if you guys have that up, tell them what Jolts what it is exactly. Why is it important, or why has it been important?
Would that be on trading economics or something?
I'm going to read it right from the, I'll give you the textbook definition here. Labor Department Jolts report tracks monthly change in job openings and offers rates on hiring and quits. Reporting period lags. Other employment data, including the employment situation. The word JOLT stands for Job Openings and Labor Turnover Survey. So basically, people getting
And
hired
for whippy move,
people quitting.
get when notes come out.
Absolutely.
Employment, job openings, recruitment, hires, separations, all the above.
Oh man, that reminds me. That means we have non-farm this Friday.
Yes, we
Yeah.
do.
Yeah.
This one,
Triple
jeez,
whammy,
what a
triple
week!
whammy.
What a
Yeah.
week we got.
Yep.
Man, for first Friday of every month, non-farm payrolls. It used to be the
End
number.
of the month.
Yep.
FOMC.
A lot going on this week.
Yeah. Getting a little movement in the equities right now.
We are got a bit
Got
of
some range extension lower in the Nasdaq.
And in
little bit of
gold
selling.
as well.
Nothing heavy. NQ still in a 60-point range since the regular trading hours open. Not a whole lot to get excited about right now.
That's okay.
So hurry up and wait kind of day.
Yeah, that's okay.
Yeah.
We got this number in 3 minutes, and then we got EIA at the bottom of the hour. So let's get this 9 o'clock Central Time number out of the way. Then maybe some levels, community level. Then we check price, ladder liquidity blocks, price action. Yes, no. Do we pull the trade? D? I think I got down your decision tree. I like it.
Yes. Yeah.
I like it.
I'm glad. Good.
Nice.
You're welcome.
All right. Eddie, when that number
Minute
does
and a
come
half.
in, you Morse code and parachute in with the information, the data. Give us
Aye, aye, Captain.
insight.
Mayday,
into-
mayday.
James Bond.
Mayday. Yes, James Bond. Who's your favorite James Bond, Deeyana?
Bond.
Ooh, good
Ooh,
question.
yeah, that is a good question. I think Pierce Brosnan.
Ah, same. John, real quick. John, your favorite, and then JD.
Sean Connery.
You're playing both sides.
Classic.
Pen is
GD?
mightier than the.
When I think of James Bond, I think of Sean Connery. But
Wow.
Mm.
I thought Daniel Craig was a pretty good one also.
Yeah, he's pretty good. All right. Right before we get this
Roger
number, Eddie,
Moore
your
fan.
favorite. Hey, Eddie, your favorite
Roger
James
Moore,
Bond
yeah.
is
Oh, Roger Moore also. Dr.
Wow,
No.
old school.
Goldfinger.
Really?
old school. I love it. Everyone's got a different one. I like that.
What about you,
Generations,
Andre? What's your
I'm a
favorite?
Pierce
Is
Brosnan.
it really
Pierce.
Brosnan?
I liked Pierce.
Yeah?
Pierce
Same.
was cool. Yeah, he was a
Nice.
cool cat.
Timothy Dalton. I forgot about Timothy Dalton too.
No, shame on you. Go stand in the corner.
I'm reading the chat. Eddie.
Yes, Pierce was really cool. Daniel Craig ain't bad either.
Yeah, just they went a bit too serious with Craig, I think.
Gotcha. I see.
Because, James Bond is supposed to be a little bit of tongue-in-cheek, sort of.
Yes, I agree.
Yeah, it was way too serious. It's like, oh yeah, it's a definite spy film. Let's just strip him naked just because and whack him in the balls. It's like,
Here we
what?
go. Here we go. I see something we're rocking here.
We got our jobs coming in at 8.488, so lower than the expected. ISM coming in at 49.2, lower than expected. We did have the U.S. manufacturers coming in higher at 60.9, and construction spending down 0.2%. And those are the numbers for 9 o'clock. Don't forget, we do have that 9:30 crude oil inventories. Back to you, Andre.
Yeah, cool. All right, so we're starting to see some sellers here in the NASDAQ and S&Ps. S&P's trading 50.45. Nothing crazy with this downside move. NASDAQ pushing the downside here. It's trading 17,450. Hey, John, we got a question here from Anne Marie. Since you gave them a grade of C- on the auction, what do you think about a look for a buy the dip if we hold the lows this morning?
Where's the let me check here. Our overnight low basically was to that naked point of control. Hang on one second, Anne Marie. Hang on one second.
Yeah.
50.37.75. 50.37.75. 50.37.75. Yeah, I like it. You know why? Because that will be close to completing the repair from the 25th. That naked point of control down there, 50.38 even. What's our overnight low? 50.37.75.
Mm-hmm.
There it is. I like it because why? I can limit risk.
Yes.
So I would let it go through there. When it comes back above, that's where your opportunity lies.
I don't have much.
If it even gets there.
Yes. All right. If we had levels right now, nothing's really coming into focus. That's okay. You see, crude is ripping. If you mind taking a look at John, why don't you pull up the crude chart real quick?
There it is.
Crude likes the number. I'm getting some action on the crude. I do not have that up. John was flirting with taking a crude trade today. That's a first here on Topstep TV, or at least in 2024.
It's the
really
first. It's the first opportunity, I mean, that I've seen of this magnitude.
Yeah.
Either direction. You know,
that
80-30 weekly kickoff low was the neckline. We couldn't take it out. Back to the upside. We're going to close the settlement gap. And that settlement gap takes us up to settlement price of 81.93. Boy, that would have been a nice long down there against those 30s, 80-30, 193. We're looking at 160 ticks. I'll take 160 ticks. Hey, JD, what's 160 ticks in Cicero?
160 ticks is 160 ticks.
There you go.
Hey, there you go, DA.
You get a couple of beef sandwiches.
Oh, man, I go for a beef sandwich. All right. Henry looking for a long at 50.46. 50.46 in the ES. John, what do you think about 50.46 JD's? D, we got our community level here. Let's see if we can get a community level of 50.46 here in the ES. While we're looking at that, I'll take a look at the tilts. Right now, 50.50 in the ES. Crude 75% long. Gold 70% long. So, yeah, that's about it. 50.46. Looking at taking a long. John, anything there? If not, that's okay.
I'm not a fan of it. Okay. I'm looking for a deeper move down to that point of control before I start thinking of longs, because look at the nuances. Down day yesterday, although it didn't perform well, we opened below it. We had a late spike to the downside. I'm looking for it to continue to push lower before I start looking for opportunities for longs.
All right. Yeah, we'll
get a delta check as well, because it's a process.
Yes. Yep. Congruent. Negative 2,300 in the S&Ps.
Okay.
All right. I know today's a different day than yesterday. What cost our ass yesterday was trying to get long in the face of that break a couple times. Just got stopped out. Just plowed right through our levels. But John, what was that making point? What was that target you're looking for? A further downside move, a little deeper in the S&Ps?
It's basically the overnight low. 50.38.
Okay.
Is that naked point of control. I've got it right here on this chart, right here, 50.38. Look at our overnight low.
Okay.
So what I'd like to see is for the market to take out that overnight low, reject it, and come back in. That gives us our risk. And then we may see that a move back to the upside. But I'm being stingy for longs because of the nuances with the late spike, the lack of the gap close, opening below the late spike. You know, all those nuances are saying this market is trying to attempting to accept lower pricing. I'd say it's doing a pretty good job. There's been no gap close.
Yeah, so I'm with John on this one. I have some levels further down. Closer to 50.26.
Okay.
Yeah, I don't really see anything here for a long. In fact, we're rejecting a supply right now.
All right. Well, maybe we should stop looking at longs then.
I was just going to say, if we're targeting those areas below, I would say let's put a short on and ride them down there.
Well, we're up against 50-51s right now. 50-52 is catching a pop here in the S&Ps.
We're at VWAP, but it's the absolute center of the range and at the point of control for today so far.
Yep.
Okay.
Some people like that halfway back level. So,
all right, VWAP. So possible short here. We could paper trade this one just to see if our thesis or hypothesis plays out, but.
Yeah, I'm not against scaling some offers up above, just above VWAP with a stop at new highs.
Oh, JD, I wish I could scale some offers, man. I really.
What's the issue with scaling into a position? We got to be all out on the house account.
Yeah, well, all in, scale out, I think is kind of what the idea. Like, understand it's all scale in or all in, scale out. We can, but then what if we never get into that full 15 lot? You know, damn, the 52s.
We're just minimizing risk, really, in a super choppy market, slow choppy market.
It's really jumpy right now, isn't it?
Yeah. Wow, right back up to 52s. Wow. S&Ps just trade down to 50, right back up to 52s very quickly. Very little liquidity. Seen all 1s and 2s and 3 lots trading here. Time and sales.
Yeah, I see what people are looking at with that
54
at 46 level. I mean, this was the low. I mean, it's congestion. Buyers did come in from that level. I do appreciate that. At 46 level. But that's kind of history now. I mean, I don't know if I'd want to take it if it went back down there.
No, we're looking for a deeper pullback there, which I get. Jenny does bring up a good point. If we were going to target that, why don't we just ride it to the way down, So we got 52s here. We are trading. We'll just wait. We can wait.
Yeah, I'm not seeing those target levels as areas to buy either. They're just liquidity levels that the market will be targeting. Easily melt right through them.
Right. Okay. Well, maybe we got to switch our buys because that's what got us. That's what got our ass yesterday. Just get along in the face of that sell-off.
Yeah, we were stuck on stupid trying to catch a bid in that market yesterday. It worked early on, but yeah.
Stuck on stupid. I like that. We were stuck on stupid. Nasty price action on FOMC day. Who would have thunk? Seriously, Pip
Right.
Schroeder.
I'm stuck on that a lot.
Stuck on stupid? Yeah.
Yes.
We're stuck on stupid. Hey, SOS. D, what do we got going on in gold? Gold was earlier this not
gold.
Not April anymore, but earlier in April, that was the
higher.
start of the show. Yes, it was the start of the show. The volatility is outrageous, absolutely amazing. How are we looking in gold now?
Yeah, it seems to be going into a sustained auction higher. We had a test of the initial balance low, push above the value area. So technically, this could be rejecting the value area. So I might do a little combine trade here, actually. Just the one guy.
Mm-hmm. All right, make sure you keep us posted so we can post it to the top there.
Yep.
JD, it was a nice on the 30-minute chart last night in gold. It was a nice rounding reversal.
Hang on, I'm pulling it up right now. Mix on a call.
Rounding reversal. What's a rounding reversal?
Yeah. Just a rounded bottom pattern. We were talking about them a little bit in the equities. Was that last week?
Yep.
There were quite a few reversal patterns up top in the S&P and the NASDAQ. The rounded top was one of them. They all played out pretty nicely. Profit targets hit real fast. Haven't seen much follow through since then. Just been really choppy, really. But yeah, that is a nice pattern on the 30-minute chart. I have it up now. Let me draw it in.
We're selling off a bit in here, the NASDAQ.
Right, I'm trying along from 23.17.5 in gold.
Nice.
Okay.
Nice. That's pretty much value high yesterday.
Yeah, it's a bit higher, but it already bounced from value high because it tested it and then it went higher. So
we're back down to that 46 level in the S&Ps, guys.
Mm-hmm. Yes, we are. It's all right. We're chopping it. It's a pretty tight range right now. S&Ps. We are, John. We were targeting 403, 409 in the NASDAQ to the downside was the level you gave on the open here. What was that? What was the level?
Yeah, 409.
409. Yeah. Okay.
There's also I mean, that's the TPO point of control from the 25th. There's also a volume point of control just lower than that at 371. That 371 level looks more complete for repair than the 09 one. We'll see what happens. Yeah, that 46 level is holding so far. We're getting negative 2,500 delta in the S&Ps, negative 300 in the NASDAQ. Nothing really that deep in the NASDAQ, but NASDAQ looks like it's about to extend the range to the downside here.
That's what it looks like. Yes, it does.
Yep.
Crude oil looks like it's rejecting value. It's reversing at value low for a failed auction.
Got some liquidity here in the S&Ps, 50.45. We got a 400 lot sitting on that bid. 45 bid, 400 times.
Hoag, I see a naked volume point of control in the NASDAQ at 17,372. Do you got one right around there also?
372. Yes, 372. Yeah, that's it.
Okay.
What did I say? 71, 72. Everything's
did you say that? Okay. Yeah.
Yeah. Yeah, that's the one I'd prefer to reach if I were going to be looking for any kind of a long.
It's a good target area. I'm not averse to selling a pullback in the NASDAQ to target that 72 level, 372.
The nuances are to the short side.
Okay.
They sure are. Coming up on the overnight lows.
Yep.
At 412 in the NASDAQ. Overnight low in the ES is at 37.75.
Catching a bit here. Man, it's difficult. This is it's hard to stay in anything right now.
Yeah, this is a quick in, quick out kind of.
Yeah, S&Ps, my goodness.
Right
just
now.
trading 46 is back up to 52 in the blink of an eye. Wow.
Yeah, that's some pretty good demand down there, it looks like.
D, how's the gold trade going?
Yeah, pretty well for now.
Okay.
Yeah, it's looking good.
Is it? Do not have a chart up. Talk to us. I do not have a chart up.
Yeah, so if you look on my screen, so it's about 30 ticks up now.
Okay.
It's pushing higher. So
okay.
My target zone is somewhere roughly between 23, 26 and 28. If it starts to slow down before then, obviously I'll have to manage it a bit more actively. But for now, there's really not much to do.
Looks good.
How are we feeling about a short just above VWAP in the ES?
I like that. Just above? I like that. Just above would be what, 52? 52?
52 half.
Yeah, it's point of control, but it did kind of hold there earlier.
It rejected immediately last time up there.
Yeah.
It rejected hard.
Kind of like now. My question is, where is the risk?
This is what I'm looking at. I can't really... Yeah, I don't really see how we can limit risk here, because that pop from the from A period, from the open, it's pretty far.
I would, if I was to put a short on
you have
there,
the Asia London high above it as well.
I think
where would you put your stop, Jay?
Right above regular trading hours high. So right around the 63 level probably would be the best point of invalidation for a short just above VWAP right here. Pretty tight trade, 10 points of risk.
Let me know.
Mm.
Coming up to it right here. Dee and
That's
John
one thing we
don't
got to
love
put
it.
on that. Sorry, Dre, that's one thing we got to put on that decision tree is, managing risk.
Exit strategy. Yeah.
Yeah.
Yep.
Yeah, I mean, we can
Yeah.
refine it. I just did it, I just did it, just to have something to start with, and we can just keep
Mhm.
adding little
That's-
things and
Yeah.
refining the process
100%.
as we get along.
And it's
Great start.
perfect.
Yes, it
Great
is.
start.
Great start.
Yeah. Right, it's back at my entry now. Don't like that.
I hate when that happens.
It happens a lot, though. So
Sure does. It's just
usually,
annoying.
what I do on the first test, I try not to grasshopper out of it because it is a normal thing to kind of do a bit of weaving around before it continues. So I'm going to give it some more time here.
All right. Well, trading 50. We got nothing happening in these equities right now. And that's okay.
Nothing. Super flat.
Super quiet. Super quiet. We are going to learn how to be patient today. John, you once brought this up. It was interesting. Do we ever come to a point in life where we just say, I am patient? I feel like we're always just working on patience, especially in this job, this industry, this space. The speed of the markets, with information constantly hitting us left and right, price action, you can always find a market that's moving. Patience is a practice, right?
Yes, it is.
Like something I'm struggling with my entire life.
It's kind of like humility. Every time I say that I'm patient, I get impatient.
Yeah.
If anytime you say you're humble, you've lost your humility.
Hear that, JD?
No, I didn't hear anything.
I'm just messing with you. All right. Well, we aren't seeing too much. D, keep us posted on that gold trade.
Yeah.
Jack, I would
Not
say
sure
this
how long I'm going to keep it because I am looking for it to maybe test down to 23.14 and then go up, but I don't want to let it go any lower than that. So we'll see. We're up at 23.17 now, so about 5 ticks below my entry. We really need this to push if we're going to have that sustained auction.
I think it's safe to say this is a lull in the markets. The first 50 minutes of the trade today have been a lull, if you will. Jack, I think you got
What's up, Andre?
Cooking up for it. You got something cooking up for us, don't you, Jack?
Hey. So.
Uh-oh.
Drank 40 ounces of Coke Zero. Went wild.
Nobody is safe today.
Living on the edge.
Yep. That's the edge when you're 37, living in the suburbs. So.
Hey, man, wait till you're 43.
I hope I make it. News. Y'all know what day it is. Little bit of a roundup here. We're all ready for a hawkish Fed hold. This is not news. Just how hawkish does Jerome get?
Oh,
thankfully, we have a bit of an ace in our sleeve here, Andre, because we did get a voicemail in the box.
Oh no, you don't say. You don't say.
So it's from a friend of the show, and I have to warn you in advance. He seems to be a little bit testy.
Oh,
but
no.
Let's see what's up.
Gosh.
How's it hanging, Topstep TV? It's your boy, the chairman of Stealing Yo Girl, back to give a little preview of this afternoon. You might have noticed that the inflation numbers lately have been stickier than Andre's mom. Get your mind out of the gutter, chat. The woman just loves taffy. And Daddy Powell. But I'm here today to personally express my gratitude to Topstep for doing its part to reduce the money supply and tame inflation by racking up those losers in the house account. Every one of those red days is a step in the right direction for America. You boners have my eternal gratitude. Now, if you'll excuse me, I have to go to a suit fitting for the Met Gala. I can't tell you who my date is yet, but it's Zendaya. Trade slow, muchachos, because I'm coming for that ass at 1:30. Vaya con Dios. Powell out.
Wow. Mom, you caught a stray there, Mom. My goodness. Powell is feisty today, Jack. I didn't know.
He is.
Pretty good. Pretty good.
I don't know where he has his number.
Pissed in his Cheerios. My God, he is woke up on the wrong side of the bed today.
Power corrupts, man.
Power does corrupt. He's got the
Absolute
Met
power.
Gala coming up on Monday. I mean, he's got very, very busy, man. Very busy. Wow, Jack. I'm glad we were able to contact. We left a voicemail. Actually, we didn't get in touch with him. We don't pick up his phone calls around here. We get back to him on our time. And yeah, that was great, Jack. Okay.
Does your mom watch the show every day still?
Oh, she watches it probably 4 out of 5 days a week. Yeah, for sure. I don't know if she caught that one. Oh yeah, definitely. Blame that one on Powell. That wasn't me, Mom. That was Fed Chair Powell.
Yes. D, you hanging there?
Yeah.
Yeah. Yeah, still there. Just observing.
Oh yes,
It's still hanging around my entry. It's done nothing. So yeah.
Yeah.
Yeah. Nothing to report anywhere. Nothing's moving.
That's okay. That's kind of to be expected. I think we're not there yet. We still got 90 minutes left here on fast markets, but if we are trading house account and power hour, we got a long ways till that happens. We'll see what happens with the FOMC and the Powell. But
so that means you'll be trading through the press conference then.
Oh, lovely, absolutely, D. But it's different when
it's going to be fun.
Yeah, it could be profitable. The thing is, levels.
It could be, yeah, cool.
You could throw levels out. All right, is it safe to say? Can you throw levels out the window when Jerome Powell is speaking, or levels still have significance?
Yeah.
No.
Yeah, I just find that algorithms are very tough to front run anything because they are hanging on his every word.
There are no levels.
Right, I'm out. So that was I took it off down 200 on that trade, so that's 729 for the day.
You get the next one.
It's fine. Yeah, no, I think I'm not going to chase today. If So Eddie's Bong here is talking stuff that I don't like. See, my trading is based on about 8-9 years of hardcore research. And there are certain practices that we've decided are not good for the returns because of all the research that we've done and like 70,000 backtests that we've done over the years. So I will disagree respectfully with what he was saying there. So yeah, there's a way to manage a trade actively without the need to move your stops because there are invalidation points. And, if you don't have all of that, then by all means, trade your stops. But to me, what trading stops does is never to limit downside, but always to limit upside. And I don't like that. Because if you don't have the high risk reward, it's all a bit sketchy. Because as soon as your accuracy slips below 56% on a 1-to-1 or less, you're bleeding money or you're not making anything. So from that point of view, just pure numbers, certain aspects of that way of trading things just don't work over long periods of time. They might work in the short run. They might work for 3 months, 6 months, even a year, but they will fail to produce results over long sample sizes. Just wanted to put that out there. I prefer to use my own maximum adverse excursion number and then to cut it off when it dips there because my own numbers say when I experience between 18 to 22 ticks of drawdown, that can turn into another winner. I'm not some kind of super accurate trader, and you don't need to be. That's actually a misconception. So as long as I have my invalidation area and my MAE number plus minus about 2-3 ticks, that is where I will bail. That is where I will deem the trade to not be valid or to be maybe mistimed. And yes, you can absolutely re-enter, and sometimes I do. Sometimes I will try 2-3 times to get in on the same trade, taking little losses in on the way. And then I get my big trade of 2R, 3R, 4R multiples. But if I start messing around with that just because somebody in the chat says so, that's not using my research. That's just going along with the crowd. So whatever works for you, mate, that's great. But I know what works for me. So we agree to disagree.
The endless
He's trying to
debate of the
Eddie's
the
Vaughn's
trailing
trying to
stock.
walk
Yeah,
back a
listen.
statement.
Yeah.
He's trying to walk it back right now. Too late.
Oh,
You
no.
opened a can of worms, bud.
You're making us look bad.
Oh. There's never any debate about the trailing stop, whether to use it or not to use it. When you don't use it, you should have used it. When you do use it, you shouldn't have used it.
Mm-hmm.
Yeah.
Although I will say that break-even button was really slick yesterday. We did use the break-even button yesterday in the house account trade. It will save us about $3,000. We did miss out on about $1,500 upside profit using the trailing stop. If we used John's trailing stop yesterday, we would have probably locked in about $1,000 more. But the break-even button, we did click that sucker, and we were able to lock in about $3,500 with that break-even button. So upsides and downsides to it. But here we go. We are through VWAP. Us through VWAP here in the S&Ps there. JD trading 50.53.
See how high
NASDAQ
this
on the move
goes.
to the upside. NASDAQ on the
We
move
also
to the
got
upside as well.
2 minutes here. EIA crude oil inventories, 2 minutes.
Thank you, Eddie. Eddie, always making
Thanks,
sure we're
Eddie.
on time.
NASDAQ's ripping through VWAP right now.
Yeah, we are.
So
Yeah, we are. Moving to the upside here. NASDAQ 71% long. ES 56% long. Keeps moving on me. Got keep locked in on those eyes there. We just see if we can get out of this range one way or another. Maybe fade the extremes. Something like that. There you go, Nick T. Yep. Just like the break-even stop. You're an idiot when it hits, and then it runs in your trade's favor, and a genius when it tags it and then runs against. Yep. Never-ending debate. Wow, we could have just sold those 56s right there in the... Boy, it is thin, thin, thin. It is whippy.
I just drew a Dolby box in the ES.
Yeah.
We probably could fade those extremes. Cheap trades on either side.
Well, so what's the upside and downside of that box?
Got a high at 56 the orders and a low at 44.5.
I like that you say the orders too. That's old school right there. The orders.
Habits.
Yes, it is. Yes, it is. 56 to the upside, 44 downside.
I really can't get behind the new trader lingo. People call contracts and lots cons.
0.75.
Yeah, I can't get into that one either.
Yes, it's 0.75, JD, not the orders. It's 0.75. All right, so we got 56 to the upside, 44 downside. 56, but again, all these trades are like scalps.
Right.
None of these trades are runners.
It's going to be big here in the crude. Real quick here.
Yes.
7.265 million. They were looking at negative 2.5, but coming out at 7.265 million. And we do see the build, and we do see crude heading south. Back to you, Andre.
Yeah, it moved us. How about that? I know
Crude's
D
coming
loves
back to your,
EIA. D's favorite
Crude's coming
numbers
back to your
are EIA.
neckline, Hoag.
Yeah. Hoag stepped away for 1 second. He'll be back with us here any minute. But what do we got? Yes, D loves the storm of the teacup days known as EIA inventories.
Yeah. I love them. The bane of my
Love the
existence.
EIA. Absolutely loves them. Adores them. But all right, JD. Well, we got 56 to the upside here, 44 to the downside. We'll see if those 56s come back into play. We're chopping right around VWAP right now. Slope of VWAP has sloped downwards now. Slow start to be expected. Fireworks coming here this afternoon. So we got most of the numbers out of the way for this morning. We got the PMIs, the JOLTS, EIA construction spending. All right, everything out of the way now. All eyes on FOMC and Powell starting at 1 p.m. Central, 2 p.m. Eastern. What time will it be over there in London, D? 6?
It's going to be 7 for the release, and then 7:30 for the press conference.
Very good.
And he usually yaps for about At least half an hour, sometimes an hour.
First half hour is rather uneventful. The prepared marks can be See how hawkish he is. Then when the press conference comes out, it'll be how hawkish can he be. Take a quick look and see what the 10-year yield is right now, 4.65%. So we've seen a little bit higher than that. Should be interesting to see what the Fed, if they like it there, if they want to talk those yields up a little bit more. But inflation's been sticky. There's no way around it. Inflation's been sticky. We are now pricing just one rate cut at the end of December, possibly. It's a big possibility. Don't forget, coming into 2024, we had 6 rate cuts planned, priced in for 2024. We are now down to 1, and we will see what they say this afternoon. All right, JD,
do you guys want to check something out? And for everybody that has questions about the initial balance and its importance, I just look back at the last 10 trading days in the S&Ps. 7 out of those 10 trading days left one extreme of the initial balance at the extreme of the day.
Yes, they did. And what happened?
8 out of the last 10 in the NASDAQ left one extreme of the initial balance at the extreme of the day.
Right.
You want to see?
Yeah. I know what you're talking about. You're absolutely right.
All right. I'm going to smush this so it all fits. Okay. Today, we have a normal trading day. Neither side of the initial balance has been extended. So there's 1 so far, 2, 3, 4, 5, 6, 7, 7 out of 8, 8 out of 9, 8 out of 10. That's 80% of the time. One extreme of the initial balance is one extreme of the day. What about the NASDAQ? La la. Just making a little music while I do this here. Hang on a second.
Transition. A little elevator music to transition. I like it.
So one extreme is so far. We have a normal trading day, which is rare. Look how narrow the rate that initial balance is in the NASDAQ. We are going to blast out of that at some point. So there's 1, 2, 3, 4, 5, 6, 7, 7 out of 8, 8 out of 10, 8 out of 10. And we can go back and look, and we're going to be right around 70% of the time. One extreme of the initial balance is the extreme of the day. Now, somebody was telling me a while back that they had a trader that was raking in money by using the initial balance like the opening range trade. So let's say, for instance, yesterday, if you use the initial balance, the minute it broke out below the initial balance here at 17,822, and your stop was above the initial balance, so we're looking at 960. Anybody want to risk 140, 160 ticks on a trade in the NASDAQ? I know I don't, but on this particular day, look at the potential profit target. Even on a day like this, if you took the long at the high of the opening, of the high of the initial balance, that's your risk, but still you had the opportunity to profit on that day. Not much here, right? I mean, it extended at the end of the day. But here's another one. I mean, this is, you take the long above the initial balance. Your risk is about 2 to 1 if you get out at the high here. Another one. Take the short at below the initial balance. If it never takes out the high of the initial balance, you're rotating lower. Another maybe 1 to 1, maybe 1.2 to 1 possible if you get out at the dead low. I think it's crazy, but if you were to do this and you had the pockets to take these kinds of risks, if we're looking at 7 or 8 out of 10 times when one extreme of the initial balance is one extreme, then you're looking at 70%, 80% of the time you're going to profit on a trade like that. And when you really catch a good one, you're looking at 1-to-1, 2-to-1 reward over risk. I mean, this is something that I wouldn't suggest unless you're like Uncle Julius and you never take a loss.
I love that guy.
Right?
Love that guy.
This is where micros would be useful.
Yeah, there you go. There you go. Micros. I just wanted to point that out because a lot of people are like, what's the initial balance? What the hell good is it? What does it mean? What is it? Sometimes you catch something that is, right that much. And I can go back. I don't want to do it right now because we're on screen, but I'll go back and I will look at the S&P, the NASDAQ, crude oil, and gold. And I will tell you with 30 instances, which is much more statistically significant. I always have a hard time saying that. But maybe tomorrow I'll tell you what the percentages are where one extreme of the initial balance remains either the high or the low of the day.
That would be interesting to test as a start, because I used to do something similar when I was still doing like swing trading, and then I was using parts of profile to position myself with the initial balance and the help of the value area, open sentiment, and all of that. And then I would run trades for like hours on end. We're talking like 6-7 hours being in a trade. But yeah, obviously I moved away from that because I got better at looking at trading locations and managing risk. But if you're looking to test a hypothesis, well, that would be one way to do it. How to maybe increase your profit potential. And then eventually, as you start to refine that, you can actually find something like reducing risk, maybe finding a better location inside the initial balance, and then running that same trade for the same profit target. Like there's a million ways that you can do that. And, my head is just kind of exploding with possibilities now.
Oh, gosh. Well, I do want to give a shout out to our guy, Alec Choprik. I hope I'm pronouncing that last name probably. Choprik. I got the Series 3 book from MP. Thank you, team. Very cool. Very, very cool.
Oh, awesome.
Time to get busy. Send us pictures of you with receiving the book. We'd love to see those. We'll post them here on TopstepTV. But very cool. Let's keep the tradition going. Your turn. You're up, Alec. You're up, Alec.
You can have mine, too.
Your turn now. All right, hey JD, we did just touch those 56 that up end of the range here in the S&Ps in that box that you like the Dolby box, if you will.
Just kissed it, came right back.
Yeah, it does seem to be like a range bound day. We're not getting any hard levels right now. We're stuck in the middle right now. We are stuck in the middle. And
I was just looking at crude oil. Oh
boy.
Oh, crude oil is breaking below the neckline of your head and shoulders pattern right now.
Still looking at that 80-30 level for that breakout.
Yep. What do you guys think about putting a crude oil trade on for the house account? Is that legal?
I don't think we have the data for it.
Don't.
I also think that the level of interest there was the value low or the initial balance high. We're a little bit far from that.
I don't think I can trade it. We can trade it. Oy.
Oh, really?
I don't know. I don't know. I never tested oil. I don't have any of the charts up or nothing. We can adapt. We can adapt, but we're gonna have to reformat the screen.
It was one.
Maybe. Maybe.
One
Let JD cook. Let JD cook, Ursa says. I agree. Let's let JD cook. Get in there. Let's wait. We'll wait. Dolby. Pulled pork.
Because the problem with crude oil, it's not like the equities. It doesn't run infinitely in a single direction. So whenever I see a potential for a neutral day where we had a failed auction and then as a result of a release, like, crude oil inventories, we go all the way down in one fell swoop. That's not very good for continuation trades in this particular product, because what can happen if you were to short somewhere here, you'd be in danger of a neutral day type, and then crude oil just pings back to the middle and then settles. So it's not very good for momentum trades that you're looking to run as continuation. So if we were going to attempt that, we really should have been looking at this around that value low that me and John were using as an orientation point. We missed it. We're like over 100 ticks away from that now.
Oh, we missed it by a long way.
Failed auction,
We missed it by a
train has been gone.
Ay. All right, I guess back to the equities. We sold those 56. Yeah. But here's the thing with these, our profit target. We're gonna have to have tight profit targets, tight stops. I'm not sure if that's the spirit of the house account. I mean, we're gonna try to take 5 ticks or 5 points out of a S&P move. Is that what we're looking at here? I don't see it. I don't see it, and I don't see this to be necessarily a scalping account. Could be perhaps wrong, or convinced otherwise, for that matter. But I mean, it's like 5 point moves. Unfortunately, that's just what the market's giving us at the moment.
John Jones, where's my ducky? Where's my ducky?
Where's that?
You'll know what I'm talking about. I saw my brother Rick is here.
Hey,
Randolph.
what's up,
and Marie's back in the market too. She's is Anne Marie in a personal? She in a bit of a personal fast market this morning.
Yeah,
carving it up, man.
She's making all her money. She doesn't have to trade FOMC. Good on her. JD, we got hot streaks. How are we looking over there? We're kind of a little past due there.
MP's in the chat.
He is?
Hey.
Yeah.
Wow. Where are you on this planet, Michael? Where are you on this planet right now?
Yeah.
MP, thoughts on turning with market? MP, thoughts on this market action? I don't know if you're looking at the charts. Super tight range. House account trades probably going to have to be looking at 4 or 5 handles in the S&Ps. Profit target. NASDAQ, maybe you can squeeze 20 ticks, 20 points out of a trade. It's very tight. Very, very tight right now. But MP, let us know where you are. I agree, Dre. I agree. Very tight. So what?
And I'd only want to play the extremes of this range too. I don't see the point in diddling in the middle here.
Cool. We won't diddle in the middle. Well, okay. Well, what are extremes here? Extremes in the S&Ps. I'm seeing what
56 to 44. 56 to 44 is on the range.
Yeah. Okay. Cool. 66, 44. Cool.
56. Let's see.
56.
Call it 56. Yeah. High of the range has been 56, 57.
Okay.
Yeah. IB high 50, 62 quarter. IB low 50, 44 half.
All right. 44s to 56s. All right. We're up to 54s here. So I got John and JD like this. What, shorting of 56s ish? No chance.
Just playing the range. Yeah.
All right. D, you like that idea with these S&Ps?
I don't know really whether I have any good setups there, so I'm gonna sit this one out. So
okay, that works too.
Neutral, like Switzerland.
We know what our risk is above initial balance high.
Of what? What's that price?
About it.
Here's crude 80-30 right now.
Mm-hmm.
High the initial balance. Hoag just said 62 half or 62 quarter.
Okay.
So 63 would be our stop. Breakout above initial balance high, like Hoag was just saying, could change things up a little bit, but it's just rangy right now. So the play is the range, in my opinion.
Yep.
All right, let's see if we get those 56s again.
What are you thinking, Hoag?
I'm watching crude.
I was watching crude for a while too.
Low 80-30. Anytime we're fading an extreme in the in the S&P, NASDAQ, whatever it is, it's cheap. So if you don't take it, you don't win. Like KV said, take the trade, If it wins, you're happy. If you lose, you learn something.
Cool. All right. Well, I'm looking at selling 56s here. We got another push. 56s with a stop of what? 62. We said
63 above
63
and new
So
highs.
you're looking at value high. That's going to expand your risk.
What are you looking at?
Although
Can
it
you
looks
repeat that?
good now. Well, if value high is 56.75, the range high is 62.25. So you're risking 6 points on that if you're going to hold it until we extend the range above the initial balance.
Right.
Value low 48.75. Low of the day 44.5. So you're looking at about 5 points of risk if you're going to just put your stop outside the initial balance, which there's going to be stops there.
Yeah. I'm thinking. I can't. I don't think. Actually, I take that back. I don't think. I just execute. So, you guys talk to me.
We're seeing some pretty negative delta in the S&Ps right now.
Oh yeah,
we're at negative 5,000, and we're at the higher value.
Let's remind everyone what that actually means for price action. What are the implications of negative delta?
Right. All right. So that's a great idea, Dee. So what we're looking at here is negative delta is negative 5,000. So in this tiny little range we've been in, 5,000 more contracts have traded on the bid using market orders to sell. Logic would say if the more aggressive traders are using market orders to sell, price by right should be going lower, but it's not. Is there a longer time frame buyer in this market that is going to create a community of shorter time frame, weaker hands traders to short? And if that's the case, then then those shorts at some point are going to cover. That may bring price higher. We saw that divergence yesterday in the S&Ps. There was a divergence in the opposite direction. So we had a lot of buyers in the market that were using market orders to buy, but price continued to move lower. And that big move to the downside at the end of the day yesterday was aided, I think, by all those shorter time frame longs that were buying all day long. They decide they're going to get out. Bam, the market tanks. So it's really early for a divergence to really play out that well, but it can be kind of a warning sign to say, if we're looking for shorts, make sure they're cheap.
All right, I got a trade idea from our coach Jay. Selling 58, stop of 63. 58 for 63.
Yeah, that like pretty much lines up with what we've been talking about.
Yep. All right, so I like that. We're going to pull the trigger on that one if we get up there. I mean, we're getting a little too greedy with the entry. It's been a thing of ours.
It happens.
Let's see.
Crude is now below that 80-30 level. Let's see if we get some participation and some momentum down here.
That was a good short below the neckline of your Head and Shoulders there, Hoag.
Well, time will tell. The really good short was the failed auction at the high.
That's what I'm thinking. Yeah.
Because now we've got trade on both sides of the initial balance, and as Dee was saying, that's not necessarily going to be conducive for continuation.
Stop at 63. Stop 63. Selling 58s, but we got negative delta. If you look hard enough, you can find a reason or a reason not to get in any trade. It's what you learned.
100%.
If you've been in this business long enough. So I think
nice, John Jones. John Jones took the failed auction at the high in crude.
Nice.
Jay Cook says, "Wouldn't be surprised if we test ES 62."
Great job.
That was a beautiful trade, John Jones.
Mm-hmm.
We've extended below the initial balance in crude oil, and it seems like we're having a little bit of trouble getting any continuation to the downside here. We got, what about 8 minutes before we find out if we leave any single TPOs here? Wow, look at that. The end trader holding a micro crude from 81.40. Very nice job.
Okay.
Nice job, John. Nice job.
That's,
The end trader.
81.40. Yeah, it's great.
Great stuff.
Right at value low.
Go up to 58s maybe one more time. We might test these 62s.
Are you working an offer, Andre?
I am not. I got us last time. It just plows
You know
right
me,
through
I'm a stickler for good trade location. And especially if we're sensing a delta divergence, I really want good trade location if I'm going to short.
What's good trade location? What's a good price?
I go 60, 50, 60.
All right. Let it come to us. We're going to let the market come to us. This FOMC Wednesday.
But it's so range bound. I mean, that just makes it really cheap. You think about it. I mean, here's the profile for the S&Ps. We get short here at let's call it 58. So we're risking 6-8 points on that. What's our potential profit target if we don't extend the range below the initial balance?
Well, that's kind of where this whole crux of this thing is. That was a profit target.
Other side of initial balance.
It's so tight. I mean,
so if we're gonna do that, I mean, if we want to demand like 2 to 1 to the other extreme of the initial balance, or even value low 50, 80, 48, 75. We need good trade location to get that kind of reward over risk. It's, with this $17 range, is the juice worth the squeeze is the question. If I'm short here, I don't see that the juice is worth the squeeze. It's a 1-to-1 opportunity. But if I can get better trade location, risk less for a bigger profit, then I'm in. Make sense?
Perfect sense, yeah.
Yeah. Sounds like a no trade. Sounds like a hands off once we get up to 60s.
Oh, it's just FOMC, it's like, what do you
sitting
do?
here looking at taking oil trades. I mean, that's what's coming. We're sitting here looking at taking oil trades now. I don't know shit about oil. We don't have levels in oil.
But you don't need to, Andre.
We need levels. We're going to need a confluence of levels. I'll tell you that.
This is a chart pattern.
Yeah, I don't think there's enough crude oil traders for that.
We're going to need. I get it.
Yeah.
There's 3 of us.
That's true. That's true.
Yeah.
But even if you don't know crude, if you know technical
pattern, yeah.
That's all we're trading. This could be tulips, and we would be short this because we're looking for continuation. If it comes back above that level, maybe we take a small loss.
Can we trade tulips?
They used to, Deeyana. I just found this out. They used to trade tulips.
Really?
I know. That's what I said. That's what I said. I had no idea.
It was in Denmark, and tulips were like considered a sign of wealth, and they became so popular. Like a tulip bulb was worth like an entire year's pay. And people, it was just this big bubble, and then all of a sudden it just burst.
One of our very own Devin, who did the TopQuiz with us Monday, was this weekend, I believe. No, actually yesterday. She put a very nice picture of a Chicago Tulip Fest.
Yeah.
See if I could share that picture. Gosh, all these tulips, my goodness.
I was over on Michigan Avenue this weekend, and the tulips were everywhere, looking fantastic. City was really buzzing this weekend. Looked really good. Eddie, I hear you took some heat for those top quiz questions. What happened there, Eddie? What, you really got it.
You know what? Today, if you're smarter than a 5th grader level, so I've dimmed it down a bit. I threw some water on it. It was just too hot for a lot of people. And I apologize for making so many people
say it.
So many
Say
people stupid. Okay, stupid. Hey, bada bing, bada bang.
Stuck on
So
stupid.
yes, I've dimmed it down a
Stuck
bit.
on stupid.
You should be getting 5 out of 4 questions correct this time around.
Eddie, shots fired, everybody. Let's make sure we get that perfect score quiz.
Theme of the week: stuck on stupid.
Stuck on stupid. He wants to keep everyone on his toes. Tim Mitchell says, "Yeah, I saw. He did a great job of doing that yesterday." We are starting to see some higher lows here. Look at the 5 minute on the S&Ps. I'm totally cool waiting this out.
Right, so
totally cool.
I've actually got a setup in gasoline futures for a long, similar to what we've got in crude oil. It's just it's got a bigger range. So what I'm looking at is this average session range low that is also around the average daily range low. We have a neutral day. It was a very similar situation. Rejection of value, jump down after the inventories. But now, because of the neutral day, and also because of crude oil approaching 80, which is a psychological level that John was talking about earlier, I'm actually thinking a potential long here.
Okay, well, you were saying that we did get short in the house account 15 times from 59 quarter. John, I don't know if we're going to get those 60s, so we are short now. Stop at 63. Stop at 63, but we're short. If you guys don't like it, I can pull it right now, but it's kind of what we talked about. We got Jay Cook in here with him, JD Hoag. I think this is kind of what we were talking about, right? Sold 59 quarters. Didn't look like we were going to get up to the 60s. Didn't want to miss the trade. Same, we're trading zones, right? So that's kind of what the thought was there.
Yep.
Yeah, we got tight risk. I don't
Stop
mind
at 63. Stop at 63.
So, short 15.
Short 15 from 59 quarters. Sorry about that, Jack. Hit the music. Hit the music.
In ES? Okay.
In ES, profit target of 52s. Profit target 52.
Mm.
Give us house. Give us house. All right. How do we want to do this here? Peel off 5 here? Talk to me, guys. We're two grand in the money right now.
Range.
What's that?
We're just about back inside that 5 minute range we were looking at. Yeah, peel 5 off at 50, 56.
I got 57. I can pull it though. Hold.
Very decisive, Andre. Nice work.
Had to, right?
Excellent.
We're talking 60s. We're talking, what do we talked 56s, we talked 58s, so we got up to the 60s. We weren't going to get there, but we didn't get there this time. And yeah, we'll see if we can work these. We're 5. What do you say, JD? What do you like? Talk to me for taking profit here, guys. What are we thinking about peeling stuff off?
I originally said
Point
peel
control,
5 off.
53 quarter.
Point control, 53 quarter. No, let's just work 53 quarters then.
It's about 2 to 1.
Yeah, it is.
About half back.
You say 52 quarter is yeah. You got VWAP at 52 in the orders.
Thank you. We're gonna go right there. 52 in the orders. Thank you, JD. That's 2 to 1 risk. About 2 to 1. We gotta let this play out. We are maximizing
5,700 delta.
I don't like that.
Those are minis, Moose.
Okay, we are selling off.
Point of control back down.
Are selling off here. 2,800 in unrealized. JD wanted to peel 5 off here. What do you think about that?
We have Richard Harris saying he was mentioning 58.5 earlier.
Got 59 quarters. Break even button. They're floating the idea of the break even button right now.
I'd rather peel 5, but up to you guys.
Oh, Jack, don't you do that and run away. Get back here, Jack.
He says take 5 off.
Sniper.
If James says take 5 off, I say we take 5 off.
Jack, get back here. Where are you going?
Peel 5. Executive.
Peel 5. Peel 5. Boom. Peel 5 right there. Okay. We'll peel 5. We're on short 10. Short 10 from 59 quarter.
Andre says, no break even, Andre.
No break even. Gotcha. No
Isaac's
break.
not a fan of that.
All right, so we've got $2,000 risk here. 63 quarter, the reward of 32.50. We'll take it. I think that's good.
Can you dig it? Can you dig it? Can you dig it?
A little Warriors reference. Love it.
I like it. Jack trying to say, but it's you can do whatever you want and then leave. Jack, you can't be doing that. Don't you be hanging us out to dry here. Don't you stick with this? I mean, watch this go. Delta minus 6,100. Do we get hose on the Delta play? That dirty Delta that I love so much.
Yes.
Do we get hose on the Delta? Hasn't mattered yet today.
It's getting deeper, and we're not breaking.
We just did. I mean, we could find any reason. We could find a million reasons.
Oh, that a break?
I don't think anything's a break or a rally today, John. We're literally trying to scalp 5 points here. We're literally trying to scalp 5 points. I don't call any of this a move. I think we're trying to squeeze the trade at the extremes of the range. That's exactly what we're doing. So that's kind of what the trade idea was.
Yeah, top of the range to the middle. Done.
Correct. That's exactly what we're trying to do here.
Andre, might I say you're doing a fine job with execution?
I'm trying.
Well done, Dre. Well done.
Hey, no, I don't need the pass. Let's just make some money. That's all we need. Crude dumping. I'm seeing crude is dumping.
I'm just being honest. Just being honest. Not patting you on the back. Just being honest.
Appreciate that. Did it use the break even button? No, we haven't used the break even button. I don't know if it's a break even button kind of day. Market conditions saying, super low volatility. Super. Yeah, let's talk it up. We are starting to see some sellers.
The button of cowardice.
Button of cowardice. Jack's on one today. He's actually just going to throw little hand grenades and just chuck them and then pull the pin and run. I've noticed it's kind of one of those days today, Jack. Look, he's laughing.
I didn't want to tell you to do something. When it said peel 5, I didn't want to say, like, just do it. But, yeah, that's what I wanted to do.
It worked for Nike. Worked for Nike saying just do it. Let's see if we can get here. Jack, we're working 52 in the orders. Working 52 in the orders. By the orders, we mean 0.75. 0.75. 52.75. Right in the middle of the range, like D said. It's on the upper end of this range. The VWAP. The VWAP. All roads. Why would it change? Why would it change?
Do you guys see crude oil?
What's it doing now?
Yeah.
Here's breaking.
79.79.
It's trading. We broke 80?
Yeah.
Wow.
We broke 80.
We broke 80.
We do have some average ranges. But again, it's FOMC day that brings irregular structures that are very difficult to predict usually. We did leave single prints, so this is now an 8% occurrence of
8%
potential further downside. We didn't have this information before, but it's still dangerous because it's right at the bottom of the range.
At the top of the range here.
50-50 in the S&P and the NASDAQ as far as tilt.
Okay. J. Cook, yesterday's ES close, level 55 held. Yeah. Did starting to see.
Volume's really drying up in the ES right now, too.
Yeah, it is. What does that tell us, JD?
Running out of buyers, maybe?
Ooh, I like the sound of that. Any liquidity down beneath? We are seeing some liquidity down beneath here. We got 200 on the 54 in the orders bid, 254 half. Let's see the more liquidity downside, upside. If maybe I'm just hopeful, wishing. I'm not sure.
Negative 6,400 in Delta now, Andre.
Okay. Everyone was waiting for FOMC, says Travis. Yep, I think you're right. There.
Yeah.
I think you are indeed right. So what? This is going to be maybe slower. These trades are going to be much slower playing out. It is the ES. What's NASDAQ doing? NASDAQ doing anything over there?
NASDAQ's positive delta 300. It's just kind of hanging near high of value.
Yeah, it's sitting right above VWAP right now. Just
Cool.
kind of hovering.
Kind of hanging out. Going, look at me. Somebody trade me. Somebody trade me. Wham!
All right, we are right here at trade 56s.
You're seeing a little bit of selling in the NASDAQ right now. Not a lot.
Okay.
Nothing impressive, but
Keep me posted. We do have, we're going full screen on the house account on the ES trade, so everyone can watch. Here at Topstep TV, if you guys like what you're seeing right now, it is FOMC Wednesday. Please click like, please click subscribe. I think we just cracked 84,000 subscribers. My goodness, we are cooking to the upside here on the march to 100,000. Let's get 100,000 by this summer. Then everyone gets hooked up, Oprah style. Yeah, everyone gets something.
Hey, let's get it by tomorrow.
Yeah, I mean, that'd be tight. All right, here's that 50-55 that Jay Cook's talking about.
I'm trying a little short and crude as well.
Okay, wow.
Because it can limit risk.
Coming up to these 52s, trading 50-54 half. See if we're
Negative 7,100 delta now. We got sellers in here. I mean,
keep pushing
they are aggressive.
Going right to VWAP. Where are you trying to get VWAP here?
52.75.
you're working to cover the
72 in the orders.
trade.
Correct. So we talked about going into it. We're going to take the upper end of the range right back to VWAP. So we're going to stick to it.
No shame in taking
there.
the 10% rule.
We got to get there.
Yeah.
Yep.
Three-quarter is exactly half back in the range.
52 3/4. That's what I'm working. That's what we're working.
Ah, Dan Trader. Nice. Best oil trade ever. Great job.
You should have seen the guys that bought oil crude when it was trading negatives. Filled, we're out.
There
Up
you go.
$3,800.
Hey,
Nice.
Right.
Nice.
Good job, everybody. Nice trade. Nice trade.
Great trade location there.
That was all of us. Good stuff. Good level
Way
up
to
there.
hold out for
Very well drawn up play. And it was well executed.
Nice stuff, guys. Good stuff. Boy, squeezing out 38 on FOMC. Slow-ass FOMC Wednesday. Wow. Are we just going to follow through the downside? Of course. Whatever. Here we go. All right, JD, if we got those hot streaks, it's probably the time to do it.
Yeah, we can do
Nice
hot streaks.
Yeah, let's do that. Shout out Jay Cook. All you guys with the view up, the upper end of the range there. Hoag. JD, good job. Good job.
There they are.
Good
Here's
stuff.
the hot streaks. Brian had 24 days. Joshua 22. Richard 20. Pascal 18. And Kent is new to the list. We lost. Kent was there yesterday, but we lost Robert L. Pascal is new to the list. Pascal hadn't traded in a while. So back in the markets, 18 to continue his streak at 18 days right now. Nice job to all those guys.
Mm-hmm.
All right. Yesterday's best live funded P&Ls. Let me pull up that other dashboard real quick.
Cool.
All right. We got them up. No, we don't. Those are the hot streak. Yeah, let's see the XF or live funded P&Ls.
Yesterday's
Sorry.
best.
Here we go. Some new names on the live funded P&L list. Aurealis, haven't heard that name before. Nice day
Yes.
trading the what was Aurealis trying? NASDAQ. Bill K. Nice day trading the NASDAQ also. Nick T, ES and NQ, beautiful. Miguel trading the NQ. Matt S also trading the NASDAQ. Nice days all around for these guys. We could roll right into the top 10 list if you want also.
Yes. Wait, the top 10 list?
The top 10 list.
Everyone's favorite top 10
The
list.
top 10 list?
Eddie, then if we got plugs, we can do plugs right now too. I mean, we're crawling here.
All right.
Let's do the top 10 and we can just do plugs after that.
Let's go right into it.
Yep.
Let me pull up the
$4.90. Isaac missed yesterday's Best Buy.
Yeesh. Cup of coffee.
Should have just thrown in an extra $5.
Yeah, drop a Finsky into that account.
There you go.
All right, here's the bottom half of our top 10 list.
Three
new names on the list today.
Oh.
All right, starting at the bottom. Nicholas, Way, and Drew, welcome to the leaderboard. Smile, your names are on Topstep TV today.
Yeah.
All right. Nicholas moved up from 98th place after picking up 20 grand across a pair of XFAs. Way moved up from 16th place. Drew was in 15th place yesterday. Salmon dropped a notch. He was in 6th place yesterday. And Isaac fell back down to 6th place despite an $1,800 winner yesterday. Making money and dropping on the list. Funny how that happens.
Tough.
Right.
Tough business. Tough business. Right?
It is tough.
Everybody on? Good. Great. Grand. Wonderful. No yelling on the bus.
I love that movie.
Let's go while we're young.
I think I timed that right. All right. Again, starting from the bottom, Sean jumped up into 5th place after spreading 16 grand across 3 XFA accounts. I don't know if he was copy trading, but definitely trading in 3 XFAs. Jerry fell to 4th after donating another 9 grand back to the markets yesterday. Jerry's been having a tough go at it ever since he had that huge winner that put him at the top of the list. Thanks, Eddie. Adam held on to 3rd for another day after pocketing just over 6 grand. Daniel is on the move again. Daniel made about $40,000 trading in 3 XFAs yesterday. Daniel had that huge $104,000 day a couple weeks ago. And Dakota, I think we're trying to get Daniel back on the show too. He was on a couple weeks ago right after he had that huge winner. I think we're looking to get him back on again. And then Dakota hit the daily loss limit yesterday. Can't win them all.
No.
But he's still pretty far ahead the rest of the pack, so he's in good shape. That is what we got.
Yeah. Dakota was kind of taking the same alongside trades that we were taking. As he is a perma bull, some days you're just going to get steamrolled, and that was one of the case yesterday. The Bulls got steamrolled yesterday. That's going to happen.
Right. Ready for some plugs?
Yeah.
Oh, yeah.
Nose plugs, ears plugs, earplugs.
Eddie.
What?
Slow down.
No.
All right. Hey, if you're a fan of Topstep TV and all the resources we share on a daily basis, access the schedule that we have, never lose track of what the hell we're doing. Have Topstep TV in your browser, and I'm going to post that link right now. This is something where you're going to get all your levels. You're going to get the schedule, Hoag's levels, all this good stuff. This should be bookmarked. Also, if you are new here or if you're just logging in here on this wonderful Wednesday, we got a bunch of new products that were added to Topstep X this past weekend. Check them out. We got the CME FX futures. We got the Chicago Board of Trade financial futures that are now live on Topstep X. So have at it. Have some fun. And check it out. Remember, you always got that practice account. Maybe there's a market that you haven't had a chance to trade. Well, now's your chance. Back to you, Andre.
Good stuff. Thank you, Eddie. Train 5049. We are in the holding pattern. Where the range trade is in right now. Dolby Times, the Dolby Time special. Right now, looking at the NASDAQ. Delta John, my 7,100 last time we checked in with the ES. My 7,100.
Negative 7,600 now.
7,600, congruent with market direction. Taking a look at the tilt. 50-50 ES, 50-50 NASDAQ. So, crude new lows. Thank you. Crude. What is crude trade now? We are beneath it. What?
79.62. Just keep printing.
I did a little short at 79.70. Then I bailed, But I'm back in again at 79.65 short.
Has anything fundamentally changed? Did this the EIA numbers trigger this? What's changed up there? Because we were trading $84. We were trading $84. Like,
they were pretty bearish, yeah.
And it was a technical level too.
Yeah.
All the stars lined up.
Yeah. I'm still not happy about the trade location, but there's nothing else. We've got single prints left on the profile. So we'll see if we get a bit of a continuation here, and if not, so be it.
Nailed that.
I'm still just floored that, you know, we put that head and shoulders in 2 weeks ago. We didn't even have the right shoulder, and it's just I followed it. I wish I could do that every time. It's like that impossible 60-foot putt that you know you're not going to hit, and you hit it.
Yeah.
Oh, what a feeling! Yep. Blind squirrel.
Well, now we know.
Yeah.
Whenever Hoag manifests a chart pattern, we should start trading it immediately.
I would love that. All right, Jack. I'm thinking 45-ish, Jack. We can do that.
45 all day?
I owe you one after that voicemail. Actually, I owe Paul. We are still selling off here.
So I'm not too keen on playing the long side of this range right now.
Me neither.
The negative delta, sellers stepping in. We might rip through these lows real quick.
Yeah, but yeah. We did see buying exhaust.
Guys, that was a good trade that you took.
We took it.
Happy?
We took it. Yeah, it was good. Yes.
Yeah.
We got that decision tree played on perfect. Got the community levels. Check the price. Did we hit the price? Yes. Ladder, liquidity to the downside. Check. Price action. Couldn't get to the 60s. Had to trade the level. Boom. Hey, that decision tree, Deeyana, just made us make us $3,800.
Nice.
Stuff.
Just took out the low of the initial bounce in the S&Ps by 1 tick. Got a poor low.
1 tick, yeah. Watching that.
Poor low.
Nvidia bombing. Okay. Nailed that.
Yeah, I don't like this crude oil trade. I'm out.
Seller exhaustion.
Nvidia's down 4.7%. Tesla down 2%.
Is it really?
Yeah.
What happened? Nvidia, what happened? Come on.
Oh my gosh, yeah. It's just
You're the darling.
Yeah. Always looks the best at the top and worst at the bottom.
Mm. All right, I've got nothing. Hands off.
That's okay. Yeah, we got about, I think we're good here. Show notes. Keep in mind, we got a jam-packed day today. Checking with us later. This Power Players, we got, our boy True. If you haven't met True, please check in. This guy is super interesting. Brings a lot to the table. More than just trading. Great trader. Also very interesting cat. He's got a crew with him at all times at the house, helping everyone make some money. So please check in for that. I think you guys will be super interested in that. Good trader, great personality. But tune in for that. Let's run down the schedule here in a little bit. We're going to see how this lower end of this range. I think Anne-Marie might have taken the long there at the end of this downside on this range here, 50.46.
Drew is the only person that has a storm inside his house.
There is a storm. There are a lot of people there. A lot of people. Very cool setup,
I like
too.
the guy.
You want to see a cool
he
setup.
Turned his home into a boiler room, you know? How many people does he have in there every day? 5 or 6 guys trading?
At least 5 or 6. And every time he comes on, we do make him pull out those people that we know are watching in the kitchen while he's in his office. So we say, Drew, bring those people in from the kitchen. Come say hi to TV. So let's see who's at the True headquarters today. So tune in for that. Okay, we are the downside.
Anne-Marie's still holding long. Anne-Marie's long right here. It was a good spot for a cheap long attempt, but seeing these sellers step in now, it just and it feels like a good play to me.
If you follow the process tree, then Delta is still against that. So
yep.
No.
Thank you. Yes, D. Yes.
But we were stingy as far as trade location. We got our trade location. Andre executed. The risk was known. And I think, we were a little too aggressive getting out, but we can always say that in hindsight.
Too aggressive.
Well, I don't think we were. I think if you are doing a range trade, there's really no guarantees that we're going to go all the way to the other side. So the safe bet there is to take profits in the middle.
I think going into the trade, it was a VWAP play. We're going to sell the highs, the range, and target VWAP. I think that so we executed to a T. Exactly how we did it. Maybe shaving off 5 early, but that was Jack. So I'm gonna put that one on Jack. But,
it's almost like we knew what we were doing.
I think that's exactly how we want it to play out moving forward.
Absolutely.
I stand by it.
Thank you, Jack.
No regrets ever.
No regrets. Yes, no regrets. All right, we got about 30 minutes left here in fast markets.
Not even one letter.
Let's take a look. Boy, that bounce, man, that nice little bounce there. Anne-Marie. Playing the ranges, carving up. No need to trade this afternoon, Anne-Marie.
Carving it up today.
You'll be carving up like this. Absolutely no reason to trade this afternoon. What do we got here? James, if you want to show it, we can show it. I think these markets are a bit of a lull. Anne-Marie targeting VWAP. Great minds think alike. Anne-Marie, beautiful entry, beautiful entry. We were a bit more conservative than a personal account trade. I do like where your head's at.
Yeah, I'll jump in really quick. I know earlier we were talking about tulips. We mentioned the photo shared by Devin, who was on TopQuiz. Here's that photo for those who are not in the Chicago area.
Whoa, where is that?
Is it Holland, Michigan? I would guess for the tulip.
Holland.
Festival,
I've been in
right?
the one in Holland before. I've been in that one. Yeah, that's dope.
It's very pink.
Pretty.
There was a tulip bubble. I'll be damned. Who would have thunk it? How are we looking over there in oil? I'm thinking we got about 30 minutes left in the house account. I'm
still making new lows.
Are we really? What? They're just getting hammered? Man.
It's been sat between 65 and 61 for about 10 minutes now.
Okay.
That's why I jumped out, because if it was going to go lower, it should have gone lower already.
We want it now.
Yeah, for that type of a trade, yes.
Yeah, it's basing here.
Yeah.
Andre, did you ever confirm? Are we able to trade crude oil in the house account, or do we have to get it set up?
I believe we can. We're going to check here after fast markets and confirm.
Mm-hmm.
We'll certainly
Nick heard me.
We'll certainly not test.
Mix right behind me. You heard me ask. Mix right behind me. You heard me ask. He said we're good to go with crude oil.
Cool. Right. Great. Good to know. So we can play around with that a little bit here this afternoon.
We can get Dakota, Dolby, me,
Drink some milkshakes. Good stuff.
Wow, Jack, come on. Where have you been today, Jack? What are you doing back there?
Popping in.
What are you cooking up in the lab, man?
Sniping us with
left and right. Dakota, where are you? Jack needs to get roasted. My goodness. Just a savage today. My man. Wow.
He and Powell are in a mood.
They are very All right, hey Jack. No, I want to bring you on here. In all seriousness, Jack, let's talk about Powell. You do have a good read on the Fed, interest rates, and stuff like that. What do you think? I mean, they paint themselves into a corner? What would you expect to hear from him on something like this, Jack? Like, if anything, I know we can't make assumptions and if that's, but what I need to, what are we thinking here for FOMC? What do you want to hear from him?
What do I want to hear from him? I want to hear him not be super hawkish because I want to see things go up. Right. But I think the past month's worth of data has been kind of sticky, as he referred to in the voicemail. And with that, I think everyone's expecting, the market sold off the last couple of days, that we're really expecting him to, how should I say this? I think we're going to see a pretty hawkish Powell today, to be honest. Like a lot of people, I could see this 10-year going to 5% in the not too distant future. They're walking a tight line here, so definitely not something I want to trade around. But we could get a pretty big bounce after the sell-off if he's, just regular old Powell doing his thing.
Yep.
Shut the effing door, yeah.
Shut the effing door is right. Yeah. Wow, what a bounce off that. What a bounce to the upside there. Shut the F. Love that guy. That bounce to the upside. Anne Marie, well done. Hopefully, let's take the sucker to VWAP and get that in there. Boy, I mean, this is just.
It is barcoding though, so play the ranges.
Textbook range bound trades. Yeah. My goodness, what more? This is what they teach in classrooms that never actually happens. You learn this in econ classes. This is the charts are really coming in. We could be, Anne Marie, well done. Anne Marie took it off. Well done, Anne Marie. That's how you do it. That is how you do it.
She's the master of range bound mean reversions.
Carving this shit up. Yeah. Great stuff. That is, I mean, we are looking at textbook.
Carving it up.
Absolute textbook range-bound trading here. I mean, you're not even taking heat on these entries, are you, Anne-Marie? Rate hike would cause pandemonium. Yes, it would. We will make a lot of money. If they surprise do an emergency rate hike, we're going full port sold.
All right.
Full port. We are fucking. Oops, sorry. We're gonna hammer a
point, click, and pray.
Yeah, and we'll have to stop in there somewhere, but yes, we are going to smash a 50 lot if they emergency rate hike this sucker.
Dakota's saying he likes a long and crude now.
Dakota's
yeah,
there.
I like long and crude. But I'm kind of looking at gasoline futures long instead.
Our Robert.
There is a little. Our Robert. Yeah, there is a little supply here. I call those unclean arrivals. Mm-hmm. If that goes, then we do have a case for a neutral day long. But until that goes, it's not good. So we need the sellers that sold before.
Yes, we do.
We're
I'm
off.
going to go to the global board here. I'm going to go to global. Let's take a look at what's happening around here. Switch out of the house count trade. We do have about 20 minutes here left in fast markets. We're going to switch over to the global board real quick. We will trade house account later on this afternoon. And maybe perhaps do a crude trade. But first, we got to test that.
I'm with you, crude dude.
Like that. All right, take a look. Wow, crude is just getting absolutely hammered.
You don't do a crude oil trade. Did I hear that?
Yeah, I don't see why you guys. I mean, we're out of the house account for now.
We can.
So,
I mean,
yeah, we're out of the house account. I don't see what's wrong with you guys trading a little personal right now. Got the house account good for now.
Well, I missed the trade now.
Gotcha. A little hindsight. Gotcha. Well, you know what? There's always opportunity somewhere, or we just be patient.
Oh, absolutely. I'm not worried about that. I'm just, we're focusing on the house, on the house account. So I'm not really doing much in my Topstep funded account here, just kind of trying to help with the house account.
Well, house account's closed for the time for the next 20 minutes, so we can go over to the personals. I just don't see any reason why we can't. If anything presents itself, JD, get in there, man, for real. Let's try ones and twos, nothing crazy. Sure. Yeah, ones and twos. House account's closed for the time being. We can switch over to personals and get some action going here. If anything pops in, John, feel free to do the same. But yeah, I think we got our house. It's FOMC day. And Dolby just slam a 15. Let's get it, Dolby. Still, crew is still selling off here.
Yeah, it is.
Remember,
where do we say that the measured move was? And it's not going to happen today, but $73 off this.
73?
$73. Yes.
Definitely down with that.
And that's just the measured move off the high of the top of the head to the neckline. That same distance takes us down to $73. May take a few days.
Oh yeah. 79.30, my target. Anne Marie says 79.30 is my target. Oh, I haven't even clicked like on YouTube yet today. Shame on me. Please click like. Please click subscribe. I am late. I'm 2 hours late to clicking the like button myself. We're up to 84,500 subscribers. 500 more, 85,000. Boy, we were just at 75,000. You're cruising here. Back to the middle here in that range of the NASDAQ. VWAP go. Yeah, I'm trading. I gravitate right to 17,000. So maybe catching some sellers. All right, look at the crude chart here. Is this kind of barcode a little bit? Is this what consolidation looks like? Is this like what building a base looks like? John, you did your example with that thick stack of papers right here. I'm looking at this crude chart on the 5 minute. Is that what we're looking at? Are we looking at a thick stack of papers right here?
Yeah, probably. I mean, a lot of this might be some of the shorts that caught this that are just kind of bidding to cover. They're just kind of getting out of those trades as soon as they do. I'm looking for this market to continue this push to the downside.
All right, what kind of prices would you be looking to sell? Gold's popping right now, man.
Well, I mean, if we're going to be looking at the consolidation or the kind of range that we put in here, very short time frame range, 20 minutes, somewhere up around 79.75 to 79.85 in there somewhere. Or you can try and catch the breakout to the downside, but I'm historically really bad at that. So, and this is a 5 minute chart, so you can see though it's just kind of hanging around here. Again, this is probably some shorts that are already covering. And if it does move to the downside, they break out. We got to break out to the downside. They'll jump back in, and that might be enough to continue this move to the downside. Now, Dakota's already said he likes a long and crude, and I've been wrong before. So I know I'm just not in a trade location where I would want to risk anything here.
All right, well, we are seeing gold move to the upside here. D, what was your trade in gold? Were you long? Oh, D stepped off. D.
I was long.
Yeah. Oh,
I'm back. Yeah.
Okay, good.
I was long. Sorry, my dogs were going absolutely nuts. We had a couple of neighbor kids who came over to hang with the dogs. So I had like 3 of them in here, and they just kicked off. They were like, "People, we want people." So I was like, "Shut up! No, what are you doing?" So yeah, I was long, but as you can see, we had this big sell-off for about 73 ticks. So the trade wouldn't have survived that. So I'm happy that I bailed, and I couldn't really see any good ways to get in on that. This just looks very whippy ahead of FOMC for me. But longs in crude oil or gasoline futures would be a possibility. But like I said, we did have these sellers here that are putting a wrench in the works.
Yes, they
so
are.
I didn't like that. That's what I saw. So I wanted that to break before I went in, and then it just never broke. It reacted. So for now, yes, there's a potential for long, but I want to see this a little bit more commitment through that level. What's that? That's 79.80. And we don't quite have that yet. So it's just looking like it's just consolidating, but also creating lower lows, which is not a good thing if you're looking at a reversal trade. So I don't have the price action that I want to see around here.
I'm with you.
Great. Taking a look here. Keep in mind, everyone, again, it is FOMC Wednesday. You're on the first of the month. First of the month, May. I cannot believe it is May. It's going to be June before you know. Summertime is right around the corner for those in the Northern Hemisphere. So very good stuff. Jack, if you want to do it, I think this is the time, because I even think Mr. Series 3 himself is watching right now. So
yes, he is.
If you want to do it, let's do it. Michael, you got to chime in that chat. Everyone wait for Michael to answer in the chat if he is watching, and then we can go from there. I don't know. Michael, give us a thumbs up if you are indeed watching on the YouTube. But go ahead, Jack.
We should ask that every 10 minutes. Michael, are you there? Are you there, Michael?
Are you looking at the beautiful ocean? Are you looking at he's in the Indian Ocean, right?
Yeah. So he's just like taking a pleasure cruise or something with TopstepTV open. That's good. That's
I'm sure
dedication.
the family's loving
Love it.
that. I'm sure. I'm
First,
sure wife is just loving that.
We're gonna do a series. We're gonna do a series 3 question, but first, James, we have that story. It just came to my attention that Dave & Buster's is gonna allow customers to wager on arcade games. I am so confused as to just when and how all of this became legal. You couldn't place if you didn't have a bookie, of which there were a few at the Chicago Board of Trade. If you didn't have one, it was kind of Vegas or nothing. I didn't think you could even do it in Indiana, like where they had it. But then in a matter of like a year or so, now 70% of all commercials are for FanDuel, which, by the way, now has responsible wagering limits. So the degenerates are sure to use, set your settings of how much you can bet. Oh. Anyway, Dave & Buster's getting on the gravy train so you can play skee ball and lose your car or something like that.
What a time to be alive. What a time to be. Oh my God.
Oh, the Repo Man's here. What happened? Papa Shot,
Dave
baby.
Buster's. Dave
Papa
Buster's
Shot.
got me. Yeah, Papa Shot. Wacko got me. Yes.
All right. Let's do a little Series 3 action right now.
Yeah. Let's go.
Here we go.
Okay. He's putting on the glasses. This is important.
An investor is looking to hedge using futures. An investor looking to hedge using futures would seek for each of the following except A, a position with the opposite risk from his cash position, B, a position the same size as his cash market exposure, C, a position with the same risk elements as his cash market position, or D, a cash market position.
Hedge futures. Well, it's the except. The word accept is the thing here. So the same risk element.
There's one that definitely pops out to me.
Yeah, the one with the most words for me.
I'm trying to think, but nothing happens.
Yeah. Fruit's still breaking here.
Yeah, it is.
Yeah.
But yeah, I'm gonna go C. My guess is C.
What do they?
It seems to be the
What do they
consensus.
mean exactly?
Is it
a position with the same risk elements? What, like same asset class or?
I think they mean the same risk profile as in your risk is in the same place. You know what I'm saying?
Then C.
Yeah.
So
let's
see the
it would
answer.
be C. That's what I'm thinking. Yeah.
got the what the chats. Yeah.
Chat's torn between A and C, it looks like.
It's not A because it's except.
Yeah. A is
It's
a
not
hedge
gonna be
for
A.
sure.
This is a test taking.
Yeah.
That's a hedge.
The test taking game. Hey, let's get to it. Crew's getting hammered real quick.
Yeah, let's hit it.
Yeah.
The answer is, James, it is C. You were all passing.
Oh, finally. Very good. Crew getting smoked to the downside. Trading new lows, putting new lows there. $79.30. Sayonara, $80. Wow.
Yeah.
ES is approaching the upper end of our range again.
My goodness. Range bound trades all around the place.
Mm-hmm.
There's money to be made this morning. There's no doubt about that. No doubt about that. Wow. Opportunities are everywhere. There's 79.30. Anne-Marie nailed that. Damn, Anne-Marie, she did say 79.30. Damn,
Target hit.
tick. Oh, my goodness.
Boy.
Dow
Direct
making,
shot.
Dow making highs here. Dow making new highs as we speak. How about that?
Mm-hmm.
S&Ps to the ups, move to the upside here. They got to be equity's got to be loving what's happening with oil today. They're looking for any type of catalyst to push to the upside. Got to be loving
Nasdaq
that.
specs of VWAP.
Yes, right to it.
Gold has a bit of a double top in
I see that.
formation.
Looking at the 5 minute there, D, or what are you looking at?
Mm-hmm.
Yep, I see that as well. Yeah, D, let's go to your chart. Show them what you're seeing here in gold with that 5 minute, if you don't mind. I caught that too. Nice catch there. A lot of technical chart formations coming in.
So 5 minutes. This was the previous top where we pushed, and then we went all the way down, and then we went back up, and now we have pretty much like the tick, another high, and a reversal on a 5-minute chart. So if that gives us follow through, then this may be another opportunity to skim about 50 points down to initial balance. But obviously this top has to stay, and we have to see some sellers stepping in around this level. We do have a little order block right here at 23.18. So if that goes, then we might have that run down. But this level could also act as a further bounce. So slight caution until that goes, and then you might get a flush down.
Very nice. Very nice. Good stuff, Anne-Marie. Yes, it's just, we are selling off that double top right there. My goodness. Right back to VWAP. JD, right back to VWAP in the S&Ps. Off those lows. Anne-Marie, nice job. YM as well. Sorry. S&Ps and NASDAQ. All looking, man, we are still selling here in crude. 7930's new lows. Can we push?
Right there.
Nice, Isaac. 7929.
Caught a bid.
Caught a bid, baby. Yeah, I caught a bid, all right. I'd say I caught a bid.
Isaac.
Enjoy the siesta keys there. Isaac, enjoy. So, all right, we got about 10 minutes here left. Keep in mind, we do have power players come up with True. The full slate today. Also this afternoon with FOMC, and the Powell will be broadcasting throughout for those 2 hours, I'll say. We will keep the cameras rolling. You're getting our commentary. We'll be bringing on some great traders, potentially find some opportunities to capture, as well as digest what the man himself will be saying. Bit of a pickle. We'll see.
I say we just rip on him. Oh, sure, Jerry. Okay, pow, wall.
Shut the effing door. Shut the F. It's so good. He wasn't wrong. He was not wrong.
Yeah.
Bit of a bid here. Wow. Bounce off the lows at 79.30. It's trading 37s now. Oh, boy, Dow. The bulls are in control here in the Dow. Hoop took a long crude from 79.32. Nice entry if we can push here. But the longs and the bulls have been getting work today. So that was our case yesterday, and then equities. Not catching a falling knife, so to speak, but it was breaking. We worked the first time. The second 2 times did not work. Right back into range here in the S&Ps. Right back to the upper end of this range, trading 57s. I think we sold 59s last time we did this trade.
We did 59 quarters.
You like that again?
I don't know if I like it again.
Delta negative 8,400.
8,400?
Thank you. Right, it's starting to get uncomfortable for those shorts at this point, right? They didn't puke. They didn't puke this whole way up.
Here we go.
Just keep trying to sell it.
Yep.
One thing it does have is, there is a weak low at the bottom in the S&Ps. Or low.
I see.
But sometimes a poor low is a double bottom.
That's true also.
Yep. Well, interesting chart here. Maybe we can show this chart, James, if you've seen the Slack that Ben put in here about the average return by month going into May. Seasonally weak month. April's seasonally strong. This is interesting stuff. I don't know how much credence or how much it matters. September looks terrible, but interesting seasonalities month by month and returns in the equities. Jack, I'd like to get your take on this if you believe it. I think there's anything to it, but it is interesting. What is it called? Sell in May and go away? Isn't that what they say, John? Something like that? Is that a thing? On mango.
Yeah.
I've always heard that. Yeah. Well, we are in May 1st.
There you go, Andre.
Yeah. Ooh, nice job, James. All right. So take a look at this. This just got, wow, James on point today. So S&P average return by month. May, I mean, not so hot. So coming off a strong April, but we finished kind of weak here in April. But I don't know. You guys think there's anything to something like this? We are entering May, so maybe let's wrap our head around here the last 10 minutes of fast markets. John, you think there's anything to something like this, or just having to be a coincidence? What do you think?
Well, I mean, 68% of statistics are usually made up right on the spot.
There you go.
But yeah, there is. I mean, this is just over time, and it's funny that they started this the average from 1964 to 2015. So we're missing some there. 64 is the year I was born, and September's the worst month. That's the month I was born. So it makes sense.
Ooh. All right, well, that's something just to wrap your head around. Keep that in mind.
Hoag, does sell in May walk away apply to the equity markets? I always thought it was more of a like a grain trade move.
Oh, is that true? Okay, did not know that.
Yes.
Just curious if anybody else has an opinion on it. That's just the way I always heard
60% of the time, they work every time.
Taking that short, my goodness. Could have taken that short.
No FOMO, Dre. No FOMO.
Always have FOMO, JD. Always have it, man. Always have. It's all right. It's all right.
Yeah. Plus, keep in mind this chart here, Andre, conveniently is 64 to 2015. So, I bet you February and March would look a lot worse with the COVID sell-off.
Oh, yeah. Forgot about that whole thing.
All it takes is one month where something's down 30% to skew those a bit. So, I don't know. They're interesting to know.
Cool.
Yeah, I think we should be differentiating between black swan years and regular years. I always have a bit of a problem with statistics that kind of lump everything together. It's like, well, no, you're not going to have COVID breakouts every year, and you're also not going to have the credit crunch every year. So putting those kind of massive numbers completely skews the data. So whenever I'm looking at statistics, I will take those kind of oddities out. And on let's talk about on a less of a time frame. We have the FOMC every couple of months. So if you continuously want to put in the FOMC days into that, what's going to happen is that you're going to skew data. Like those setups are irregularities. They're abnormal days. So for me, I usually just exclude them, and I almost look at them as a separate data set, like a subset of what's happened on those particular days. But so for some reason, these analysts, they never do that. And it really annoys me. Is it just me? I don't know.
No.
Analysts?
Ton of skewed data.
Yeah.
Yes, analysts.
Government does it all the time.
Soft spot in the heart for analysts. We hit that level in the NASDAQ. We just caught some sellers there. S&Ps as well.
Yeah.
I'll get some
The
sellers.
range trade worked again.
Yeah, gold is rolling over as
Sure
well.
did, JD. Sure bleeping did. All right, whatever. D says, damn, Deeyana is
gold.
Yes, it worked there too. Everything is kind of coming in today, and we're saying we could be trading this better. We certainly could be trading this better.
It's definitely getting into range, especially gold and equities that have a connection. Gold looked a little bit more stretched out than equities today for some reason, but it seems to be having trouble breaking through. What was that? I think it was a 30-minute supply. Yeah, so a little speed bump that we had yesterday.
Yep.
The one where we had the failed auction. It's exactly where it stopped today. And it's having trouble breaking through that level. So for some reason, that's a level of interest. We don't need to know why. We just need to know that there's price agreement there.
I've had that level on my charts since it was a weekly kickoff level. I just graded out because I had a feeling it was going to be important at some point, and there it is.
Here it is.
2320.
Yeah. Yeah. Interesting.
The 100-session moving average on the 30-minute chart is also coming across within 10 ticks of that too. So that may of course, have something to do with it, but
I just have the 89 moving average on my chart. It's kind of a nice medium between short time frames and long time frames.
Sellers. Wow. Well, we did.
Finally at negative 10,000 in Delta.
Negative 10.
Interesting that the equities and gold are now correlated.
Yeah. That's that hasn't been the correlation. That hasn't been the trend the last month, 2 months. We do that cool matrix we always pull up to find correlations that John shared the link to. Really good stuff. We can show that. Yeah, I love that thing. I actually look at it every Sunday, part of the preparation. Every Sunday evening, I pull that sucker up, see what's correlating. See if that carries into
Can we find that again? Because that's super useful.
John, you got that? Yeah, let's put that in the chat.
I remember I wanted to grab it, and then I kind of missed it.
It's
and
cool.
I'm like, no.
It's cool. It does all the work for you.
What are we looking for?
That correlation matrix.
Correlation matrix.
Oh, yeah. Oh, you're see.
Yeah, we
Here we go.
Sellers.
Here it comes. Intermarket correlations. Now, mind you, there's a time base to it, so you can get a 30-day, 60-day, 90-day, 120-day, or 180-day. I can put it on my screen if you want to see it.
Yeah, it's very interesting.
So you got your different products and how correlated they are at different time frames. Like here's the 30-day. Look at all the correlations between the equities and the treasuries.
Yeah, the greens changed.
60 days. Where did all those correlations go?
Yeah.
90 days.
Yeah.
So, yeah, it's a pretty cool tool.
Yeah, make that part of your Sunday prep. Make this part of your Sunday prep.
Yeah, that's pretty useful for sure.
I use it. Yeah. All right, got the sellers back in, man. These ranges, man. Oh, they didn't come in. What do you think? We should have just kept playing those ranges, right? Obviously, looking back on it.
Yeah.
Yeah, it was. We'd be done for the
Until
day.
they fail. That's what you do.
The name of the game or pre-FOMC.
It is.
They're not going to do much. Yeah, they're not going to do much before the data comes out, and it's pretty. If they do anything, they do it the day before, like we've seen yesterday's flush.
Yes.
Yeah.
Jay Cook says, think we test 50-40 in the ES here this time. All the way back down from 50. I mean, you'll find a lot of buyers coming in there, Jay. I can assure you that. You'll find a lot of buyers coming. I see why.
And Jay, there's that naked volume point of control down at 38. I like that level. You can take out that poor low. Negative 10,000 now in Delta. Looking good.
Catch them. Yeah, catch the short snooze in here. 3 minutes left here. Hey, guys, we'll go over the schedule. We got the pinned to the top of the chat here. Group coaching form. Get those in for Mr. Hoag himself. You're getting the goods here. So let's go over the schedule for the day. If we have that handy, I'm going to fill time while we try to find that and before we post it. But yeah, we got power players coming with True. You got to check out this guy. If you haven't met him yet, be sure to tune in. Super interesting cat. Great trader. Really interesting story. Get you up there. And then we got Top Quiz. Eddie on the hot seat after yesterday's Top Quiz. Eddie and Alyssa. Then we got shoulder tap Jack and Mick. Jack's doing a shoulder tap. Very cool. Group coaching with JD and Hoag. Like I just said, the form is pinned to the top of the chat. Get those questions in for JD and Hoag. Then we have we got FOMC starting at 1 o'clock. Myself, Hoag, KV, the 1:30 KV will drop off. Then we got Dakota coming out for Power Hour to join myself and Dolby. And then get a load of this. Slow markets this evening. Coach Jay, Coach Dakota in slow markets starting 8 p.m. Central. We will be sure to tune in for that. Dakota's starting to get some guests on slow markets. Very, very good stuff. Congrats to Dakota and the success of slow markets and his trading as well. So tune in to watch Dakota and Jay carve it up this evening. Jay's going to be trading Nikkei, maybe? Have fun, Jay. Have fun. 1 minute left here in Fast markets. All right, everybody. That was a lot of fun. It was slower, but you know what? There was opportunity to be had to capture. I know we did have one trade, one winner. We probably could have been a little bit more aggressive. Maybe a little gun shy from yesterday. Perhaps FOMC don't want to blow it going into it, but you know there was opportunity to be had. Anne Marie really showed how to do it. I really want to thank you, JD. Thank you, Hoag. We'll see more of you guys later in a little bit. D, thank you so much for joining us. We truly appreciate it. We will be. I think we'll be seeing you later this week. Correct? Just more market stalking or no?
Sure.
Okay. Okay. Great. Well, I know you have Monday off. So enjoy your holiday. Yeah. Please let the kids, let the neighbors next door. Please play with the dogs. Have fun with them. And we will be tuning over to. We got Power Players coming up next with Mr. True himself. True is logged in. I see him in the green room. What up, True? All right, we got Power Players coming up next. Thank you everyone for Fast Markets. FOMC this afternoon. Let's get it. Yes. Welcome back, Trude. Welcome back to Power Players. You are a power player, True. What up, man? Welcome back. It's been a minute. How you been? What's good?
Thanks for having me back. Just a lot of life stuff outside of trading. So, recently my grandmother cracked her ribs. One of the grandkids picked her up. She's good now, but picked her up and gave her a big hug and cracked her ribs. So,
Graham.
Yeah, we were dealing with that. It's a laughing matter now that she's fine. But other than that, we've just been doing a lot of family stuff and getting back into trading more consistently. With all my crew here and some of the people on my Discord and stuff. But yeah, everything's been good. I finally got access to Topstep X. That's what I was really excited about and wanted to actually talk to you guys about. Because I'm sure you guys hear all the time. But I have friends and like followers that have been asking about Topstep X and just wanting to get some like real-time answers. You guys, I know you guys are still working on it, and but so far I've loved it. The trading on it has been so simple, and it just made trading for me so easy compared to using like Ninja Trader and what's the other one, Tradeovate and all that stuff. So I've traded on everything. I trade on my my Thinkorswim, my personal account too, and even the DOM on that is kind of a headache. But using the Trading View UI has been a breeze.
Sweet. Well, I think you you're lucky enough. You are sitting with Mr. Topstep X Guru himself, Robert, Coach Robert. Yo, hey, you guys just nerd out on Topstep X. Yo, True just said, Ninja, Topstep X is where it's at. Let's go, Robert. Let's do this thing.
All right. What's your the biggest thing you like? So Topstep X has the Trading View charts embedded right into them, and the DOMs get 100 levels deep on each side, so it just flies. It's super fast. What do you like to? What's the best feature that you like so far? Because this thing's added nearly every day in Topstep X. So what have you found that's been most beneficial to help you trading there, True?
So I personally trade using the DOM itself. I place my limit orders rather than try to click on buy market or sell market. Just to, I trade on my levels. So if it hits certain level and I get filled, then I get filled. I do my best not to chase, like when you see movements like that. For example, I caught that short from NQVWAP at around 472, and then I added more with 3 contracts total at 474, and I caught that drop all the way down. And I use a limit versus using the sell market, because sell market is going to give you a trash fill. So I've been able to do that and just kind of drag my take profit. And I trade a lot of mainly on imbalance and stuff. So the first thing that I saw on QQQ, NQ and QQ do the same thing. There was an imbalance there at around 420. Was it 421 on QQQ? So just looking at the NQ chart, it was around 455 was my target. So I caught it all the way down from 472 all the way down to 455. Obviously, it went down further, but it is what it is. I try not to be greedy and try to trim out and stuff. So my biggest thing that I've had trouble with was setting trailing stops on individual contracts. So let's say I have 3 contracts that I'm shorting. Obviously, I can set trailing, but it just sells everything, right? I'm trying to do set a trailing stop with just 1 contract out of the 3. So
it's not a feature that's on there just yet. It's not. It's going to close it. That's not. No. That's not you. That's just not a feature that's on there just yet to keep those separate individual orders. The trailing stops at OCO, they're tied together. So if you're entering a 3 position,
which I really like. Which I really like the OCO, the automatic OCO, because I will tell you this morning.
Tell us.
Morning, some of my followers here, I was in a long, we caught it all the way up, and this was on NinjaTrader, and I had a buyback stop loss that didn't close out after the target hit. So I told him, hey, I'm gonna go to the bathroom real quick. I had Taco Bell yesterday, so it wasn't good. So I get a message from one of my followers like, hey, you got a long order filled. And I was like, oh snap, like, oh crap. I was like, all right. I tried to finish up as quick as I could. I came back, and obviously I was down like $1,200, and I was like, oh my god, that one hurt. But that was because the OCO wasn't built in to the NinjaTrader, so that's what I really like about the Topstep X, is that it has that functionality. So once I'm in and once it fills, it closes everything. I'm good to go, because there are times where I forget to hit cancel order, and obviously that was a big save on from Topstep X. So that's good to know. I know that I can trail just right clicking on the screen itself. So we started doing that, but I was hoping that you guys would have it in the DOM, so I can just click on it.
All right. Oh, well, I didn't know. Robert, did you know that one about the right click trailing stop? That's pretty sweet.
Yes.
$5, Robert. $5 for Robert. $5 big for Robert. Yes. Sorry.
Well, we said we were going to give it to charity, so I'm just making my contributions right there. That was entirely intentional, right?
Yeah.
No, yeah, you can right click on the chart. You just have to be in an order. So
correct.
On the order panel, I'm not going to go through the whole demo, but on the order panel on the right, there's the different order types. You would actually choose trailing stop, and now when you place the order, it will be a trailing stop. So if you're not using a full bracket order, that's fine. You can just enter your trade like True said he's entering on a limit order, and then said, all right, I'm going to go long, and I want a trailing stop order. You just go below it, put in your sell stop order, and then trail it. It's going to go right up with it. But it is a good feature, and thanks for sharing that, for sure.
No, it's been amazing. One of the other, I have some questions written down from some of my people here. They asked, obviously, when is the mobile app coming out? Most of us have been trading on like Safari, and it works, but if you have fat fingers, sometimes I'll be clicking on stuff. It's rough. Yeah. So I try not to do that. Yeah. But yeah, is there like a time frame you guys have on that?
Well, inside of Topstep X, again, I'm not going to go through the whole thing. We'll do that some other time. But on the far left side, there's a question mark. And when you click on that question mark, it brings up this whole panel in the middle where you can send feedback, and it can be upvoted. So if you have an idea, something you want to see, and a whole bunch of traders say, hey, this sounds like a good idea, and they click on the upvote, and it moves to the top of the list, it'll just show up on the roadmap, and you can see the ones that are in progress have the highest upvotes. And that's how we know it's a platform built, by traders for traders, with traders input. So this is how things get moved around.
Okay, I'll
to the front of the front of the list. Yeah, it's pretty cool, and anybody can do that.
You like that, True? You like that, True? You guys build it. You guys are going to build this for us. We're all going to build this thing together. That's like Robert said. Click on that question mark. Submit your feedback. Then we have up-down votes on if it's a good idea or bad idea. You're going to be vulnerable, but a lot of them are good ideas. For instance, the lockout button to the top of the Topstep X here, that break-even feature when you're in the middle of a trade. This is all stuff that came from you guys. This came from you guys. We built it because you guys said you wanted this stuff. So we aren't just listening just to do that. But yes, this is what that's what we're doing. Can you
the break-even feature has been phenomenal. I think I
you
really
like that?
Like that. Yeah, I really like that.
It's you guys, man.
Just makes it nice.
That's not us.
Click.
It's you guys.
Click the break even and move it up.
Yes.
Yeah. Exactly.
Will you guys be implementing like TradingView scripts and stuff soon too, or is that like licensing outside of TradingView? I know TradingView has a lot of like.
Well, it's not at TradingView. So the chart you're looking at is just a TradingView embedded chart, so it doesn't actually go out into the TradingView realm.
Okay.
So that's why you don't have access to those public indicators that you're looking at. However, there's the API access in the back end for all the nerds that are in here that we will be able to be allowing access to, and I believe it's going to be through JavaScript. So you'll be able to code that stuff into it. And I'm really looking forward to that as well. But we want to get the basic framework down. If you have 1,000 traders using it, there's like 2 of us that want to put a custom indicator on, so or make it.
Yeah.
So it's going to move up on the list. But yeah, it'll be there. It'll be there.
I'm
True,
big
if you
on
want us to
coding
do it,
too,
we're gonna
so.
do it. If you want true, if you want it, we're gonna do it because it's true.
It's not just me; it's the people. You know, I'm speaking for
It
the
is the
people right
people.
now. Yeah.
Speaking of the people, we're gonna get back to Topstep X, but speaking of the people, first time we met you, you had a crew, man. You had a crew, and I found it fascinating. Tell us about your crew. Tell us who's in the room. You don't have to give us names.
Oh yeah.
Tell us about your people. Tell us why you got your people there. Tell us what you're trying to do.
Of course. So behind me here is my beautiful wife.
Hi. So tell her
always
wave.
here to
Hi.
support.
Everyone wave. Say hi to the wife.
And then we have Ronnie back there. So he's one of my friends that recently started trading. He's always traded options and stuff with me, but then I brought him onto Topstep, and he's been doing a lot of stuff on just figuring out like adding stuff to his Topstep X, and you know, he does a lot of coding and stuff too. So he's a big nerd back there trying to figure things out. And you know, I trade on my TOS because I focus on like ThinkScript and PineScript and stuff, and I know how to code all that stuff. And he's all doing the back end stuff and doing some crazy stuff. I might link you guys up with him. And then I got one of our good friends here as well, Donnie. And then
Donnie and Ronnie. Donnie and Ronnie.
One of my groomsmen, he's actually cooking for us, so he's a chef of our group. So
I love it.
Yeah,
I love it. Hey, question.
Yeah.
Ask Ronnie. What's Ronnie's favorite feature of Topstep X?
Oh, the stop loss.
He said the stop loss on the was it the lockout?
Love it.
Yeah, the manual lockout.
I love the lockout.
Manual lockout, the stop out button, the manual lockout. Everyone's favorite. I do know that Michael is watching this right now, but yes, that's awesome. Robert, what do we have in the pipeline? Oh, hold on, this is a good opportunity to ask him. What is your connection to Daniel P? What is your connection to Daniel P there?
Oh,
hit us up. Thank you, Tim, for that.
You talking about my boy that just cashed out like 40,000?
I think so. Maybe, perhaps.
Yeah.
I was just told to ask the question. True.
Yeah. So it's a small world. I went to one of my friend's wedding, and you know, a couple people recognized who I was, and they're from like New York. They're from, you know, different areas, and they just happened to sit at the same table as me. We were just talking shop, and and then he was like, "What do you do?" I was like, "Oh, you know, I do photography, blah blah." And then he was like, "No, what do you really do?" Because I know what you do. It's like, "Oh yeah, I day trade." And he started picking my brain, and this was like 2 years ago, right? Yeah, this is like 2 years ago, and I taught him everything I knew, and he kind of fell off for a bit. You know, he had some life stuff that he was dealing with, and then all of a sudden he hit me back up. He's like, "Yo, I'm back in, and I'm on Topstep prop firm trading." And then he was like, I am finally profitable. And I was like how profitable? And he was like $120,000 profit. And I was like, oh yeah. And yesterday he just messaged me. He copy traded 3 accounts. He's up 13,000 on each account. So that's almost another $40,000 on Topstep there.
3 accounts.
Yeah,
my goodness,
he's killing it. I'm actually going to visit him in New York in July. I'm running an event there, like a trading event there in New York.
July
when?
July when?
27 to the 31st.
All right, I'll be out there in the beginning of July. Okay, cool. Just wanted to see. Awesome stuff. Sure. There you go. Drinks on Danny P. Danny P, you owe True a couple beers, maybe a steak dinner or something for all that knowledge he did pass on. Now, I do want to get back to Topstep X and the transition. Ninja Trader, Tradeovate, not for everybody. Not really the coolest thing right now. The coolest thing right now is Topstep X, that lockout feature. Break even. So True, talk to Robert. I want you to tell Robert, if you could have any wish, any wish in Topstep X, what would you want?
I think the biggest thing is being able to script. I think that
Robert, we can do that, right?
Biggest thing, yeah.
But you'll eventually be able to do that, yeah.
That's for me. Like, I'm being selfish, but if it's for the people, I would say a mobile app. Like they really want a mobile app, because majority of the people, you know, they're trading. I know they shouldn't be trading while at work, but you know, it's like it's you guys have built something that have changed people's lives, and it's pretty amazing. You know, prop firm has been here for a while, but you guys are pushing it to another level. And I'm not getting paid to say it, but I talk about you guys all the time to my followers, other people, just to, kind of introduce them to them not having to use such big part of their money. Like you don't need a lot of cash to do this, and I think that's the biggest thing because right now, with the economy and stuff, people don't have a lot of money, and you guys are opening doors for that. So, like, I'm trading on my personal with my own capital. Buying one contract of NQ is like $22,000.
Yep.
Yeah, and it's not fun. It's not fun.
It ain't cheap.
Yeah, it ain't cheap. But you guys are making
we
it
also-
very affordable. So.
Yeah, another thing we're trying to make affordable on this, not trying to, we are, is there's no commissions when using Topstep X. It's just the broker fees, but Topstep,
that is
there are no
huge.
commissions on it. So, yeah, and especially now that we have the 10-to-1 micro, 10 micros to 1 mini, those commissions on the micros could add up if you're using another platform, another broker, but they're non-existent in Topstep X. So that's pretty cool also. I'm with you on getting those scripts in there and being able to do that. That's the few of us that like to do that stuff. That's amazing. That's super good. And the mobile app.
Yeah, like I said, it's
that's a big
request.
Yeah, it's a big request for the mobile app, and like all of us like, oh, we don't want mobile trading.
I know, man. That's the thing. True. I gotta ask you, man. Why do you guys want the mobile app so bad? Don't you think trading from your phone is that the best way to trade? I mean, if you want to monitor positions,
it is not. I guarantee you. I tell people all the time, it's better to trade on your setup. If you have a laptop, your PC, like your setting and stuff. I don't know if I can turn my camera around, but my setup is
Holy
this.
Shit, that's dope.
Two 55-inch.
Go to a one shot if we can here. Go to a one shot if we can with this.
I don't know if I can
setup.
get it in there. Yeah.
Damn, you ain't playing around. How many screens you got?
This is my setup. I got two 55-inch Samsung Arcs, Odyssey Arcs, stacked on top of each other.
Wow. Okay.
Yeah.
Very cool.
Just laying it up there. So yeah, for the mobile stuff, trading on it, we're in agreement with you. It would be cool to like manage positions on the mobile app. That would be something that we look at, or monitoring, saying, hey, this looks really good. But as far as position placing, there's just not a lot on there. It's just kind of guessing around. They're all kind of like watered down features. And if you want to trade while you're mobile and you have a laptop, use it as a hotspot. Unless you're some Wi-Fi area, which is we always like to hardwire in too. So there's just so many things that are not the best on mobile trading. But hey, it's a free country. People can do whatever they want if it works for them, and if it's the only opportunity they have. Yeah, it'll be out there eventually. But this is all brand new, and we're constantly adding things. And if you want the mobile apps that bad, go ahead into the Topstep X, submit it, and when the traders upvote it, we've had them pass each other. We've had, all the traders want this. And then something was said on TopstepTV and said, actually, that sounds like a good idea. And that was entered in, and that was upvoted beyond the thing that was already being worked on. So that was put on hold. The new release was put out, and then we started working back on the previous one again. So it does work. That's exactly what it's for.
Oh, that's good to know. I'll let my people know, and I'll let everyone know so they can vote it up. We'll get that done. Another question I had.
Please go on, True.
Will you guys be opening up more than 3 funded accounts soon? Like allowing us to trade on
Robert. What do you got there, Robert?
I think we'll wait for the commander-in-chief to come back and answer those types of questions.
Perhaps no promises.
I'm going to plead the fifth on that one.
Yeah. It's a slippery slope. All right, how many do you want? You want 5? Do you want 10?
Yeah,
you're going to want 20.
No. I think 5. I've done 10 to 20, and it's hard to manage. I will tell you that, and I don't want to put that on anyone. I did really well on 20 copy traders, but again, copy trading sometimes fills are not that great. But I think 5 is a good number. I think 5 is a really good number, and it allows. I think what it really allows is it allows people to not overtrade. Like for me, I don't really copy trade, even on Topstep X. If I'm running 3 accounts, and I will trade on one, I'm done with that. I'll move on to the next one. That way, I don't give back any on the previous one. So I try to manage it that way. I mean, I do love the copy trading feature for sure.
Yeah. All right, but we're at 3 right now. So if we do 5, we're just adding 2 more. I mean, what? I mean, is the marginal? Is there? Okay. I don't know. We talked about this a while back.
This is from the people, and this is like one of the top questions.
True. But guess what happens when you give them 5? Guess what they want next? True. They're going to want 10. Yeah, exactly. And after that, they're going to want 20. So I mean, it's a runaway train, and
I get it.
Perhaps not. I don't know that it's at the top of the list right now, but I mean, squeaky wheel gets the grease. So you bitch loud enough, you might just get it. So yeah, it's not saying it's on you, True. But I do understand what you're saying. Hey, real quick update with the markets. We did see that double top play out that D was talking about back in fast markets in the gold. Look at the 5-minute chart.
Gold?
That double top topped out at around 23.2150. We were off about we're off about $8 off that double top here. So if you did play that double top, well, good on you. The ranges are still holding here in the equities, at least in the NASDAQ and the S&Ps. Maybe a bit of a double top here in the Dow. Taking a look at that on the 5-minute. Crude caught a bit of a bid. I don't even want to call it a bid. Just kind of bounced, floating above the high or the lows. Lows trading $79.11. We are currently trading $79.33. So about 20. Yeah, nice job, D. Nice job. That's how you call it out. Good stuff, D. True, you were talking about this morning. Does True have any socials? He does. He has a Discord. We will put that link. We'll put that link in there shortly. I can probably do that for you right now.
Appreciate it.
What?
I do have a comment on the market. I do have a comment on the market too.
Please.
We've been watching. I've been watching ES, and with ES, right now we're at a pivotal level. I would say around 50, 47, 50. That's where I have a level marked here.
Hold on. Slow down. Wait, 50. Say that. What's that level again?
5047.5.
Thank you.
So that's going to be our pivot level. As long as we stay above that, we will look to rotate back up. Now with FOMC, that's going to kind of wash everything. However, if we stay above 5046, 5047, we should be able to rotate back up. Now, if we break down below, I have targets down to 5,005.
5,005 downside pre-FOMC. You're saying pre-FOMC? True.
No. If we break down below 5046, just breaking on levels right now. Yeah.
Gotcha.
We still have about an hour and a half until FOMC. So more than likely, we already know what they're going to say or what they're going to release. But it's obviously going to depend on what Powell is going to say afterwards. So I personally don't like trading FOMC. I called it last. The funny thing is that the last time you guys had me on here was actually on FOMC day. And
did you trade
I mentioned that the days afterwards are the larger movements. And the next day we had a 300-point move. And the day after that, we had another 200-point move. We moved almost 500 points in 2 days from Thursday and Friday. So that's where I look to get into my trades. Today, I already made 4,500. I made 4,600 actually from 9 to 10. I was able to catch 2 big moves. Are you able to see my screen?
Let's go to it. Yep.
Yes.
All right, so let me expand on this real quick. So this is my NQ chart, and I actually wanted to short here at 457. I do have a script here. I call it my auto trend. You see the white dotted lines. It just creates a trend for me every 30 minutes. Sometimes when we're looking at charts, we kind of get overwhelmed and don't see what's happening in front of us. So I just scripted something that would just pinpoint my trends for me. And I've been trading within these trends for the past since 9 o'clock, right? So we did short the top and the first double top, and I got it all the way down to roughly 428, and I stopped. So I got back into a long, back up to VWAP, and then prior to getting on live with you guys, I marked here on this little bubble here. I shorted at 474. And I sold it. I bought it back at 455, and I was able to. And I was only doing 3 to 5 contracts, and I think on my day stat, I had 48 trades total, 100% win rate.
What? Say that again.
48.
What'd you say? What? 48? What?
how do I share that?
I'm looking at it right now. I'm confirming that on his trading report right now. Yeah,
48 trades, 100%. Did you guys hear that? 48 trades, 100%. Get his link to the top. Yeah, we got a pin to the top of the chat. We were looking at True. You're looking at a person that bats 1,000, 48 trades, 48 winners. Man, that's no wonder you got a gang around you, man. I'd be around you too if you're doing that.
I mean, I'll tell you, sometimes I'll be blowing accounts too sometimes, and I just want to make sure that you guys know that it's not always like 100%. Okay, I just want to put that out there.
I know.
But the thing is that like trading in the range here, we are coming back to another test of VWAP. Right now, we have again an hour 30 minutes prior to FOMC. I kind of stay out of this. I don't like trading pre big news like this. So we just let it show us what it's gonna do. Don't try to like go all in and slam, for longs, calls, puts, shorts, whatever, before it releases. I mean, you want to take a gamble. I mean, that's on you, but for us, it's more about being consistent. Which if you treat this like a job, you're gonna get paid. So just be patient, let the trades come, because after those big moves, there's going to be another big move after that.
And that's what the market does. It goes to the areas of liquidity, right? So, and you gave us that level there, 50.47. And then if it breaks that, you said 5,005. Was that the next lower one that you were looking at?
That would be my target. That would be my target down.
Okay.
Yeah. And then on,
I want to be sure I got that right.
Yeah, and then if it breaks up, let me see what my next target is. So I trade on balances that I've drawn out since October, and these values carry on to basically the future. I can shift those balances up, and the way that I've learned from floor traders that I've got a chance to meet with, they don't care about any of these indicators or what have you. They look at price action.
Yes, they do.
And the biggest thing that they told me was if we, as like a hedge fund or a bank, wherever, were to put in $100 million into a trade, we're looking to double that. We're looking to triple that, quadruple that. So everything is by a certain increment. And for them to do that, they move the market in such a way where it moves in range. And the way that I have it charted out is that NQ moves in roughly about a 30-point range, right?
Mm-hmm.
And if you can identify, and if you're looking at my charts here, where we're bouncing, all these white lines that I have, you can see that we're bouncing off of these levels. And what I do is I literally get in at those white lines, right? I'll get in a short, for example, right here where my mouse is. I'll get into that short and I'll hold it down.
What's that level?
To the next. That
What's
level
that
is
level? We just can't see it.
17458.25.
Okay.
458.
And then just add 30 points above that and below it. That's all you gotta do. So right now,
what are they yelling about, True? What are they yelling about back there?
I think they're cooking out in the kitchen right now.
Gotcha,
so here, for example, we're dropping to 45825, right?
Mm-hmm.
If we break down below, our next target will be 42825. So it's just a 30-point range. Now, do you hold it all the way down? No, you trim and you hold a runner, and just don't let the runner go red. Like that. That's how I trade. I trade within these ranges. I don't hold. Sometimes I'll get 200 ticks, but that's on one contract. After I sold all my runners, I sold all my contracts and just hold a runner. Usually, I never hold more than.
You're identifying those levels. You've identified that you're trading within 30-point zones on NQ. When you're getting in, you're getting with a little more size, and as it's dropping, you're scaling off until you get down to 1, and then you're just letting it go to see how far it goes. Is that correct?
Yeah, correct.
Awesome. Yeah, in my opinion, that's a pretty smart way to do it. Once you get your levels mapped out and it doesn't go your way, you can just get out of the trade and wait for it to cycle back around and wait for to reach your next level up or down. Take that trade, cycle back out. If it doesn't go your way, if it does, scale them out, lock in your profits, and leave one till it runs out of steam, I suppose.
Yeah, not bad. And basically, because again, the way that the market moves, it moves in these range for a reason, right? So here we're seeing we're breaking down, And if we do break down at this level, we'll go straight down to 428. And you will see that right when it hits, if it hits 428.25, it will bounce right back up. Now, the bounce doesn't necessarily mean it's going to go all the way back up. It just bounces. But the thing is that it's been hitting my targets to the T every single time. And the thing is, what it gives me is it gives me a target to take profit. Because sometimes traders, we don't know when to sell or we don't know when to close the position. Correct. So just trading within these balances allows me to have those targets ready. And I will set those targets. If it hits, it hits. I'm out. And I'll look for another trade afterwards. Some people want to hold it. Some people would just want to hold it too long. And sometimes I am at that fault too, where I want to hold too long, or I have a level where I was like, it's going to hit. It's going to hit. It does hit after maybe 2 hours, and then by that time you're just stressing out. So, base hits, man. That's right.
Agree. The hardest part of a trade is knowing when to get out. It's by far the hardest part of a trade. Getting in is the easy part. Getting out is very, very difficult.
Yeah.
To do. So
and that break-even button has helped a lot of times just to get out.
Say that again, True. One more time. That break-even button has done what?
It just helps you get out without having to think. Because sometimes the biggest thing is that traders will freeze. The moment you freeze, you need to get out. Because once you freeze, now all your choices have been is gonna go to shit. It's just gonna be really bad. So
you ain't lying. That's real talk right there. What are True's socials? Pinned to the top of the chat. Robert, thank you so much. Got his Discord link up there. Jump in there, follow the man. I mean, we're looking at a guy who went 48 for 48. That's mind blowing. That's awesome trading. Awesome trade. All right, True. So let's talk about FOMC. I know you're not the biggest fan of FOMC. Well, you keep an eye on it. If you do take a trade, what are you looking to do? Are you looking to fade extremes, or are you just looking to get with momentum in something, depending on what he says? How do you attack an FOMC day?
So, once data releases, I let it run. I let it do its thing, right? Once it cools off, and then 30 minutes later, Uncle Pal comes on and talks, right? So that's when you listen to him. Now, again, when you're listening to him, especially like trading fundamental wise, all TA is thrown out the window. Doesn't matter. Levels doesn't matter. Okay.
Yep.
What I do is that once I listen to him and what he has to say, I don't take it to heart, because we could interpret it as good news or bad news, but the market will think otherwise. Wherever big money goes, that's where I follow.
Gotcha.
Okay.
Gotcha.
So
that's, reading price action. Yep.
Yeah, and now the big question is, so when do you get in, right? A lot of people will chase those big candles, but you don't want to do that. First off, if you're trading on a prop firm, you're more than likely going to hit your daily loss limit off of one trade if you're trying to get in. Now, if you let it settle, and the thing is, again, the next couple days after FOMC, those are the big days to trade. Because during FOMC, we're going to get maybe a 70 to 100 point move in one candle, right? But the thing is that after he talks, what if I do get in after he talks, depending on how long he talks, once it shows direction, then you can get in and possibly hold, because more than likely the rest of the day it will go in that direction. So if we do go up, I'll wait until we hit a certain level. And the level that I'm looking for a breakout or continuation up, again, on ES is going to be 50.46. If it stays above 50.46 after he's talked.
This is after Powell. This is post Powell. Not right now. This is post Powell.
Yeah,
gotcha. Thank you for clarifying that, because I was going to pull a trigger. Post Powell, 50.46, 50.47 half is a line of demarcation. If we can hold 50.47 halves post Powell, then you're saying it's up and away?
Yes. If not, it will rotate back down to 5,005 again. Because sometimes, it'll rotate, it'll go up and down, and it flattens out until he's done talking, answering all those questions. Sometimes we don't have the smartest people in that room asking questions, sadly. And, every time you hear it, it's just a headache. So sometimes I don't even listen to that anymore, because, you could get into a trade and then all of a sudden one of the reporters will ask something else and just wipes out. Candle would just go the opposite way because he says something. So again, I don't like to trade these fundamentals, especially when we talk.
Spoken like a true jaded trader on FOMC day. True has traded one too many FOMC days and has been burned by the dump.
I've made money on FOMC. I've made money.
I'm with you, man. Well, that press conference shit, that press conference shit, they're chasing their own tail. Spoken like a true jaded trader. I love it. I love the blind leading the blind is finding ultra here. Okay, I just want to read a quick point from the chat here from Donald Crowell. He said, remember that large institutions are prepared for worst case scenario, leading in rate increase. Obviously, we're not expecting that, but they're prepared for the worst case scenario, which would be a rate increase today. If so, we are going to look out below. Holy cow!
Yeah.
So relative to now, no rate change is positive news. So we're gonna have that mentality going into the FOMC. What do you think about that? True. We got about 3 minutes left here on power players, but what do you think about that sentiment?
Again, okay. So if they don't change the rates, I think we will still come down. Reason being is that right now we still have levels we still have some imbalances to fill down, and I think they're just going to use this as a catalyst to bring it down in order for it to go back up. Okay, we still have a bunch of earnings coming up this week too. We can't forget about that. We have Apple, we have Amazon. No, I think Amazon just came out already. We have Apple, and so that's one of the biggest things that we look for is like. Afterwards, we have earnings that are going to possibly move the market too. Just looking at the market now, we're coming down and just watch it 428.25. I'll be looking for a bounce there.
Okay, possibly taking along here. All right, guys, we got about 2 minutes left here. In power players. True, as always, people in the chat. True, would you ever be willing to come on to Power Hour and perhaps trade it up if you got time over there?
Yeah,
it'd be a great addition. Awesome. We'll reach out to you. I don't mean to put you on the spot there, but yeah, you're really great to work with. The people in the chat love you.
Always looking to get on.
Hell yeah! Well, let's do it. Robert, great stuff.
Yeah.
Mr. Topstep X, the guru, the master himself here. Robert, we got about 2 minutes left. Any tips for the traders that are using Topstep X going into an FOMC? What features would you recommend that they make damn sure that they are aware of and that they use going into an FOMC? The high volatility, uncertainty. What do they need to know with Topstep X going into this major event?
Well, if you're going to trade, absolutely 100% get your stop loss in there for sure. Where your entry is going to be, put that in there. I would suggest even breaking down your personal daily loss limit a bit. Ooh. So it doesn't just go back and, if you have a $1,000 daily loss limit and you have it set to like 950, you might get some slippage in there that you're not that you have no control over. So just back it down and play it safe. Risk management. We used to have the rules in Topstep where you couldn't trade through news events and releases like this. That was for a reason. It's hard. If you're not a really seasoned trader, they are super difficult. And with the theme of risk management, you can trade 22 hours a day. Like, why trade the worst possible 15 minutes of it? There's no reason for it. So if I'm a coach for you, I'm like, just step away, go get something, eat something, drink, listen to Powell talk, and watch the fireworks. If you're a seasoned trader and you know what you're doing, just make sure you have your risk under control and all your ducks in a row. Get that lockout button ready. Get your personal daily loss limit done, and hope for the best because it can be funny sometimes.
Buckle up, man. Well said.
For me, I'm just gonna hit the manual lock before 1 o'clock hits.
Hey, if you're up $4,500, I don't blame you. I don't blame you at all. True, shout out to True. Shout out to his crew, to Donnie and Ronnie and Mrs. True in the house right there. They're making lunch. Hopefully it's going to be delicious. Robert, great stuff as always. Hey, coming up right after this, we got Top Quiz. And yesterday's Top Quiz was very controversial with the questions Eddie put out there. We'll see if he can make up for it today. Please tune in. Eddie and Alyssa coming up next. We got Top Quiz, FOMC Day. Stay tuned. Let's go.
Welcome to Top Quiz, and we have the delightful and intelligent and knowledgeable Alyssa. How are you today?
I'm doing well, Eddie. Thank you so much. How are you?
I am fine. My pride's a little hurt yesterday. They were the questions that I had where they were saying they were stupid questions, and I cried myself to sleep last night. But yeah.
Oh no.
There are no stupid questions. Just stupid people.
Oh, it'll work. Actually, two of these questions are market related, TopstepTV related. And then the other two questions I got from, are you smarter than a fifth grader? So I expect everybody to get at least two if you're smarter than a fifth grader. But so that name's coming in here. But I think get them in quick here. We're going to start this party. Do like pink. Let's start this party. Fire it up.
What?
Let's get this going.
What?
Okay, we will get this going.
Let's do it.
Top step quiz. Let's do this. Now remember, you got to get 3 out of the 4 to qualify for the random pick, and Jack will do that. May 1st, May Day Top Quiz here. And here we go.
Comes.
First question. Who joined us for Fast Markets today? Was it Queen Elizabeth? Was it Janet Yellen? Was it Deeyana? Was it Taylor Swift? Oh my, what a hard question.
Oh my goodness. I was hoping it would be Taylor Swift. Was it Deeyana?
Yes, it was. Thank you very much. Deeyana is a correct answer. And oh my God, how do we fake those other people out? Okay. 35 say Janet Yellen, 10 said Taylor Swift, and 11 said Queen Elizabeth. Yes, the ghost of Queen Elizabeth will be with us next week. All right. Next question.
Well, let's see the leaderboard.
Oh, the leaderboard. Yes. King Rich Lance Q1 E1 answer to is 10. And Kroghaster. Congratulations. That's our top 5 for the first question. All right, Jack, we got that second question here. What is the futures contract symbol for the Mexican peso? Is it the 6YM? Is it the 6BFF? Is it the 6TCO? Or is it the 6MM?
Well, Eddie, I don't know. I love the one that says BFF in it. So let's go with that.
It is 6MM. And I gave a tip, a little hint in chat today. Know your currency symbols, but that's okay, Alyssa.
Wrong answer.
Eagle Eye Tiger. We got Barely Sober, King Rich, Mavan 0001000001, and Guarva, one of our buddies in the chat. All right, so we got the top 5 there. And Jack, are we ready for the next question?
Always.
The answer. Always. Thank you, Jack. All right, here we go. Are you smarter than a fifth grader? What's the name of a place you go to see real animals? Is it a family reunion, a local pub, the Gap, or the zoo? Oh my, this is a tough one.
It's definitely the local bar or pub, Eddie, but it's all.
There are animals there, but real animals. And it is a zoo. There you go. All right, congratulations. We got a lot of people. Over 1,000 people do know where to go to see real animals. Yes. All right.
What?
Yes, real animals. All right. We have got our next. Oh, let's take a look at the leaderboard. I keep forgetting about that. I really see no bitching in the chat today. Eagle Eye Tiger, kicking butt, Barely Sober, King Rich, Combine Sniper, and Decisive Koala 97 is our top 5. All right. Combine Sniper moving up in the top 5. And we have our last question. What do you got for us, Jack? All right. A yard is 50 feet long and 20 feet wide. How many square feet is that? Is it 100, 1,000, 700, or 6? 50 by 20. Wow. How many square feet?
This is cruel to do to me. I hate this a lot. I'm going to go with 1,000.
All righty then. 1,000 is her answer. And what do we got here? Yes, you did very well. It is 1,000. And yes, those that picked 6, I would check your backyard because it probably has run away by now. So check that out. But there you go. There was our 4. Let's see who has won this top quiz. All right, the podium. Number 3 here. Tick, tick, boom. Good job. And we got Decisive Koala moving into 3rd. And our number 1 here today is King Rich. 4th and 5th, we got that, is Lance. And what about Bob, maybe? So congratulations. Today's Top Step quiz for May 1st, 2024. So I hope everybody had a good time. Alyssa, thank you very much for joining us. You did very well. Very proud of you. And did you have a good time?
I had a great time, Eddie. I am glad that I am at least as smart as a 5th grader. Proud of that. Going on the resume. Thank you so much.
Thank you very much. All right, folks, stick around here. We do have coming up here next after Top Quiz. We got Shoulder Tap with Jack and Mick. Coming up next. We'll be right back.
Hello, everybody. Welcome to the Shoulder Tap. I am Jack, joined by Mick. No callers today. It's Wednesday. Mick, how have you been doing?
Not bad. It's been a busy week so far. Definitely thinking about upcoming vacation time potentially. But exciting day today with the FOMC statement coming out this afternoon. I'm sure you guys have been talking about it. I know they're looking to keep rates the same at 5.5%. So we'll see what happens in about 58 minutes.
Yeah, we'll throw that countdown timer in once we get to group coaching. But for the love of everything, please be aware that at 1 p.m. that's coming out. And then we got Mr. Powell, the chairman himself, talking a little bit later. We'll be doing that live on the stream. How folks trading today ahead of the FOMC?
It's red on the boards today, Jack. Red on the boards. Just like I mentioned yesterday. Not a great week so far, but there's time to turn that around, and FOMC always creates opportunities, in the trading hours to follow, as well as the days to follow and weeks to follow. So, we'll see what they do, but it looks like they're forecasting they're keeping rates the same. We've got some people down money this morning. Nothing too bad, though. We do have some people up money on the day. Before I rattle off some, decent P&Ls that we do have out of our live traders, wanted to mention, today we're going to be closing one of our live accounts. It's actually the first live account we're closing in like 6 days, so that's actually pretty good. During that same time, this week, I should say, we've called up 7 people from XFA to live. Only one live account closed, so that's a net add of 6 people to the prop firm, which I always like to see. There were a couple weeks ago where we had net losses, people losing their live accounts, but we're back on track as of the last couple weeks, and we're having a good week so far this week in regards to that. P&L aside, like I mentioned, we got a lot of red on the boards today. But for people that are in the black or up money, we've got Drayton up 5,200, Isaac Rivera up 3,000, Corey's up 2,200, Dakota's up 3 Gs, Howe is up 3,700, Omar is up 2,600. And nice work on the house account today, everybody. Seeing that that's up about $3,900. So nice collective effort, good money management, good trade management. Happy to see it.
Thank you. We need that positive reinforcement, Mick. So good to hear.
Yeah, I mean, I didn't really like what I saw yesterday going into the close with the trades yesterday, but it's a collective decision to do that. I'd actually like to participate maybe in one or two of those trades as we go forward. But it's always good getting different perspectives, and any trade you take, you guys know what you're doing, but making sure that you've got a few stars aligning before you put the trade on, and always have that risk and reward measured out ahead of time.
Before you get to your shout outs here, I was just going to ask, you were talking about how we're getting chopped up this week, kind of a lot of red on the board. Do you get the impression that when the market's selling off, are our traders generally kind of a bullish bias, which, I mean, you should have that in general, I guess, but are the down weeks a little bit harder on our traders?
I actually don't think so. I mean, I think that from what I've seen, current state and over the years, traders are really nimble. I think there are a number of people that realize that, markets typically tend to fall faster than they rally. So I know there's always bears that like pouncing on the downside movement. I see a lot of people selling things in the hole and buying new highs, but no, Jack, I haven't really picked up on that too much. I really haven't. I think we've got, a nice blend of people who can work both sides of the market. But like you said, over time, the market, historically has gone in one direction. So.
Right on.
Yeah.
All right.
Let's get into it. What do you say?
I am prepared. Let's do it.
Okay. All right. Let's get the card up for Venkata. I actually was very hopeful to give a shout out for a nice P&L today on Venkata, but turned a $1,900 winning day, $2,000 winning day into a $1,000 losing day today. But this is still a shout out. So Venkata's been in a live account for 52 days, and over those 52 days, average daily P&L $200. Freaking love it, Jack. This is someone who's been in the account for a while. I always say I'm impressed with these low singles hitters. I wouldn't exactly say that Venkata is a singles hitter, but over the course of the 52 trading days in this live account, it's kind of panned out to an average daily P&L of $204, but they've been on both sides of that. So a couple metrics here that, aren't really, you might question, how are they profitable? Because they've only got 29% winning days and 50% winning trades. They're doing about 1 to 5 contracts on a per trade basis. But what I'm seeing here is kind of not so much the per trade money management, but the per trading day money management that's really allowed Venkata to be profitable. Again, I mentioned today, I didn't really like the intraday money management being up $2,000 riding a 5 lot out to going down 1,000. That they had a $3,000 swing in about 10 minutes this morning. So that was painful to watch, especially after I already drafted the card up for them to talk about them. But best day they've had in this account, it's only 29% winning days. Best day is just shy of $7,000, where their worst day is only $1,500. Venkata's account size, the 50K account size with the $1,000 daily loss limit, has been super, super beneficial for them. And I want to highlight something around that, Jack. Of the 52 days in this live account, they have hit that $1,000 daily loss limit. This is a little, I wouldn't say it's disgusting, but it's kind of an interesting metric to share. They've hit their daily loss limit 36 days of those 52 days, but they're capping it at $1,000. So that's a smaller speed bump than a $2,000 or $3,000 daily loss limit that comes with those 100 and 150K accounts. So best day, way bigger than the worst day. Average winning day is almost $3,400, where the average losing day is only $1,500. I don't know if that's accurate. It's probably average losing day is only $1,000. Sorry, I put that in wrong. That wasn't production. That was my bad. I took their worst day and doubled it up with the average losing day. I'll take that one. But with these 50% winning trades, doing the 1 to 5 contracts, they're averaging 5 trades per day. I like that. It's relatively, selective for someone who's trading on a shorter time frame, because those hold times for both the wins and losses are under 20 minutes there. Average winning trade, just under $500, while the average losing trade is just under 800. So there's something to be said about the risk reward there. It's an area for improvement. It's worse than 1-to-1. I find it very difficult for someone to be successful over a long period of time if their risk reward is not better than 1-to-1. However, like I said, they're doing a good job on the daily management, and they're still profitable to the tune of $200 a day on average. So I'd like to see risk reward improved. I think trade location, there's room for improvement there. For someone who, even if it's just $1,000 daily loss limit, if you're hitting your daily loss limit that often, you're probably not finding the best trade location on your entries. I can't say that for certain, but outside looking in, that's kind of what I'm thinking. And then money management. Okay, we had a Ron Burgundy thing here. That was a typo on my part. But the money management is kind of where I think they have an area to improve. Today was an example: $3,000 swing being up $2,000 to down $1,000, and then the risk reward. So it's all kind of packaged in. But money management, not Monday management, is an area for improvement.
So
on a per trade basis,
judging by this card, and to make the math sort of work out here, I get the impression, to put it nicely, that Venkata is maybe what we would call accumulating in a zone. I'm taking that from looking at the average loser versus the average winner. So if you really had, if you were trading the same stuff size every time or something like that, and you had 50% winning trades, the math doesn't work out that an average winner would be so much less than your average loser. So I would have to assume what's happening is he's hitting into that 36 daily loss limits with the full 5 contracts that get executed as one trade. I mean, if you're going to put up $3,400 or something as your average winner, and if you're going to trade 5 contracts too, I mean, $1,000 is even a little tight, right? I would probably not be trading 5 contracts in the ES with a $1,000 limit. In fact, I would not. But
no, you can't. You'd get stopped out. Those hold times on the losers would be much shorter, like we talked about before. For the people that go all in on their max position size, a couple of weeks ago we featured some people that spent 20 short seconds in their trading day before hitting the daily loss limit. So, like you said, accumulation in a zone is definitely what we're probably seeing here with the trading size that they're doing and the $1,000 daily loss limit.
All right, we'll keep it up. 52 days at $200 a day is pretty damn good. So you hit it today, sit out FOMC, and come back tomorrow.
Yeah, the forced bench before FOMC. Did you guys ever really do much trading around FOMC? You probably did.
Well, we were absolutely not. That was one of the few things where it would be decreed from on high that we had to be flat because, those spread positions, you have a bunch of it on. You don't want to get in a situation like that. After FOMC, we would let it shake out for a minute, 2 minutes. And then there were huge opportunities because things on the yield curve could get so far out of whack that you could sell small amounts of, the old cash fly or whatever and make a pretty penny. But also you had to be very careful about puking if it's not going against you because they can just go and go and go. So even at that level, we were not trading certainly through it or just right after.
Got it. Okay, that makes sense. Yeah, we as traders look to find inefficiencies in the market to capitalize on those. That's where the money comes from. All right, I want to move on to another trader. This is another shout out to let's pull up Michael's card. I know we featured Michael earlier on in April. I wanted to bring him up again today. He's someone that's just kind of low profile, not a big swinger at all. Really good at the money management overall. I'm going to critique some of the intraday trading here a little bit with the risk reward, but overall, on a daily basis, similar to Venkata, this is really good stuff here. So they are putting up 55% winning days, Jack. Let me find my notes here. 55% winning days. The best day here is just under 2,500. The worst day, again, getting saved by that 50K daily loss limit. It's $1,000, $1,100 on the worst day, to be specific. So I really like that. The account size traders go with is very important, and I constantly am seeing positive examples of people going with the 50K account as opposed to the larger accounts. I know 50K is one of our more popular account sizes, whether that's pricing or risk tolerance or not. I'm always happy when I see someone trading well in the 50K because I know they've got that downside limited to $1,000. And then, for someone like Venkata, Michael, they are still having, best days of $2,500 or his average winning day of $1,014, where that average losing day is only $751. So really good money management there. I say it a lot, might get boring that you keep hearing this from me, but we as traders need to keep our average losing day smaller, or our biggest losing day smaller than our average winning day. It's extremely important. Like we were looking at with Venkata, you don't have to have a high number of winning days. You don't have to have a high percentage of winning trades as long as you're managing your money on a daily basis and following that golden rule of keeping your losing days smaller than your average winning days.
Yeah.
But back to Michael. Go ahead.
Go
sorry.
ahead.
No, I was just going to keep my ramble.
No need to ramble. I was just going to talk about the psychological difference where you can do a ton of damage with 5 contracts, especially, you're trading the ES or something like that. $250 a point. But I think psychologically it's easier too to keep because you're limited to that $1,000 loss. I don't know about you guys out there, but psychologically, it's not super hard to make $2,000 or something like that. But I start getting goofy, even if I'm trading 150K combine, it's like making $9,000 or something, or whatever, like double the loss limit is there, is a little bit tougher. And I don't know why. It's just purely mental.
Oh, it's absolutely a psychological thing. I mean, we could break that down a little bit. I mean, I think myself, it's more daunting to put yourself in a position where you take a larger loss and you're like, oh, I've got to make that back up. And technically, like, you want to make it back up. Through trading, you should make it back up. But it seems like it's always such a larger endeavor and more of a hurdle to, make back $3,000 as opposed to $1,000. And just because, you put up $3,000 in a day doesn't mean that you're always doing it, or that the market's going to give you the opportunities to actually, take down that much money on your winning day. So it's always good to keep those contained. I know how hard it can be to find yourself in a hole from some large losses and try and dig out of that. Usually takes a long time. So instead of going the hard road, having a bunch of money to make back, limit the money that you're risking and then just keep trekking on. $1,000. If you're, average winning day is $500, it's not awful to have to, have two $500 winning days to make back one losing day. But we certainly should be framing our trading out to and positioning ourselves where it should take 2 or 3 losing days to wipe out your average winning day. But, for a lot of these traders that I see, that $3,000 daily loss limit comes all too often, and they don't have the winning trades of $6,000 or more in their account to really justify being able to do that safely. Someone like Dakota is a good example. He can put up some big winning days. So, I think if he has a large losing day, which happens to him, I don't think it's as intimidating for him to, say, oh, this was a big losing day. But I know if I string together a couple of good winners, my average winners or something, I'm going to be right back to where I was. I mean, we saw it the other week. He had a $30,000 losing week. And then he came back and he made $32,000 the following week and made new equity highs in his account, which he's sitting right under. So that's kind of my piece there. Moving back to Michael, though, if I may, Jack, unless you wanted to add to that.
I was just going to say, shout out in the chat. Shout out if you're from Ireland, by the way. I see Michael's from Dublin. My wife lived there for a long time.
Did she go to school there?
Irish folk. She went to college there and then stayed for like 3 years after until her visa ran out. So she was there for maybe 7 years.
Good for her. Good for her. I've got family in Ireland. It's been a long time since I've been out there and seen them though. But Dublin's beautiful. Ireland's beautiful. Great people too. All right. I said I was going to critique Michael a little bit here on an intraday or on a per trade basis. Despite being profitable, risk reward needs a little work. They're taking small bites out of the market. S&Ps, their average winning trades $100. So on a one lot, they're only taking a point out. NASDAQ, they're looking for 5 points on the winners, but they're risking 6 points to make 1 point, at least in the S&Ps, or risking 7.5 points to make 4 points in 7.5 to make 5 in the NASDAQ. So that's an easy tweak. They're probably using bracket orders, just make an adjustment there. But I'd like to see that. And I think if we could do that, we'll see higher win rates. Average P&L should go up. But, there's not a lot to say to someone who's profitable. And Michael's been in the live account for 20 days, which I think is, a decent chunk of time. So look at the risk reward. I need to pull up the trade report to see the hold times here, Jack. But I said hold times, they're only spending 8 minutes in their winning trades, and they're a little bit more patient with the losing trades, 14 minutes in those. So I'd like to see, maybe an area to reflect on could be that. But again, when it comes to these hold times, what I see on the trade reports is only the end result. It can't really speak to, of those 14 minutes that they're holding their losing trades. I don't know if they were, if they were in the money for 10 minutes. But as it turned out, they're spending a little bit more in the losing trades. And then I think there's a little area for them to be more selective here with their trading that could help the win rate improvements.
Yeah,
that's kind of it. This is a bit of a vanilla trading card, but and when I say vanilla, kind of like bland, but that's actually not a bad thing when it comes to trading. Would you back me up on that, Jack?
Consistency is sexy. That's what we say, or at least what I say.
That's what you say. I'll let you keep that term, but I might use it. Consistency is sexy. And then last thing here, in the 20 days, they've taken a couple payouts too, which I love, about 20, almost $3,000 in payouts. So it's good. They're chipping away. They're taking money out of their account. They're maintaining a nice, healthy account balance for their risk tolerance. And it's all working here. This is good. So nice job on you, Michael.
Aaron Gabra, let's go to the next.
All right. So I had a couple shout outs here. We're winding down on time. I have a shoulder tap for one of our live traders. Let's pull up Karen's card. All right. So I'm going to scold Karen here. She has been, I will first give her a compliment, 33 days in the live account, but the performance isn't looking too good. On average, she's losing $400 a day that she trades. She's been with us for a while, so I would like to, think that maybe she wouldn't be doing some of the things that she's doing. Where I really want to scold her is she came into today with a $4,200 balance in her account, and she risked $2,700 of that. She might even be down a little bit more right now, but when I was putting the cards together, that's a huge percentage of your account to risk for someone in a 150K with a $3,000 daily loss limit. If you got 4,200 left, you shouldn't be risking close to $3,000. You really want to split that up. And I always talk about giving yourself as many swings at the plate. If I were Karen coming into today with 4,200 in my account, I'd probably be going through the thought process of, I'd like to be able to ensure that if I, have 10 losing days in a row, I still have, another trading day to come back and make some money. So Karen really should be, looking at more of a $400 per day risk right now, and not, as Hoag says, risking thy whole wad. $2,700 on a $4,200 account. That's a big no-no. Not something we want to do.
Yeah.
I could see that over, the 33 days trading in this account not being profitable, someone might want to go for a YOLO and see if they could take a big number down. But the trading here hasn't been stellar. We're only at 42% winning days, 40% winning trades. They're trading 1 to 3 lots. I've got in my areas for improvement here. Traders, if you're losing money every day you're trading, especially over 30-something days, and you're trading 1 to 3 lots, you shouldn't be trading 3 lots. You shouldn't be trading 2 lots. You got to be 1 lots. If you are not consistently profitable, or if you are consistently unprofitable, you got to be trading your minimum size. Maybe even scaling down to the micros too. So
I have some breaking news here too. The chat is informing us that this is likely an Indian male name, pronounced Karan. Am I right now? We want to be accurate here.
Karan.
Chat's got
Thank you for the corrections. Okay. All right.
We read the profile. They don't
San
have
Jose.
We don't have
nationality is not on
the profiles. Yeah.
Yes. Oh, I do see it's a him. My mistake, Karan. Okay. All right. Well, I've screwed up a couple times today, Jack. My apologies. Glad everybody's on top of it. Keep me in line.
Yeah, if you're a dude or a dudette, what Mick said still applies to you.
Yes.
Still applies.
Yes. The scolding is still going to stick, Karan. All right. So
I love this chat.
Yeah, that's fun. I wish I could have it up while we were doing this, but I think I would get more distracted and make more screw ups. So they're taking 7 trades per day. Short time frame holds. On a per trade basis, the risk rewards about 1-to-1. They're taking down 295 on the winners, only risking 240 on the losers. And this just kind of leads me back to where I kind of started. There's areas for improvement. They should go to 1-lots. Keep the losing days smaller than the winning days. Their average losing day is almost $1,500, while the average winning day is only $1,000. Their worst day in this account was 3,300. Hitting that daily loss limit with a little bit of slippage, whereas their biggest winning day was only 3,000. And I don't think they really had. While that 3,000 was their best day, Jack, I do not think that there were very many days that were large P&Ls either. $2,000, 1,100, 1,800, 1,900. Yeah, I mean, that was kind of a pop a shot on the 3,000. So, the average winning day, is quite a bit smaller than the average loser, and then smaller than their worst day. So, it's kind of glaringly obvious the areas for improvement here and what needs to be done. I would hope that Karan would make some adjustments and, try and keep this account a little bit longer. There's always hope to turn it around, but they're going to have to stick with one contract and not risk that whole wad tomorrow or the days to follow.
Yeah, 1 lot. There's nothing wrong with that. Once again, back to consistency being sexy. If you can do it with 1, you can do it with 2. If you do it with 3, you might not be able to do it with 1 again. So, and I know it's expensive out in San Jose, Karan. So protect that wad. All right.
Yes, protect thy wad. Okay.
Well, I think that's about all the time we got for today, because we're going to the group coaching. Group coaching will be abbreviated today because we want to get transitioned right into our fearless leader, Daddy Powell. Hi there, Reva. It's coming out at 1. He's going to be talking. We're going to have a good time breaking that down. But Mick, thank you for tapping shoulders and taking names. And we correct all the problems we can. Thank you, chat, for helping us with our linguistics. We get better, I think, from time to time. All right.
Nice being on with you, Jack.
Yeah, absolutely, Mick. Always a pleasure. Let's go hang out at Skyride Bonavino sometime. It's getting to summer.
Yes, please.
All right. That's it for Shoulder Tap. We'll be back with group coaching just after this.
Good afternoon, friends and traders. Welcome to group coaching. You made it. Thank you for submitting those questions. We had a ton of questions left over from yesterday, so we're going to start with those. You're staring down at Mr. John Hoagland there, John the Goat Hoagland, I should say. JD behind the curtain again. I'll be asking the questions, and Hoag's going to be answering them. Hoag, what's up today? How we doing?
Doing fine, man. Doing good.
We got the house account in the green. Everything's looking pretty heading into FOMC. Jack did mention we're going to do an abbreviated session today. We're going to cut it at around 12:55. Bring Andre in. Whenever KV gets here, we're going to bring him in too, and we're going to be talking through the FOMC announcement. We'll have the Fed Chair press conference going on live also, so stick around and stay tuned for that. And maybe we'll throw on a few house account trades later also. But since we're cutting early, what do you say we just jump into some questions, Hoag? You feeling ready?
Let's do it. All
right. Starting yesterday, a question from Chase. Chase says, I'm usually right about the direction the market's headed, but my entries seem to be off because I'll hit my daily loss limit or stop loss, and then the market turns around. Always hard to watch. Any suggestions? Timing is pretty crucial, as well as, you saw today we were trading the house account. We put a lot of stock into good trade entries today, which helped us out a bit. But as far as timing goes, what do we have to say to Chase about timing the market?
Well, Chase, first of all, thanks for the question. And know that you're not alone. This happens to traders all the time. I think the key is not to get upset about it and just go ahead and look for your next opportunity. What I'm reading from this question, it seems like that there's situations where you're getting into a trade in a direction that you believe is going to be true and is eventually going to prove to be true, but you're not really very careful with your trade locations. And as JD was just talking about, getting into a trade, the location and the timing are all important parts of getting into a trade. What I would suggest for you, Chase, is instead of, picking the direction and just jumping in, take a look at where price has to advertise or auction to prove the trade wrong. Where is your stop level going to be placed using technical analysis, not just a standard, stop, level, not a static stop level. Take a look and say, okay, I think the market's going to be going lower. Where does price prove that theory wrong? That's going to be your point of invalidation. That's where probably you're going to be putting your stop, and then start looking for your entry and try and get in to the trade in the direction you believe that the market is going, as close to that point of invalidation or that stop level as you can. So that's going to do a couple of things for you. A couple of times, probably quite a bit, you might miss the trade, and that's okay. I'd rather miss the trade than get stopped out on it because I had poor trade location and then have to watch the trade play without me. But the other thing it's going to do for you is it's going to put you in better trade location where you're better able to manage your risk, so you're not hitting your daily loss limit or your daily stop loss or whatever it is as often, and even if you do hit the limit on that trade, hopefully the loss will be small enough to where you'll be able to continue to trade, further into the session. So think about the trade location, think about where price has to advertise to prove you wrong, and then work to try and get your best trade location. It's going to trim your risk, and it's going to expand, hopefully, your potential profit target. Great question, Chase.
Awesome. Thank you, Chase. Checking in on the chat, we got Jason in there. Jason was asking yesterday about market profile and Jim Dalton's class or summer course. And he's in the chat saying that he's signed up for it. So good luck with that, Jason. Share your progress with us as it's going on.
Definitely. I want to know how this intensive is. It's going to, it's probably going to be one of his best because, like I mentioned yesterday, he's got a brand new book. The book won't be out for a year, but you're going to get a real good look at some of the potential changes in the theory of market profile that Jim has been working on. That's going to be a great one. I definitely want to know how it is.
Yeah, I might look into that myself. We were talking about it yesterday. It sounded really interesting. As a guy learning the profiles myself, I never really started looking at the profiles until I started working with Hoag, and just learning a little bit more every day, slow and steady. But anyway, let's get going. Cameron, this is from yesterday. We don't know how Cameron finished the day, but Cameron said, I'm $80 away from hitting the $1,000 daily loss limit. How should I approach my next trades? I think the first thing you got to do is scale down, right? Get into those micros.
Yep. Yeah. Reduce your risk so that maybe you'll be able to at least trim some of those losses. I applaud you, Cameron, for asking what you should do here. I think a lot of people would just lean on that reset and just start the day over. But you're going to be a better trader, Cameron, if you do that. If you size down, go down to the micros, dig as much out of that hole as you possibly can, and then start the next day. That's how I would approach that. If I was, I was $80 away from hitting my daily loss limit, I would go to the minis or micros, I should say, just so that I get to continue to participate. And, if I can dig out a couple $100 away from that $1,000 daily limit, great. And again, I think you'll be a better trader for it. Once in a while, I kind of go back to this analogy. I wanted to learn how to play the guitar. So, and I was a drummer and I knew guitarists. And so I asked, one of the guitarists, I said, okay, I'm going to buy a guitar. What should I get? Should I get an acoustic guitar and a steel string acoustic guitar, or should I get an electric guitar? And he said, you should definitely get a steel string acoustic guitar. I said, why? He said, because it's going to be harder to play. Your fingers are going to get real sore at first. You're going to build some calluses on those fingertips, but it's going to be harder to press the strings down to the frets. It's going to be more difficult for you to play. It's going to make you a stronger player if you learn to play on an acoustic guitar. So I did that, and it's similar to what we're talking about here. Instead of just cannonballing it and hoping you get a big win to dig yourself out of that hole, size down, trade your way out of it in small ways, and you'll be a better trader for it. So in this case, Cameron, I would definitely buy the steel string guitar, acoustic.
Cameron, if you're in the chat, give us a heads up. Let us know how you finished the day yesterday. That question is a day old, so keep us up to date. All right, next up. This name gave me a chortle. Seymour Butts is submitting questions. Remember that old joke? What's your favorite book?
Yeah.
Under the Bleachers by Seymour Butts. Seymour wants to know what your favorite hoagie is. What's Hoag's favorite hoagie? Getting personal here.
Yeah. Well, I've always had a penchant for a nice Italian sub with some nice hot giardiniera peppers on there. There's a Italian deli pretty much right behind the house. They do a really nice job, but Graziano's, Bari's, Fontano's subs. And to me, a sub's a hoagie is a sub, but
yeah, for sure.
Thanks for the question, Mr. Butts.
You're definitely speaking my language there too. Some cold cuts, a little spicy giardiniera. Boom.
Yep.
All right. Thanks for the question, Seymour. Moving on. Gara says, what is the best when you look at the market profile weekly level? Take only cash sessions or all Globex sessions? What's the best way to look at the market profile? Cash session or the entire trading session? I know you like to cut it down, don't you?
Yeah, I much prefer the regular trading hour sessions, but there can be kind of good nuances or at least some good information coming from adding an extended trading profile between the regular trading hour sessions. So if you'll go to my screen here, I can show you what I'm talking about. So this is the regular trading hour profiles. Here's today's regular trading hour profile, yesterday's regular trading hour profile. But I also have one here that I'll add the overnight sessions. So this is last night's overnight session. This is today's regular trading hour session. Here's yesterday's regular trading hour session and the overnight session above that. So what I'm really focusing on from the overnight session is usually going to be at the point of control, the high and the low. Point of control and the high and the low. That's really all I'm gleaning from the overnight sessions. Most of the time, occasionally there's something important, like if the all-time or recent high occurs in the overnight session, I find those tend to be revisited. So I like to know where those are. That's a really good question. There are people that use a lot of composite profiles, which, you may have a whole week's information in one profile. I like to look at those for longer time frame, for longer time frame information, but I find that it misses a lot of the detail you see in the day over day profiles. Great question, Gara.
Awesome. Thank you, Gara. Checking in on the chat again. We got someone that doesn't know what Jardinere is, Hoag, likely because they're not from Chicago. But anyway, it's a shame. I always feel bad for people that don't know what Jardinere is. All right. Jimmy V says, how can you help me to have a good trading plan and to stay disciplined? Well, another timeless question. Trouble with sticking to your plan and staying disciplined. Just baby steps, right?
Yeah.
Try and keep that consistency each and every day.
Start simple. I mean, you can base a trading plan off of VWAP alone, or a couple of moving averages alone. If you're looking to put a good trading plan together, again, start simple, and then trade the trading plan without any expectation for performance. And I say that because if you don't have any expectation for performance, you're much more likely to trade the actual trading plan and not optimize it. If you have a trading plan, if you don't trade the trading plan very strictly to how it's supposed to be traded, you're never going to find out if that trading plan is actually going to work for you over the long haul. And if you do that and you find that the trading plan is working for you for a period of time, that should encourage you to stay more disciplined to that trading plan, because you've got a trading plan. It has been proving to be profitable over time. That should encourage you to say, okay, I didn't focus on performance and I did great. The minute I started thinking about performance, all hell broke loose. What changed? What happened? Well, you started focusing on performance instead of the trading plan. So, and I say this like it's easy, Jimmy, but it isn't easy. It's not easy to do that. I mean, everybody thinks that they're seeing something shiny over there, or this doesn't look like a good trade, but it is part of my plan, but I don't like it, so I'm not going to take it. And that ends up being the trade you should have taken, because that ends up being the good one. So, put together a simple trading plan. Again, it could be based off of VWAP, Bollinger Bands, whatever the tools that keep it simple rules, take the rules without expectation for performance, see how it goes. And, if you do end up putting a trading plan together that's working, hopefully that will help you be more disciplined towards trading that plan. But it is, again, never easy. But start simple and go from there.
Perfect. Thanks, Hoag. Appreciate it. Next up, we have John, who is JD in the chat. Not this JD, but the other JD. See him in there all day long. Always contributing. Thanks for submitting a question, John. JD. All right, JD
Thank
wants to know, how do we import trades in Excel sheet from TopstepX browser? That feature is not yet available on TopstepX. It is on the roadmap. If you're on the TopstepX platform, you should know where to check the roadmap. It's on the left-hand side of Hoag's screen there, that question mark. Just click on that and maneuver your way over to the roadmap. And you'll see what's in the pipeline, what we've done, what's coming up. Pretty simple. We're trying to be as transparent as possible with new features on TopstepX, so keep checking in there to see what's happening. Thanks for the question, John. All right, next up, Mike H.
Thanks, JD.
Yep. Oh, anything you want to add there, Hoag? Sorry.
No, that's good. Perfect.
Cool.
Thank you.
Next up, Mike H. wants to know, what is your advice on dealing with trading depression? I've never actually heard it referred to as trading depression before, but it sounds like Mike's just probably in a little slump, huh?
Yeah. And, depression is usually more than just what's happening with trading. I've had my opportunity to work with a few different trading psychologists, and some of them have suggested that I've kind of been in and out of depression at certain times while I was working with them. And it can be debilitating. So, I mean, Mike, if there's other things going on or that outside of trading that are creating these feelings in you, I really hope that you would take the time and get yourself some help. There were times when, I was given antidepressant drugs and they had the opposite effect on me. So I can't take those. Mike H., start doing something good for yourself every day. Take a walk, get in shape, eat right, take it easy on drinking, take it easy on any other recreationals that you might be doing. Get good sleep, get your sleep cycle in order. And if the depression you're feeling is from trading, this is a tough business. It really is. There's really high highs and really low lows. Don't be attaching your self-worth to anything that happens in trading. If you make $10 million or if you never make $1, you want to be the same person. Don't attach your P&L to anything about yourself. Trading is what we do. It's not who we are. Mike H., I'm going to assume the best, and I assume the best in everybody, that you are a good person, that you care about people, that you care about yourself. And when you're not feeling yourself, you're not feeling good about yourself. And this is something I worked with. I mean, I've never been, one of those pick 'em up easy kind of guys. I've always had a little bit of a weight problem. I've always doubted myself. I've always had esteem issues. And when I was working at a prop firm and working with trading psychologists, one of the ways that they helped me work my way through that was they demanded that I went to the gym across the street from the Merc, the World Gym. Some of you probably would remember it. And that I had to work out for 2 hours a day, 5 days a week. And they told me they had spies there that were going to be watching to make sure that I was there and that I was actually doing things. So I did that, and I did it, every day, like my life belonged, like my life depended on it. I got in much better shape. I lost a bunch of weight, and I started feeling a lot better about myself. So I know how difficult it is to pull yourself up by your bootstraps and do something like that. And Mike, I want you to know that, this community, us, Topstep, everybody in the chat, we all care about you. You care about you. Pull yourself up. I know it's difficult. The last thing you want to do is go for a walk when you're feeling down and that kind of stuff. But, the more you can do to improve your self-worth, your self-esteem, the better off you're going to be. I found that one of the other things that they had me do was I had to at least once a month go donate time to people that needed it. Go work at a soup kitchen, buy an extra couple of sandwiches, and give them to people that are on the streets. Do something nice for somebody else. Seems kind of selfish, but it really makes you feel better about yourself and about the things that you're doing and trying to trade. Think about it. Think about how good it would feel, Mike, if you were a good trader and you were able to teach others how to trade. Take a friend and help him learn how to trade, and maybe he can be successful at it as well. So there's a lot of good things you can do. There's a lot of great things about you, Mike, and you got to believe that, and you got to do things to make yourself feel as though you're worthy of everything that you can make in this. So, I feel you, Mike. I've been up and down so many times in this, and I've dealt with the depression, and I've dealt with the highs and the lows. Eventually, things have a tendency to work out. So do good things for yourself, do good things for others, and you'll feel much better about your abilities here in trading. And we're rooting for you here, buddy. We are rooting for you.
Words of wisdom from Hoag. If you're out there, Mike, chime in the chat. Let us know how you're doing. We'd like to follow up with you. I think we got time for one more quick one. So I'm going to scroll down a little bit to line 52, Hoag. All right. This is relevant to today's trading activity. Kawa says, would you recommend trading range bounds since they are a lot easier to identify when you're wrong rather than trading with the trend and or counter trend, since that's a lot harder to determine when a trade is wrong? Well, I mean, you got to have a strategy for trading range bounds markets, right? They say markets only trend 20 to 25% of the time, 25 to 30% of the time, something like that. So that means 70 to 75% of the time markets are moving sideways and ranging. So it's just good practice to have a ranging strategy in your trading arsenal. Does that sound reasonable to you?
100%. Yeah, 100%. And you should also always be trying to develop a trading strategy or a plan for when the market is not ranging, when it is in continuation. Begin to recognize reversal patterns for reversion trades. This is all part of being a trader. And if you're a great range trader, there's absolutely nothing wrong with waiting until the market is range bound and then engaging in the market. Of course, you want to learn how to trade other market states. That can come in time, but there's nothing with being patient. Hey, this is not my day. It's a trend day. I'm just gonna watch or try and learn something. When the market becomes range bound like it is today, these are your cash register days. You're selling highs, you're buying lows. You're selling highs, you're buying lows. You're selling highs, you're buying lows until it breaks. If it goes into a trend, your hands off. This is what Dolby does. I mean, he's looking for short time frame ranges. He trades those ranges until they break. Nothing wrong with that. Nothing wrong with that.
Awesome. Thanks, Hoag. I'll give you one more. I'm setting up a shot. We got KV in the green room, and Andre is in there also. So I'm going to give Hoag one more question to answer for you. I'm going to set up the shot and then bring everybody in, and we're going to go over FOMC, all right?
I've got the dad wisdom up there too, JD.
Oh, cool. Why don't you just do that real quick? And I'm going to
sure.
bring Andre and KV in right after that.
Sure.
Awesome. Thanks, Hoag.
So, So today's dad wisdom is success is never final and failure is never fatal. Don't give up. Now, I thought this was him. It turns out Winston Churchill, I think, is actually credited with coining this, but this was something he always said to me, when in one of the hundreds of times that I quit He said, you can't quit, because you can't quit, you lose. Success is never going to be final, and failure is never going to be fatal in this. So just don't give up. There's my pops. Love you, buddy. And thank you for joining. We're going to have Andre and coming in here for the FOMC. We certainly want to keep an eye out and see what's happening in that in the release here at 1 o'clock. We are just a few minutes away here, just a couple of minutes away. We're going to bring in Andre and KV.
We've got Andre and KV ready to come in. I'm going to pull them in right now. Here we go, guys. Everyone's live.
Alrighty.
Hello.
What up? Welcome.
KV, you're on mute. That's $5, KV.
$5, KV.
$5.
Yo, $5.
Am I good now?
You are good now. Is this the new office?
Yeah, I haven't even been traded today because I've been fixing everything up, but yep, new office.
Excellent. Okay, very good.
I thought the best week to set up a new office would be FOMC week, just to keep myself away from trading as much as possible.
Yes.
Well, yeah.
What are we? Are we just going to be chilling? We just chilling here for FOMC? Or what are we thinking here? Do nothing?
Well,
wait for the press conference.
We're gonna watch and wait.
Watch along. 1 minute. I do have 15 lot queued up in case if they hike rates. I got a 15 lot queued up. Just saying.
Oh yeah.
We'll sell 15 on the market if they hike rates. Yeah. Is that a bad idea?
Imagine if they hike rates.
Can they spin that to be positive news, bullish for equities? Don't never underestimate the market.
Never underestimate the market.
How are you guys been doing this week, though? Good week so far?
So house account's down. Let's see, I don't even know how much we're down right now. A couple thousand in the house account. Otherwise, okay. We've been waiting all eyes on this right here. This is the moment. Here we go. Eddie, when you got it.
15 seconds left.
Let's go.
All right, eyes on the prize here. Remember, hope you're flat.
Yeah. The dome's a little thin.
Donald Krall says 17,650 NQ. Wait for it.
We actually have gaps in the S&Ps.
All right, coming in here right now, the interest rate decision, 5.5. No change.
Take your finger off the mouse, Andre.
Hands up. Yep, got nothing. Why? If they hiked rates, we would have made a fortune.
We're still in the range.
Yes, we are.
We're still in the range.
Yeah, we're not seeing that crazy volatility just yet. Okay, I mean it's been similar the past few FOMC meetings as well. We're not getting those crazy moves at the beginning. Let's see if this one is different, but it's not looking like it so far. Obviously, there's volume. Volatility goes up as well, but it's not like it used to be because it's, again, 99% expect and no change at this meeting and the next meeting and the next meeting. And I think things start to kind of be on the gray area during the fall period, September and November and so on.
All right, catching a bit of a bid here. New highs of the day. Almost there at the S&Ps.
What we're really waiting for is the press conference.
I got some more juicy juice. Feds slow the decline of the balance sheet by cutting Treasury redemption cap by $25 billion per month to $60 billion starting in June 1st. Also, risks to achieving employment inflation goals have moved towards better balance over the past year, as opposed to moving into better balance in the March policy statement. Back to you, Andre.
There's a comment in the chat.
Probability of probability of a cut in December. They got it priced at 73%. 26% no change. So kind of pushing it out to December. If we do cut.
December.
Lack of further progress towards inflation here.
Well, you got some headlines coming out? Yeah.
Yeah, FOMC flags lack of further progress towards inflation in the recent months, which, I mean, makes sense. we've been getting bad numbers on CPI and PPI lately, so
here we go.
They have to throw that in there as well. But yeah, no change, guys. I mean, no change, no big change when it comes to the FOMC move right now. We're almost where we were 2 minutes ago. So I think we're gonna keep this movement until Powell starts speaking, half an hour. But we shall see. Obviously, risk increased a little bit here because volatility increased, but we're not seeing a crazy change, which again, a little bit expected, right? I mean, we weren't expecting something huge either, unless Powell comes out with some comments in a bit, which might be interesting. But I mean, I think he's run out of words to say as well at this point.
I think he's running out of words and ideas at this point. Yes. Headline: traders see Fed cut rate most likely in November. They got a price of 58%. So you want to call that most likely in December? Or November. November. Scratch that. You want to call that
November.
Most likely? 58% likelihood.
November, yep, 58%. December is 74%.
Right. So
I mean, back a few months ago, if you guys go watch some other, Topstep live recordings, a few months ago, September was close to 80%.
Yes, we even had a July at one point. It was.
Yeah, we were in July at one point. That's right. Not the case anymore.
We were way off on that one, KV. We were way wrong.
Yeah, I mean, look, that's the thing with economists and analysts and all of these estimates are mainly wrong, and that's how they were back when we had COVID, when we were expected, interest rate hikes. It's the same way right now with the interest rate easing as well. It's no different. So just if you're a day trader, just follow the chart. Honestly, just try to block out the noise as much as possible. Coming back for the
if you guys don't mind, I just want to call somebody out in the chat. Casey, having heart surgery tomorrow. Good luck.
Oh,
good luck.
Yeah.
Sorry, I just wanted to put that out there. We missed that during group coaching, but blessings to you, and I'll be praying for you.
Yeah, we'll see you on the other side, man. And when you're in recovery, let us know that all is well. We'll give you some shout outs, give you some laughs, and we'll help with that recovery. All right, what do we got, Eddie? False alarm?
That was not me. But anyway, traders are seeing a smaller chance of no Fed rate cuts this year after this FOMC meeting. So, like you said, let's keep an eye open here. When Uncle Jay's going to be speaking, I think we're going to see a little bit more movement.
Oh, yeah.
Yep. I mean, no different than any other FOMC there, right, guys? Very, very rangy. If you look at the chart.
That's KV's Discord going off. KV, your Discord's going off again.
No, I closed the Discord. It's my mailbox. Oh my god, I have to close all the apps with you guys.
How many emails you get in a day, KV? How many emails you get in a day? My goodness, you are popular.
No, I swear to God, guys, I closed the Discord before.
All good. Just goofing around here. All right, starting to come off a little bit. Like KV said, we are in a range. Whipsawing around, volume 600 lot here. All right, S&P ladder, 600 lot on the 555 even bid, 5055, 600 lot on the bid right now. Let's see if they go hunt and seek that out and fill that sucker right there. Here we go. I mean, all the sellers are looking for liquidity. There you go. I mean, if they really want to sell bad, they can sell 55s, or they can work their way through it. We got 600 lot on the 55 bid.
Yeah, we had the new day high there on NASDAQ. As soon as that new day high got hit, we just fixed everyone back in. There is room to the upside, though. I mean, I would favor a move to the upside during Powell if the market reacts positive, though. I think the move to the upside might be a little bit cleaner than if we do get a drop. There's room, there's gaps, there's levels. But again, it will depend on the comments. But I would prefer a move to the upside. It might be a little bit easier to trade.
Yeah. So far, the equities at NASDAQ and the S&Ps have really only just closed the session gap from the low from the session from yesterday. I would love to see an opportunity to see them get to the base of the late spikes. And again, those levels, Andre and KV, are 17,660 in the NASDAQ and 50, 86, 75 in the S&Ps. I think that might be an interesting opportunity for an execution. If we even get that opportunity, who knows what's going to happen here when Chairman Powell starts speaking.
All right, we got 17,660 upside short. What was the S&P level, John?
Let's see here. Base lights 50, 86 half. 86 half. I always got to get my notes out here. 86 half.
86 half. Okay,
and,
cool. That was some nice
659, 17,659 in the NASDAQ.
All right, here comes that 600 lot. Here comes the 55. Let's see what happens when we trade around this. I hope everyone's watching. If you don't trade S&Ps, here we go.
Okay, all right. I'm watching to see if it trades out.
Yeah, let's see if it trades out. We got some more liquidity beneath it. Or if it's just boy, if they are spoofing the market in FOMC, you got some real large attachments to do that. You got some stones if you're going to do that.
Large attachments?
Large attachments. That's what they say in Formula One. That's a stupid phrase.
Oh, my goodness.
55s. We'll see. Yeah, John, let us know if those trade out. Or if the person's just trying to get the market to gravitate towards that for whatever reason. Spoofing, yep.
I'm watching.
Okay. Look around the other markets. Yep, still trading.
It's not tradable. Usually we get some clean. It's not.
What do you mean it's not tradable? This right here?
It's not. Yeah, the past 9 minutes, at least to me, they're not.
No, there's no rhyme or reason right now.
No, usually I sometimes get one move before Powell starts, but it doesn't look like we're getting one right now. Alec locked myself out. That's good. Hopefully it's a good lockout, right?
Yeah, right.
Oh, Alec. Not only did he lock himself out, he also got Michael Patak's Series 3 study manual.
Did you learn that in the Series 3 book?
Yeah. Hey, Alec, take a picture of it with yourself. You don't even take a picture with yourself if you don't want to. Take a picture of it anywhere with a cool backdrop, wherever your hometown might be. And send it in. We'll post it. Here we go. Trading 57s right now. Keep in mind, we're watching the 55s. The 55s. And the S&Ps. Nothing burning so far. Just
here we go. Oh, it keeps faking me out.
Do the right. Here we go. Does not want to get there. Oh.
If it was bigger, I'd say we do a lean, but no.
I was thinking like one lot. Man, if it was personal account time, I would just do the one lot. I think they're going to trade out. Just because that's the liquidity is like we talk.
Like they want to know if it's there or not.
Yeah, I know. So much to sell 100 into it and see what happens.
Oh, KV, is your you got your office all set up? You got all your pictures and
not yet.
And tchotchkes up yet?
Here we go. Phil, did it trade?
Oh yeah, it traded out.
I think it did. Yeah,
it did.
Sam, what do you mean by trade out? Did all 600 actually trade? That's what I mean by trade out. Did all 600 on that bid actually trade? Or was it just a portion of it traded and the remainder was pulled? According to John and Eddie there, all 600 on that bid traded out 600 times. So they did trade out. And we are right back above it. So that was one hell of a fill for that. Nice little fill.
There's also the New York session view up right here on the NASDAQ. So buyers might be attempting to hold the price here.
You got another one there at 550.
What we got, Eddie? I don't see it. Oh, yep.
625.
50s. Nice spot, Eddie. 5 handles beneath. Are they stacking bids for the move to the upside? I'm not sure.
Bogey spotted, Captain. Bogey spotted.
Thank you. Well done. Well done. So we see that. So there's someone stacking bids in here. 5 points apart. So they're 600. It can't be coincidence. The same 600 lot. So maybe
they do that, though.
Well, remember, John, you were talking about, you got a friend that's an execution, right? That's an execution specialist. Is this something that execution special? Is this what it looks like?
Yeah, sometimes. If they want to participate in the whole range. Sometimes it's time based, sometimes it's range based. But they do that in the S&Ps. You'll see that from time to time, Andre. Like 50-50s, there's a bid. 50-45s, there's 177 on that bid.
Look above, John. Look above the 65. What do you see? What do you see at 65, John? What do you see at 65, John?
At 50-45, there's 175 on the bid.
Right, but at 65, there's a 600 lot on the offer. Is that someone just trying to scalp 10 points?
Oh, there you go. Yeah, there it is. Yep, 50-65 on 600 on the offer. Oh, there's a nice scalp for you.
Watch this trade play out. My goodness, if this trade plays out, I mean, oh, that would be sweet. 600 times, 10 points, 600 times.
This is MP, I think.
This is what he wants it to look like one day.
He's doing this on the beach.
In December, he wants it to look like this. Hell yeah. Watch this. Would a trade like this work simply just because the market is just,
whippy,
starving for liquidity? So you can kind of pull something, I don't know about 600 times, but I'm just knowing that the market will gravitate towards liquidity. You can kind of risk something like this.
600 on the 50-50s, 600 on the 65s.
There you go. 300K. It's a $300,000 trade if this thing trades out. Thank you for the math. 300 G's in a day. Only 120, Paul says. Only 120,000. All right, chat, let's get that math going. Tell us what it is.
Not doing public math here, huh?
It's 300,000.
The only thing I dislike about the bounce is the volume. It's not increasing.
No. So what does that tell you, KV? Was the market just exhausted with FOMC at this point?
It might be a little bit. I mean, if it fails to make a new high here, it's probably going to come back down. I really love the bounce. I mean, you guys were talking about it. I was looking at the view up as well. But I think it might be it with the way volume just dried up right now. I really thought we would see that volume push, but it's not happening. We're already getting wicks here on the NASDAQ minute time frame here.
Yeah, looking at the 10-year.
It was looking too good to be true.
Yeah. Sometimes,
it's
nothing burger.
Again, like we always talk about, trade idea, when does it become valid or invalid, right? So far, even though we're pausing a little bit, trade idea is still valid, right? The longs are still valid here as long as that zone holds, right? But it is slowing down a little bit. I thought we were going to get a little bit more of a quicker push to the day high, but
Big Ben in the chat says market is not exhausted. It's just waiting for Powell Q&A. Lots of fire emojis.
That's definitely true.
Never equated a Powell Q&A with fire emojis, but I like where your head's at, Big Ben. Let's do it. Watch this. Are these 65 still there? Oh yeah. Come on, make the person 300 G's. A no sweat 300 grand trade.
Who would sweat a trade like that, right?
Person never took ETH. Now, if they want to get out, getting out would be another. I mean, the only way they're getting out is they're getting out at those 65s. 600 lot gone. Nope, still there. Hoop 65 at 65 offer. Hoop, you talking down beneath at the 50s? Nope, 50s are there too. Hoop, those orders are still stuck. Still resting.
Still waiting. Yeah, the S&P is the only one that closed the session gap to yesterday's range. The NASDAQ has not. Interesting. The plot thickens.
Yeah, it does.
Stay tuned to as the market turns.
So many wicks. Oh my God, what is going on with this?
What does that tell you, KV? So many wicks. When you see so many wicks, what does that say?
Seller pressure, and also it's important where it's happening. It's opening price and the previous day low right there for NQ. So obviously it's going to be a strong zone. I believe it's also the previous. So basically week low before we made the lows from today. So it's a key zone. sellers are coming in. Look at the pullback that just happened right now as well. It was, I wouldn't say it's predictable, but we're already seeing it with the volume decrease as we were moving higher. But again, just like I said earlier, longs are still valid. Now it's just about patience. How long can you hold and be in the trade? But longs are still valid here, even though it's not
KV, you got any
looking
levels? I guess we could throw
levels.
levels out the window. We could throw levels out the window when Powell starts speaking, but just
Probably.
for bleeps and giggles, what kind of levels would you be looking possibly
Yeah, no,
taking
I
long or
would
taking a
because
short?
there's a lot of levels that I have to the upside, but I would really pay attention to two key zones. One is going to be 560, which we filled the gap from last night. Okay, so 560, if you're looking for a quick scalp, maybe for a quick rejection play, 560 is the level that I would be looking for. And the next one is going to be around 630 here. Again, there's a lot of levels that I have here, but those are my two main ones. So 560, 630. If we do see, those levels get tested with Powell, if the market moves up, that's the zones I would be looking at either for rejection plays or breakout plays in case we do get there. But again, right now it's testing everyone's patience right now. If anyone is on longs right now, it's not looking the best. So, I mean, we pulled back from the high that we made here, 501 to 477. That's 25-point pullback there. So it's not either, But yeah, it could go either way.
It could. That's the tricky thing. We got the house account open here.
I mean, we're not predicting here, guys. That's why you just throw the levels there and be prepared for both ways, right? So no one can predict. No one can predict it. That's the only thing, no matter how many years you have in the market, it's just something that you'll never be able to. It's only a question. If you were a superhero, what superpower would you have? Probably a lot of traders would say, yeah, just even 60 seconds, predicting the future. That's all we need,
all I need. All I need.
That's
50-50 gone. 50-50 is gone. All right. Nice spot there, chat. 50-50s are gone.
Yeah.
All right. So just the 55s got filled on that bit. 65s are still there. Looking to make a cool 300 Gs. Pre-Powell. So he's got some action there. Hoop says, I would keep an eye on bonds for lead. I think you might be onto something. It's probably not the Keep in mind, we do have bonds and all fixed income. On all fixed, most of them fixed income here on Topstep X. So you get those charts up. 78% long in the, what is that? Crude. Crude don't care about this. Crude's going to do its own thing.
No. It's just laying on the
What's
bottom.
Crude? What's it trading down there, John?
$79.
Wow, 79. What's the low of the day?
Just a
right there,
little
right?
below there. Yeah, just a little below that here. I can tell you in a second.
Cool. $79.
78.83. 78.83. So 150 ticks off that 80.30 level. And probably more space below. Let's take out those 65s. Let's pay the man.
I agree. If someone's going to take on that kind of risk, got the stones to do that, let's do it. We're creeping, but that's a 60. Yeah, 65s. All right, KV, I see this every Wednesday when we check in with each other. How many trades this week? How are we looking on the week?
Well, I was traveling, so I could only trade Monday. Monday was green for me. We took a short on Nasdaq. Really good trade. Happy with that. And then I was flying out yesterday, and then today has been just setting up everything again here.
Sounds fun. Nothing like moving day.
Yeah, April was really, really good though. Really with the April performance. We're in a new month now, so hopefully May treats us well. But usually April, May, and June are my best months of the year. So hopefully they're the same this year. But that's kind of my best months of the year: April, May, and June.
Excellent. Charles
Look at
Lucas
sellers
says, who
coming
else
back
is
there.
long? Yes, they
Look at
are.
the sellers back, guys. Same zone we talked about, right? Opening price and
6%.
previous day low, which again was the weekly low there for Nasdaq. Also round number there, 17,500. Sellers just coming in. It's weak, right? No volume. Wicks from the upside showing seller pressure. You got to be scalping in and out within the same candle. That's the only thing you can do right now.
I like that advice.
It's not. I mean, there's no follow through. It's looking like a Christmas tree right now.
It really is.
It is.
Hey, KV says here you're hanging with us until the Powell press conference starts, then get back to the move.
Back to the move. So
all good.
I can let you guys enjoy Powell. I don't think I'm in the mood for Powell today.
No, you're not in the mood for Powell? Oh no, I don't think any of us really are.
I'm not in the mood for Powell. It's been jet lagged as well. I think I woke up at like 3 a.m. today because of London time zone.
Right, you're in Albania. That's right.
So I was there. And then now I gotta adapt to New York schedule now, which is.
Well, last time we saw you, we were going to wrap up around 9 p.m. Your time, and you said you were going to go out. Did you actually go out after we were on?
100%.
Was it fun?
Yep. No, now it's back to work. That's how I always.
Yes, it is.
That's how I always. If I'm in New York, I'm always working. If I'm outside New York, I'm doing a little bit of both. But usually New York is just business. I'm not.
Are you excited about the new office?
Yeah, no, I've been setting things up since 3 a.m., 4 a.m. in the morning.
It's always exciting. That is. Yeah. All right, we got Powell coming in here in about 6 minutes. We will have the feed here on Topstep TV, so no need to go anywhere else. John and I will be with you.
Yep.
For that first half hour of the Powell press conference, we'll have Dakota joining us for the last hour of Power Hour. I don't know how many trades we'll actually be able to execute. We do have Dakota in here, so I might give us some levels, but again, we got to hang on to every word Powell says. Gonna be tricky here. House account is up about $3,800. We'll take it. We probably left some money on the table there, but can't complain about winners. Yes.
Michael in the chat says it is advisable for naive traders like me to not just trade on FOMC days. 100%. Yes. If you're just guys, if it's even your first year, I'll try to avoid FOMC days and weeks as much as possible. You can make a lot, but also lose a lot. So I don't think anyone wants to lose a lot if it's your first year trading, because it's not just about the money, but it's also about your psychology. If your psychology gets hit the first year with big losses, it's going to take a lot to recover. It doesn't matter if you find the perfect system. It doesn't matter if you have $1 million. It's going to be very difficult for you to recover that mindset aspect of things. So I'd rather you guys skip FOMC, or like JC says there, use micros, right? Use micros, and then your risk is a little bit lower. But I would avoid them even as much as possible, just because they mess with you. Because this day is an outlier looking at price action. This is not their typical day price action. So I don't want you taking trades today and then taking these trades in consideration of how your performance has been or is lately, because it's an outlier. It's completely different price action, completely different volatility. So especially with Powell now, 4 minutes until Powell starts, you're just it's gambling a little bit.
So 65 trade. And that, folks, is how you make $300,000 in about 20 minutes. Wow. So you saw that. That was pretty cool.
Very close to day high for shells.
Yes. Real quick update here with some of our influencers around the board. Deeyana is down a couple $100. No biggie. Isaac Rivera up 3 Gs. Dakota up 3 Gs. Dakota's starting May off hot. OV, I should say, up 3,700. Nick T up 3,500. Corey N up $2,100. A lot of green on the board today. Of course, the house account is up $3,800. Well done to everybody. Thank you for that, Brett. All right, start to catch a bid here. Keep in mind, we got Uncle Paul, Uncle Jerome coming in the house here in about 2 minutes, 3 minutes.
Uncle Jerry?
Uncle Jerry.
Uncle Jerry. We got Uncle Julius and we got Uncle Jerry.
Love those guys. Here we go. Bags, Kowalski. My best combine day ever, trading crude, 3K profit. There you go. Hopefully you're watching.
Nice, Bags.
Yep.
Caught that short.
All right. All right. Market's finally off to the races. Does someone see Powell's prepared remarks? We got the front of him. Dan Trader. Well done.
So KV,
Right.
you always leave us with really good last thoughts. Did you prepare one for us today?
I got something for you today, Hope.
Yes.
I got something.
What?
And I got something that's going to be a little bit, different from, the patience and, what we talk a lot about these Wednesday calls. This is what's going to be the closing today before Powell starts. If everything is under control, you are going too slow. Okay, so basically, if you are in a zone of comfortability right now, it's probably time to step things up and join a place where you're not as comfortable. This probably goes for a lot of traders who have seen success the past year or so, have seen consistency, and are at the point where you're taking payouts and so on. Maybe it's time to scale up, right? Maybe it's time to size up, and maybe it's time to get a little bit more aggressive than you've been the past year.
Oh, wow. KV, bringing the heat. KV, thank you very much for joining us. Good luck with the move. Great words of wisdom. That's how you pay. That's how you stay patient, folks. And we will see you next week, KV. We're at the highest of days here in the S&Ps. Hey, JD, once Powell starts speaking, just come right in and we can get started. John and I, you can kind of fade John and I out. And, we can adjust the volume if John and I would like to say something. But KV, thank you so much. We appreciate it. Good luck with the move.
Always.
Good luck during
stretch your comfort
Powell,
zones.
guys. Yep. Switch your comfort zone.
Thanks.
Good luck, guys.
Thanks, KV. Right. Well, as soon as our good old Uncle Jer starts talking, we will get him on here.
Mm-hmm. I mean, what are we expecting him to say? Inflation still remains present. Not as sticky as we thought. I don't know.
So NASDAQ
all data driven.
Everything gap finally.
Purple tie today. Remember those days? Wasn't that Greenspan? People watch to see what color tie was wearing and then make trade decisions based on that. Something like that.
Right.
Something crazy. Talk about dual mandate. You got it, Dale.
All right. He is not on the podium just yet.
Oh, there we go.
Oh, there he is.
Yay, capitalism.
All right, let's see what the man has to say.
Yeah, let's go.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially over the past year, while the labor market has remained strong. And that's very good news. But inflation is still too high. Further progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings, though at a slower pace.
Selling off here.
Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation, and the risks to achieving our employment and inflation goals have moved toward better balance over the past year. However, in recent months, inflation has shown a lack of further progress toward our 2% objective, and we remain highly attentive to inflation risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.6% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, was 3.1% in the first quarter, as strong as the second half of 2023. Consumer spending has been robust over the past several quarters, even as high interest rates have weighed on housing and equipment investment. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. The labor market remains relatively tight, but supply and demand conditions have come into better balance. Payroll job gains averaged 276,000 jobs per month in the first quarter, while the unemployment rate remains low at 3.8%. Strong job creation over the past year has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year and the jobs to workers gap has narrowed, but labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The inflation data received so far this year have been higher than expected. Although some measures of short-term inflation expectations have increased in recent months, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings, though at a slower pace. Over the past year, as labor market tightness has eased and inflation has declined, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect that it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. In particular, and as I noted earlier, readings on inflation have come in above expectations. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate. We're also prepared to respond to an unexpected weakening in the labor market. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks.
He's giving me a
Policy
headache.
is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We will continue to make decisions meeting by meeting. Turning to our balance sheet, the committee decided at today's meeting to slow the pace of decline in our securities holdings, consistent with the plans we released previously. Specifically, the cap on Treasury redemptions will be lowered from the current $60 billion per month to $25 billion per month as of June 1. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we're leaving the cap on agency securities unchanged per month, and we will reinvest any proceeds in excess of this cap in Treasury securities. With principal payments on agency securities currently running at about $15 billion per month, total portfolio runoff will amount to roughly $40 billion per month. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach its ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings that are consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
All right, here we go.
Howard Schneider with really say anything about anybody's mind.
Question to follow up, if I could. Do you consider the current policy rate still, are you confident that it's sufficiently restrictive to get inflation back to 2%?
So I do think the evidence shows, pretty clearly that policy is restrictive and is weighing on demand. And there are a few places I would point to for that. You can start with the labor market. So demand is still strong, the demand side of the labor market in particular. But it's cooled from its extremely high level of a couple of years ago. And you see that in job openings. You saw it, more evidence of that today in the JOLTS report, as you'll know. It's still higher than pre-pandemic, but it has been coming down both in the Indeed report and in the JOLTS report. That's demand cooling. The same is true of quits and hiring rates, which have essentially normalized. I also look at we look at surveys of workers and surveys of workers and businesses
$5,
and
Paul.
ask
$5.
workers are jobs plentiful and ask businesses are workers plentiful. Is it easy to find workers? And you've seen that the answers to those have come back down to pre-pandemic levels. You also see in interest-sensitive spending like housing and investment, you also see that higher interest rates are weighing on those activities. So I do think it's clear that that policy is restrictive.
Sufficiently restrictive, I guess. Is it?
So I would say that we believe it is restrictive, and we believe over time it will be sufficiently restrictive. That will be a question that that the data will have to answer.
So as a follow-up, if inflation continues running roughly sideways as it has been, the job market stays reasonably strong, unemployment low, and expectations are anchored and maintained, would you disrupt that for...
Expectations are not anchored?
Or anchored.
Or anchored.
Stable, roughly. Would you disrupt that for the last half point on PCE?
I don't want to get into complicated hypotheticals, but I would say that, we're committed to retaining our current restrictive stance of policy for as long as is appropriate, and we'll do that.
Gina. Thanks for taking our questions, Chair Powell. I wonder, obviously, Michelle Bowman has been saying that there is a risk that rates may need to increase further, although it's not her baseline outlook. I wonder if you see that as a risk as well, and if so, what change in conditions would merit considering raising rates at this point?
So I think it's unlikely that the next policy rate move will be a hike. I'd say it's unlikely. Our policy focus is really what I just mentioned, which is how long to keep policy restrictive. You ask, what would it take? I think we'd need to see persuasive evidence that our policy stance is not sufficiently restrictive to bring inflation sustainably down to 2% over time. That's not what we think we're seeing, as I mentioned. But that's something like that is what it would take. We'd look at the totality of the data answer to that question. That would include inflation expectations, and all the other data too.
Would that be like a reacceleration in inflation?
Well, I think, again, the test, what I'm saying is if we were to come to that conclusion that policy weren't tight enough to achieve that, So it would be the totality of all the things we'd be looking at. It could be expectations, it could be a combination of things. But if we reach that conclusion and we don't see evidence supporting that conclusion, that's what it would take, I think, for us to take that step.
Chris. Thank you, Chris Rugaber at Associated Press. You didn't mention the idea that rates are at a peak for the cycle, and didn't mention the idea that it might be appropriate to cut rates later this year, as you have at previous press conferences. So has the Fed sort of dropped its easing bias? Where are you standing on that?
So on, let me address cuts. So obviously, our decisions that we make on our policy rate are going to depend on the incoming data, how the outlook is evolving, and the balance of risks, as always. And we'll look at the totality of the data. So I think, and we think, that policy is well positioned to address different paths that the economy might take. And we've said that we don't think it would be appropriate to dial back our restrictive policy stance until we've gained greater confidence that inflation is moving down sustainably toward 2%. So, for example, let me take a path. If we did have a path where inflation proves more persistent than expected and where the labor market remains strong, but inflation is moving sideways and we're not gaining greater confidence, well, that would be a case in which it could be appropriate to hold off on rate cuts. I think there's also other paths that the economy could take which would cause us to want to consider rate cuts, and those would be, two of those paths would be that we do gain greater confidence, as we've said, that inflation is moving sustainably down to 2%, and another path could be, an unexpected weakening in the labor market, for example. So those are paths in which you could see us cutting rates. So I think it really will depend on the data. In terms of peak rate, I think really it's the same question. I think the data will have to answer that question for us.
Well, and could you just follow on the path where you might not cut? Is that, you mentioned that it would be inflation persistent. Is inflation, would that be the key data in making that decision, or could you expand a bit more on that? Thank you.
Again, we've set ourselves a test that for us to begin to reduce policy restriction, we'd want to be confident that inflation is moving sustainably down to 2%. And for sure, one of the things we'd be looking at is the performance of inflation. We'd also be looking at inflation expectations. We'd be looking at the whole story, but clearly incoming inflation data would be at the very heart of that decision.
How do we trade this, John?
Journal. Chair Powell, to what extent has the easing in financial conditions since November
the 660s came in here.
The reacceleration in growth.
Power through it. What's Delta, John?
S&P's positive 5,700, and that's just a minute ago it was up $3,000.
So I think it's hard to know.
So it's growing. It's growing. The longs are in.
Yeah.
Longs are in.
Look back and understand.
Thank you, John.
If you look at
NASDAQ,
really, what we've seen so far,
3,600 positive.
Is
Thank you.
Growth coming in about consistent with
the race. We've got a 350 lot bid at 5105.
You don't see an acceleration in growth.
S&P stacking bids.
Financial conditions loosened in.
Yep. Let's go back to Paul.
And that caused an uptick in activity, and that caused inflation. Presumably, that's or tightening in the labor market. You don't really see that happening. What you see is economic activity at a level that's roughly the same as last year. So, what's causing this inflation, we'll have a better sense of that over time. I don't know that there's an obvious connection there, though, with the easing of financial conditions. In terms of tightening, you're right. Rates are certainly higher now and have been for some time than they were before the December meeting, and they're higher, and that's tighter financial conditions, and that's appropriate given what inflation has done in the first quarter.
You've said in the past that stronger growth wouldn't necessarily preclude rate cuts. I wonder, would continued strength in the labor market change your view about the appropriate stance of policy if it was accompanied by signs that wage growth was reaccelerating?
So I just want to be careful that we don't target wage growth or the labor market. And remember what we saw last year: very strong growth, a really tight labor market, and a historically fast decline in inflation. So and that's because we know there are two forces at work here. There's the unwinding of the pandemic-related supply side distortions and demand side distortions, and there's also monetary policy, restrictive monetary policy. So I wouldn't rule out that something like that can't continue. I wouldn't give up at this point on further things happening on the supply side, either because we do see that companies still report that there are supply side issues that they're facing, and also even when the supply side issues are solved, it should take some time for that to affect economic activity and ultimately inflation. So there are still those things. So I don't like to say that either either growth or a strong labor market in and of itself would automatically create problems on inflation, because of course it didn't do that last year. You ask about wages. We also don't target wages. We target price inflation. It is one of the inputs. The point with wages is, of course, we like everyone else like to see high wages, but we also want to see them not eaten up by high inflation. And that's really what we're trying to do, is to cool the economy and work with what's happening on the supply side to bring the economy back to 2% inflation. And part of that will probably be having wage increases move down incrementally toward levels that are more sustainable.
Rachel. Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You talked about needing time to gain more confidence that inflation is sustainably moving back down to 2%. It's May now. Do you have time this year to cut 3 times, just given the calendar?
Yeah, I'm not really thinking of it that way. What we said is that we need to be more confident, and we've said, my colleagues and I today said, that we didn't see progress in the first quarter, and I've said that it appears then that it's going to take longer for us to reach that point of conference. So I don't know how long it'll take. I can just say that when we get that confidence, then rate cuts will be in scope, and I don't know exactly when that will be.
And with hindsight, are there any signs that you can look back on now, looking at the reports from January or February or March, that suggested something more worrying than just expected bumpiness?
Question.
Not really. So I thought it was appropriate to reserve judgment until we had the full quarter's data, until we saw the March data. And so take a step back. What do we now see in the first quarter? We see strong economic activity. We see a strong labor market, and we see inflation. We see 3 inflation readings. So I think you're at a point there where you should take some signal. We don't like to react to 1 or 2 months' data, but this is a full quarter, and I think it's appropriate to take signal now, and we are taking signal. And the signal that we're taking is that it's likely to take longer for us to gain confidence that we are on a sustainable path down to 2% inflation. That's the signal that we're taking.
Steve.
Yeah, Mr. Chairman, if I could, Steve Leisman, CNBC, if I could follow up on that. What particular areas were sort of temporary or blips in the inflation data in the first quarter, and what's the dynamic by which you expect them to work out in the coming months and quarters?
Yeah, so we will, we will put the thing. We have put the thing under a microscope. I will say, nothing is going to come out of that that's going to change the view. I think that in fact we didn't gain confidence, and that it's going to take longer to get that confidence. But confidence, I just think you know the story. What's happened since December is you've seen higher goods inflation than expected, and you've seen higher non-housing services inflation than expected, and those two are working together to sort of be higher than we had thought. And there are stories behind how that happened, and I think my expectation is that we will, over the course of this year, see inflation move back down. That's my forecast. I think my confidence in that is lower than it was because of the data that we've seen. So we're looking at those things. We also continue to expect, and I continue to expect, that housing services inflation, given where market rents are, those will show up in measured housing services inflation over time. We believe that it will. It looks like that there are substantial lags between when lower market rates turned up and for new tenants, and when it shows up for existing tenants or for in-housing services. So,
if I could just follow up, is there a bit of a contradiction in the idea that you are reducing quantitative tightening, which is sort of an easing, while you're holding rates steady at a restrictive rate to try to slow and cool the economy and inflation? Thank you.
I wouldn't say that, no. I mean, the active tool of monetary policy is, of course, interest rates. And this is a plan we've long had in place to slow, really not in order to, provide accommodation to the economy, but to be less restrictive to the economy. It really is to ensure that the process of shrinking the balance sheet down to where we want to get it is a smooth one and doesn't wind up with financial market turmoil the way it did the last time we did this, and the only other time we've ever done this.
Craig.
Forrest from Bloomberg. Two questions. First, simple one. Given the run of data since March, has the probability in your mind of no cuts this year increased or stayed the same? That's the first question. Second question. Chair Powell, you joined the board in 2012, and I'm sure you remember, as I do, what the jobless recovery was like. Lawyers, accountants, all kinds of highly qualified people who couldn't get jobs. And given your history there, I wonder if there's an argument for being more patient with inflation here. We have strong productivity growth. That's helping wages go up. We have good employment. And so it seems to me there's a lot of hysteria about inflation. I agree, it's, nobody likes it, but is there an argument for being patient and working with the economic cycle to get it down over time? Thank you.
He's trying to do.
On your first question, I don't have a probability estimate for you, but all I can say is that, we've said that we didn't think it would be appropriate to cut until we were more confident that inflation was moving sustainably on at 2%. We didn't get, our confidence in that didn't increase in the first quarter, and in fact, what really happened was we came to the view that it will take longer to get that confidence. And I think I think it's, the economy has been very hard for forecasters broadly to predict its path, but there are paths to not cutting and there are paths to cutting. It's really going to depend on the data. In terms of the employment mandate, to your point, if you go back a couple of years, our sort of framework document says that when you look at the two mandate goals, and if one of them is further away from goal than the other, then you focus on that one. It's the time to get back there times the times how far it is from the goal, and that was clearly inflation. So our focus was very much on inflation, and this is what we referred to in the statement. As inflation has come down now to below 3% on a 12-month basis, it's become we're now focusing the other goal, the employment goal, now comes back in to focus, and so we are focusing on it, and that's how we think about that.
Claire.
Claire Jones, Financial Times. Thanks a lot for the opportunity to ask the questions. Just to go back to the answer before the previous one, it seemed to suggest that you think the likeliest path of inflation is one that's going to allow you to have a situation where rates are lower at the end of the year than they are right now. It would be good if you could just confirm whether or not that's a correct reading. And the Q1 GDP print has led to some to start mentioning the term stagflation with respect to the US economy. Do you or anyone else on the FOMC think this is now a risk? Thank you.
Yeah, I'm not dealing really in likelihoods. I think there are paths that the economy can take that would involve cuts, and there are paths that wouldn't. And I don't have great confidence in which of those paths. I think I would say my personal forecast is that we will begin to see further progress on inflation this year. I don't know that it will be sufficient. I don't know that it won't. I think we're going to have to let the data lead us on that. In terms of your question, your second question was stagflation. I I guess I would say I was around for stagflation, and it was 10% unemployment. It was high single digits inflation. Right now we have and very slow growth. So right now we have 3% growth, which is pretty solid growth, I would say, by any measure, and we have inflation running under 3%. So I don't really understand where that's coming from. And in addition, I would say most forecasters, including our forecasting, was that last year's level of growth was very high, 3.4% in, I guess, the fourth quarter, and probably not going to be sustained and would come down. But that would be our forecast. That wouldn't be stagflation. That would still be to a very healthy level of growth. And of course, with inflation, we will return inflation to 2%. And that won't be, so I don't see the stag or the inflation, actually.
Yo.
Hey, just a reminder, we have we have Dakota joining us here in a few minutes, joining us for Power Hour. You are watching TopStep TV, Jerome Powell press conference live here on TopStep TV. We do have Dakota joining us here shortly for Power Hour. We'll see if we make some trades. But let's get back to Powell. Click like, click subscribe if you like what's going on here. Let's see if we got some opportunity after this. Thank you.
So I think I would take that question this way. We saw a year of very high productivity growth in 2023. And we saw a year of, I think, negative productivity growth in 2022. So I think it's hard to draw from the data. The question is, will productivity run? There are two questions. One is, will productivity run, persistently above its longer run trend? I don't think we know that. In terms of potential output, though, if that's a separate question. We've had what amounts to a significant increase in the potential output of the economy that's not about productivity. It was about having more labor, frankly, both through, in 2023, both through participation and also through immigration. So we're very much like other forecasters and economists getting our arms around what that means for potential output this year and next year. And last year, for that matter, too. So I think in that case, I think you really do have a significant increase in potential output. But you've also got, you've got more supply, but those people also come in, they work, they have jobs, they spend. So you've also got demand. So it may be that you get more supply than you get demand at the beginning, but ultimately it should be neither inflationary nor disinflationary over a longer period.
Well, you said earlier that at this point, you're not really considering rate increases. If growth is higher, but you're not considering rate increases, does that imply that you're more worried about causing the economy to slow too much than you are about inflation taking off again?
Interesting.
No, I think we believe our policy stance is in a good place and is appropriate to the current situation. We believe it's restrictive. And, our evidence for that I went over earlier. You see it in the labor market, you see it in inflation-sensitive spending, where demand has clearly come down a lot over the past few years. And that's more from monetary policy, whereas the supply side things that are happening are more on the supply side. So that's how I would think about it.
Well, John's been
Edward
riveting.
Lawrence from Fox Business. So GDP growth is about 2%. Inflation, employment.
They're ripping the upside.
2%. It feels a lot like a steady
we are.
state.
Yeah, we are.
And we have 3% inflation. So if the
Exactly.
data remains the same that you're seeing,
rate hike,
and
as
I know
long as
you
it
said
say
you
rate
don't see
hike,
a
we're gonna
rate
pop.
hike, but it stands to reason that you would need a rate hike to get from 3 to
Here we go.
2% inflation. So was there any discussion about a rate hike in today's meeting?
I didn't say that.
Are you satisfied with 3% inflation for the rest of the year?
Well, of course, we're not satisfied with 3% inflation. 3% can't be in a sentence with satisfied. So we will return inflation to 2% over time, but over time.
There you go.
And we think our policy stance is appropriate to do that. So if we were to conclude that policy is not sufficiently restrictive to bring inflation sustainably down to 2%, then that would be what it would take for us to want to increase rates. We don't see that. We don't see evidence for that. So that's where we are.
Was there a discussion about a rate hike at all?
So the policy focus
I know what this guy's trying to do.
Has really been on what to do about holding the current level of restriction. That's part of the policy. That's where the policy.
Folks, I'm going to step away. We've got Dolby and Dakota coming in.
Persistent inflation that would trigger a rate hike.
Yep. Thank you, John.
There isn't any rule.
Yep, thank you, everybody. Thank you, Andre.
Judgment calls.
Just like Jay Powell, Hoag out.
To do its job. That is pretty clear based on what we're seeing.
Well done there. Well done. All right, when they get in here, I do see Dolby Time. I do see Dakota. Bring them in whenever. They don't need an introduction. You know who they are. We got the power, the trio here, the three amigos.
You've talked about your.
There they are. Dakota, welcome to Power Hour. Dolby Time, welcome to Power Hour. We are in the midst of a Jerome Powell press conference. We'll get back to that. 28 minutes remaining. Dakota, if you do take any trades, just whisper them in there. So let's listen to what the man has to say.
All right.
Say September versus December. So we're always going to do what we think the right thing for the economy is when we come to that consensus view that it's the right thing to do for the economy. That's our record. That's what we do. We're not looking at anything else. It's hard enough to get the economics right here. These are difficult things, and if we were to take on a whole nother set of factors and use that as a new filter, it would reduce the likelihood we'd actually get the economics right. So that's how we think about it around here. And we're at peace over it. We know that we'll do what we think is the right thing when we think it's the right thing, and we'll all do that, and that's how everybody around here thinks. So I can't say it enough that we just don't go down that road. If you go down that road, where do you stop? And we're not on that road. We're on the road where we're serving all the American people and making our decisions based on the data and how those data affect the outlook and the balance of risks.
And then, is there a significant difference between, whether you start in, say, September versus December?
There's a significant difference between an institution that takes into account all sorts of political events and one that doesn't. That's where the significant difference is. And we just don't do that. I mean, you can go back and read the transcripts for this is my fourth presidential election here. Read all the transcripts and see if anybody mentions in any way the pending election. It just isn't part of our thinking. It's not what we're hired to do. If we start down that road, I don't know how you stop. So.
Thank you, Chair Powell. Question about the labor market. You've mentioned a few times that the labor market is normalizing. Certainly today's JOLTS data suggested that things are kind of getting back to pre-pandemic levels. Mm-hmm. One thing that hasn't normalized is wage growth, which is still quite a bit stronger than before the pandemic. I wonder if you can share your analysis of why that's happening. Is it a lagging indicator or something else going on?
So I think if you go back to where wage increases peaked a 3 years ago, essentially all wage measures have come down substantially to that. But they are not down to where they were before the pandemic. They're still roughly a percentage point higher. And we've seen pretty consistent progress, but not uniformly. And you'll note the ECI reading from Tuesday was expected to have come down, and essentially it was flat year over year, I think, roughly. So, yeah, I mean, that part of it is bumpy. And again, we don't target wage increases, but in the longer run, if you have wage increases running higher than productivity would warrant, and then there will be inflationary pressures. Employers will raise prices over time if that's the case. So we've seen progress. It has been inconsistent, but we have seen a substantial decline overall. But we have ways to go on that.
Scott. Nancy.
Hey, real quick, Dakota, are you looking at any levels up here in the ES or NASDAQ, perhaps?
Yeah, I just missed the long in NASDAQ.
Consumers and consumers
710.
are feeling the weight
That
of
was
interest rates right now.
where I was looking to get
Mortgage rates
into
are
the
up,
good
as are
cool.
rates for car loans, credit cards.
17,000.
People
Thank
looking
you.
to borrow are very discouraged. That's reflected in their views on the economy. What would you say to them?
Well, the thing that hurts everybody, and particularly people in the lower income brackets, is inflation. If you're a person who's living paycheck to paycheck and suddenly all the things you buy, the fundamentals of life go up in price, you are in trouble right away. And so with those people in mind in particular, what we're doing is we're using our tools to bring down inflation. It will take some time, but we will succeed, and we will bring inflation back down to 2%, and then people won't have to worry about it again. That's what we're doing, and we know that it's painful and inconvenient, but the dividends will be paid will be very large, and everyone will share in those dividends. And we've made quite a lot of progress if you can think about it. I think headline core PCE peaked at 5.8. Now it's at headline peaked at 7.1. Now it's at 2.7. Don't want to get that wrong.
Very confident bringing inflation
quick
down.
follow-up. Are current interest rates really doing that much, though, to fight inflation right now for those consumers?
Ooh, here's the question.
Yes, I mean, I think that restrictive monetary policy is doing what it's supposed to do, but it's also in this case unusually working alongside and with the healing of the supply side. That was different this time was that a big part of the source of the inflation and the reason why we're having this conversation is that we had this supply side kind of collapse with shortages and bottlenecks and all that kind of thing. And this was to do with the shutting down and reopening of the economy and other things that really raised demand. So many factors did that. So I think now you see those two things working together, the reversal of those supply and demand distortions from the pandemic and the response to it, along with restrictive monetary policy. Those two things are working to bring down inflation, and we've made a lot of progress. Let's remember how far we've come. And we have a ways to go. We've got work left to do, but we're not looking at the very high inflation rates that we were seeing 2 years ago.
Those 710s, Dakota.
Courtney Brown from Axios. Thanks for taking our questions, Chair Powell. I wanted to follow up on something you mentioned earlier on housing inflation. There's kind of been this long-awaited disinflation in shelter that still hasn't arrived. So I guess two questions. How do you explain the substantial lags between some of the private sector data we're seeing and the government data? And how confident are you that rents will be helpful on the inflation front in the coming months?
So essentially, there are a number of places in the economy where there are just lag structures built into the inflation process, and housing is one of them. So when you have when someone a new person goes to rent an apartment, that's called market rent, and you can see market rents are barely going up at all. The inflation in those has been very low. But it takes, before that, they were incredibly high. They sort of led the high part. So what happens is those market rents take years, actually, to get all the way into rents for tenants who are rolling over their leases. Landlords don't tend to charge as much of an increase to a rollover tenant for whatever reason. And what that does is it builds up a sort of an unrealized portion of increases when there have been big increases. And what happens is, it's complicated, but the story is it just takes some time for that to get in. Now, I am confident that as long as market rents remain low, this is going to show up in measured inflation, assuming that market rents do remain low. What will be the exact timing of it? I think we've learned that the lags are longer. We now think significantly longer than we thought at the beginning. And so confident that it will come, but not so confident in the timing of it. But yes, I expect that this will happen.
Thanks.
Nick Jasinski.
Thank you, Chair Powell, for taking the questions. This is Nicholas Jasinski from Barron's Magazine. It seems that over the past 3 or 4 years, economies and central banks in developed markets at least have been on more or less the same trajectory, easing during the pandemic, fighting inflation with restrictive policy on the way out. Feels like that may be ending in 2024 based on some of the economic data from Europe and the US and Japan and statements from those central banks as well. So my question is, what considerations or risks does a period of more divergent global economic trajectories and central bank policies present for the FOMC?
So that you're right. I think that may happen, and you know that we all serve domestic mandates, right? So I think the difference between the United States and other countries that are now considering rate cuts is that they're just not having the kind of growth we're having. Their inflation is performing about like ours or maybe a little better, but they're not experiencing the kind of growth we're experiencing. So we actually have the luxury of having strong growth and a strong labor market, very low unemployment, high job creation, and all of that. And we can be patient, and we'll be careful and cautious as we approach the decision to cut rates, whereas I think other jurisdictions may go before that. In terms of the implications, I think obviously markets see it coming. It's priced in now, and so I think the markets and economies can adapt to it. And I think we haven't seen, in addition for the emerging market economies, we haven't seen the kind of turmoil that was more frequent 20 years ago, 30 years ago. And that's, I think, partly because emerging market countries, many of them have much better monetary policy frameworks, much more credibility on inflation, and so they're navigating this pretty well this time.
Jennifer.
Thank you,
A lot of
Chair
hate
Powell.
for this
Jennifer
guy.
Schonberger with Yahoo
There,
Finance.
Dolby. Not a lot of people like him in the
I
chat.
backed away from the notion that the economy would need to encounter pain for inflation to come back down. But given sticky inflation data in the first quarter, can disinflation still happen along a relatively painless path for the economy, or is some softening in the labor market and the economy likely needed to bring inflation back down?
What is disinflation?
So you're right. I think we thought, and most people thought there would.
17 minutes left for this Q&A.
Probably significant dislocations somewhere in the economy, perhaps the labor market, to get inflation all the way down from the very high levels it was at the beginning of this episode. That didn't happen. That's a tremendous result. We're very, of course, gratified and pleased that hasn't happened. And if you look at the dynamics that enabled that, it really was that so much of the gain was from the unwinding of things that weren't to do with monetary policy, but the unwinding of the distortions to the economy, supply side problems, and also some demand issues as well. The unwinding of those really helped inflation come down. Now, as I've said, I'm not giving up on that. So I think it is possible that those forces will still work to help us bring inflation down. We can't be guaranteed that that's true, though. And so we're trying to use our tools in a way that keeps the labor market strong and the economy strong, but also helps bring inflation back down to 2% sustainably. We will bring inflation down to 2% sustainably. We hope we can do it without significant dislocations in the labor market or elsewhere.
And speaking of dislocations in the labor market, in terms of cutting, you said if there were weakness in the job market, that could be a reason to cut rates. So if the unemployment rate were to tick above 4%, but inflation not back down to your 2% target, how would you look at that? Would the unemployment rate popping back above 4% catch your attention?
I said an unexpected weakening is the way I characterize it. So, and I'm not going to try to define exactly what I mean by that, but it'd have to be meaningful and get our attention and lead us to think that the labor market was really significantly weakening for us to want to react to it. A couple of tenths in the unemployment rate would probably not do that, but it would be a broader thing that would suggest that it would be appropriate to consider cutting. And I think whether you decide to cut will depend on all the facts and circumstances, not just that one.
Chair Powell, thanks for taking the question. Kyle Campbell with American Banker. You've said that broad and material changes are needed for the Basel III endgame proposal, and you've mentioned that a reproposal is something that's on the table. As you've had more time to sort of sit with the public commentary, process that, and understand the options available to you, do you have a better sense of whether a reproposal will be necessary? And do you have a timeline in mind for when some sort of
dude has a
movement
clone
will be
behind him,
made
crazy.
on that front, either a reproposal or a move to finalize?
Yes, he does. Sorry.
So let me start by saying that the Fed is committed to, completing this process and carrying out Basel III endgame in a way that's faithful to Basel and also comparable to what the other large comparable jurisdictions are doing. We haven't made any decisions on policy or on process at all. Nothing. No decisions have been made. I'll say again, though, if we conclude that reproposal is appropriate, we won't hesitate to insist on that.
And then do you need to resolve issues with the capital proposal in order to advance other parts of the regulatory agenda, or do you expect to continue to make progress on those other agenda items?
There's no mechanical rule in place there, but I would say that the Basel III process is by far the most important thing, and really is, I think, occupying us at this time in terms of what we're moving ahead with.
Let's go to Mark for the last question.
Thank you, Mark Hamrick with Bankrate. Mr. Chairman, what can you tell us about the approach that you take with your role in the sense of trying to achieve consensus, which you recently identified as a priority, while allowing for a range of views or even dissent? We don't see many dissenting votes in the official statements, even when more spirited discussions are noted in the minutes after the fact. How do you avoid groupthink and avoid a higher risk of a policy mistake? Thank you.
So I think if you listen to, and you all do, listen to my 18 colleagues on the FOMC, you'll see that we do not lack for a diversity of voices and perspectives. We really don't. And it's one of the great aspects of the Federal Reserve System. We have 12 reserve banks around the country where they have their own economic staff, not the people who work here at the board. They're different people, and so each reserve bank has its own culture around monetary policy and its own approach and that kind of thing. It guarantees you a diversity of perspectives. So I think that the perspectives are very diverse. But and in terms of dissents, we have dissents, and a thoughtful dissent is a good thing. If someone really makes you think, that kind of thing. But all I can say from my standpoint is I listen carefully to people. I try to incorporate their thinking, or do everything I can to incorporate their thinking into what we're doing. And I think many people, if they feel that's happening, that for most people, most of the time, that'll be enough. But I'm not. It's not frowned upon or illegal or against the rules or anything like that. It just is the way things come out. And I think we have a very diverse group around the people, frankly, more diverse than it used to be in many dimensions, more diverse from the obvious gender and demographic ways. But we have more people who are not PhD economists. So we have people from business and
sending in my application,
and academia and things like that.
Interesting, yeah,
so I think we actually do have quite a good diverse perspective. I think all of us read these stories about a lack of diversity, and we look around the room and say, "I don't understand. I really don't understand what they're talking about." So, but I get the question though. Thank you very much.
All right, that might be wrapping it up.
Dre, 15 lot, sell stop 38,400. Just put it in.
38,000. I don't have the Dow up.
38,400 sell stop. Just slam it in.
I don't have Dow up right now. I got Naz and I got. We're back. Thank you for joining us. Thank you for sitting through that and watching that Jerome Powell press conference. Here we go. We are off to the races to the downside after he has done speaking. Dakota, welcome to Power Hour. Always good to see you. He is the star of Slow Markets. He will be joined by Coach Jay this evening. Make sure to tune in for that. Coach Dakota, what are we looking at for levels, trades, anything? Talk to us.
Nope, no trades. I'm flat. I haven't traded since we've started. I had a couple trades this morning, but that's it.
You need some NyQuil. You need some DayQuil or some NyQuil there, Dakota.
Oh, yeah. I have lots of NyQuil and DayQuil. That's all I've been on since the weekend.
You know what this reminds me of? This reminds me of the flu game in Salt Lake City when Michael Jordan dropped 36 points on the Jazz suffering from the flu.
Don't make him sicker.
That was just bad pizza.
Yeah,
I know.
His season's over.
I know it was. Well, thank you for joining us, Dakota. As always, an absolute pleasure. Number one on the live funded leaderboard. You're looking at the man in the middle. Number one trader right there. Trades everything from crude to NASDAQ to ES to the Nikkei. You name it, he'll trade it. Let's get in there. All right, we're seeing a pullback here.
I'm just looking to buy the dip.
By the dip, 1710s. I know was a level of yours here in the NQ. We're trading 716, 715s. I could be. I don't know about levels right now. This I'm a little tentative. Granted, I'm simply here to execute. I don't do the thinking. But
if we get to 680s, maybe 680s, is
Pull
the
back to
next level
680,
I'm
long
gonna
from
look at.
long from 680. It has been a level for the last couple. All right, we'll see if we can get that pull back to 680. That would be about halfway. Not even. Where's Coach Jay? He would like a pullback to probably about 682, 680 as well, I should say. I'm not going to be, I don't think 15 lots are to play with this Powell, but maybe 5s, 10s. Dolby time? I know Dolby time just wants a 15 or.
Those are the rules, Dre. 15 lots.
All right.
No one wants to see
15 lots. No problem. I
trade. No one
can't fit a
cares what
15 lot. I can't fit a 15 lot into the NASDAQ right here. It's very thin and it's very wide right now. 15 lots will just not. We'll just not. We got 680s here. We're pulling back to 680. Oh, we are running through 680s. Here it is, Dakota. If you want in, here's your 680s.
Oh, man.
Not yet. Not yet.
670. Hands off. Don't forget the decision tree. Thank you, Dan Trader. Community level and check price. Ladder liquidity blocks. 680s were nice low entry. Price action level, then take trade, yes or no. Yeah, yes. 680s. Looking at the tilt here. 71% short the NASDAQ. 71% short NASDAQ. Did you take that long, Dakota?
No. Nope.
Oh, my God. Hang in there, Dakota. We got about 37 minutes left.
Market's moving faster than I could react today.
Uh-oh. Raimundo says, Andre, stay on the porch if you're scared. Come on, man. Stay on the porch if you're scared.
Wow, who said that? That is rude.
Raimundo, stay on the porch. I've always heard if you're scared, get a dog. I've never heard that one. If you stay on the porch if you're scared. I've never heard that. Wow, 680s were very nice. Very nice.
Yeah, I'll just give you the levels. You trade for me.
Okay, deal. Deal.
Well, that was the trade again.
Yes, it was. It was.
Gotta be fast.
Yeah, well, you got to go through the decision tree. Decision trees takes a process here. So, you know what? We're going to start taking off some of the restrictions here in this house account trade. We're going to start using a little bit more discretion.
I think so, Dre.
I think so too. So,
You just got to start slamming them, buddy. Just slam them.
Yeah, that was what, 50 points? 50 points from the 80s? Oh, we're going to go 100 points from that. 680s.
Dolby, they want to know what you have in the background there. What is that? Daddy Chill? What is it? What is it?
Daddy Chill. You guys don't remember the Daddy Chill meme? That's a good one.
No.
I made this one last week when the ES rallied like 300 points during power hour in 5 minutes.
Yes. That was the trade right there. My goodness.
Yeah, I mean, that was good stuff. Really nice 5-minute range on the YM. Really nice range on the 5-minute on the YM. Could be a trade there if you want it. If not, it's fine. I can show you guys pictures of my cat. My cat's pretty cool.
Yeah.
Okay.
I was counting up 5. Some 5s. Yeah. These are all gonna be markets. These are all gonna be market orders. There's no sense in working bids. Here we go. Here goes nothing.
Okay, so I've had 2 trade call outs. 60 points each, huh?
Yes. You have what was the short? What was the short that you liked?
No shorts for me.
Okay. Well, the 710s got smoked. The 710s got smoked, but the 680s did hold. Unless you didn't puke, of course. Who's keeping track? Who's keeping track?
YM and Dow have like the same structure, which does not always happen. So that's kind of interesting. Very similar structure. I do have an upside, 17,782. Could be a fun area. Dakota 680s are pretty great. Bottom of the 5-minute range.
Yeah, those are nice. Very, very nice. Very, very nice.
Could be some cheap shorts at 17,790. Otherwise, maybe try to play a breakout above 17,790.
790s. What do you think about that, Dakota? 790s taking a short.
No, I'm not shorting this market.
Yeah.
Right.
I mean, that'd be like the cheap range trade. That's ignoring everything else.
Trade off.
I mean, everything's broken out. But 15 minutes
Yeah,
starting
I'm
a
looking
little
at
bit
Delta
range
there,
bound.
Hoag. What's Delta? Just a quick update there. We were at plus 6,300 going in this.
Where's Hoag? Need his levels.
Oh, getting levels down here. 760s. Those 80s were nice, Dakota. Very, very nice.
Yeah.
Very, very nice.
Gotta slam him in there, Dre.
Oh, yeah. Trust me. Even if you
People
damn
want-
don't. 750s. Trading 17,750. Here we go. I bet we get back up to 5150s at some point. 5100s have been a major magnet in the S&Ps.
How's chat trading
Yeah,
today? Did chat
that
enjoy
was the
their...
pullback.
Chat
what's
was
a great
very
pullback?
fired up about Chat is not a fan of Jerome Powell. They made that abundantly clear. They do not approve of him at all. For whatever reason that may be, man has a very difficult job. Very, very difficult job. Very influential words, but Chat does not approve of the job.
It's one of chat's trigger words, I think, is Powell. There's a couple.
Yeah, interesting. Interesting.
Add that to the list.
He was talking shit about my mom this morning, and I even approve of the job he's doing. So, you know.
That was rude.
We'll be all
Can't
right.
believe he did that.
It was. Next long, 706 on NQ. Eduardo says, pull back to 706 if we get there. If we get there, we got Anne-Marie's probably short with the stop at 51.22. Short in this market. Perma bull with me. Then we got shorts, 51.22. And ultimately, it's my trade. No, it's not my trade. It's discretion here. So we'll see. We'll see.
Dre, how was your report card?
Polarizing, as expected. Nothing really in the middle. Not a whole lot of shoulder shrugs. Let's put it that way. Not a whole lot of shoulder shrugs in there. But,
I haven't got mine yet.
If you hit me with a shoulder shrug, that's probably the worst.
That's because
the
you're
worst
perfect. You're perfect, Dakota. That's what your
are.
report card says. A plus.
All right, here we go. We got a pullback here. Let's see if we get this pullback to Dakota. What kind of pullback would you like here in the NASDAQ? Beneath 700s
I
again?
don't know anymore. I don't even know.
Here we go. Here we go. He gave us the well, the last one was 706. I saw 706 here. So 708. Yeah, Dolby. I got to look into it more. There was a lot of feedback. I haven't had a chance to dig in. That'll be it this afternoon. All right, trading 17,710 ish. All right. Got conflicting trades here, or trade ideas, I should say.
Yeah, I'm
692, 677. Are you guys talking about longs and entry? Wait for 650s, they say here in the chat. Wait for 650s. I think 650s. Nice trade there, Anne Marie.
650s could be good. 650s could be
650s could mean acceleration on the downside, though, no? Who knows? There's a BTFD. It might be BTFD here. Back to these 80s might be the range here. If we are in the range, I don't think any new information will enter the market. So range could be the play. Range could be a play. If we get pull back. There we go. Come up. Yes, we are, Dolby. I like it. 680s, 680s.
So
ran away.
long 15, 17,641.
That would be nice. Now I got a fiver pulled up right here. We'll see the pullback. So we can get back this whole gap, though. We got a whole gap here. Might be selling. Might be catching a falling knife. It's going down. All right, let's let it pull back. Keep letting it pull back. Dakota, I am conflicted right now.
Here?
No, actually, no, it can't be.
For what?
Can't be, even though Green Day would be nice for the board, for the account. We got to trade just to trade, just to trade. So here we go, 80s, 70s. Here we go. Are we falling? Are we falling? What
Yeah,
we got
I
here,
think we
chat?
could break down through this. We could break down through this and see the 50s.
Yeah. Why, you're seeing some momentum play? I know Jay Cook likes a 50-point retracement in NASDAQ before getting in. Broke trend, Ab says. You don't never know until it's over. Here we go. We are selling off. Good thing we didn't take those longs there.
Were they bad? Yeah.
They were bad. Very, very bad.
Yeah, they were bad.
Very bad.
They were bad.
Very bad. Very bad. Very bad. Sometimes the best trade is the one you don't make. But when you are instructed
It was
to
a
trade,
real big range. Real big range.
you are instructed to trade. You just trade, damn it. All right, 660s. We're gonna go VWAP. Is this going to VWAP, George? Are we going to VWAP? 650.
Okay.
650. I'm not seeing anyone saying sell. I'm not seeing anyone saying sell order. I think Dolby said take a short. Did not see one trade idea say sell. I'm not long. I'm flat. I'm flat. You are?
Yes.
Okay. So am I. I am long with you. Long for 54. Long for 54. Long for 54. Stop at 23. Long for 54. Stop at 23. We are getting just a hot knife through butter right here. Hot knife through butter. Is there a wiggle room? Is there a wiggle room? Got long with Dakota. Long for 53. Will we catch a bounce or will we get stopped out? Well, Dakota, what price did you get?
I got 58. So I got worse than you did. Yeah, I want to get into 3 though.
It don't matter. We're getting stopped out. Yeah. Oh, wow. What was that? Holy moly. Buyers just came in and said, no. Let's go full screen on here because I know that's what they want.
Yeah, 640. 15 lap.
Where are we here? Where are we? Boom, boom, boom. No.
Oh, yeah. Let's go. We got those numbers moving, Dre.
Hey, we're moving. We're moving here.
This is great. We got some action.
Just a 5 lot. Just a little 5 lot. Andre, chill. Zeke says, Andre, chill. What are we getting out at here, Dakota?
New highs.
I don't know.
I don't either.
New highs.
I don't either. I'll peel 3
Just
off right
hold it
there.
for-
Just peel.
till-
All right, just peel
till
3 off
end.
right there. Peel 3 off right
Oh my
there.
God.
We got 2. We're long 2. I'm going to click the break even button. Click the break even button. Boom. Click break even has been enacted. Engage.
Oh, groovy, baby.
Engage. I do not have a cap for this upside. Hopefully we don't hit break even. Break even is at 54.
Always going to go to break even.
54s. Let's run. Here's your runner. Here's your runner. 54s will hit break even. And we just hit break even. All right, we are out. Quick $1,000 there. Up to $4,500.
$1,000. Nice.
Yes.
Nice trade.
Yeah, you too, Dakota. You too, Dakota.
I only got into 2 contracts. I'm still in. Very small.
4,500.
It's a very, very small trade for me on this account.
And we are right back
I'm
down.
looking
Five-minute range here. Mhm.
Yeah, I'm looking at the 5-minute chart, and the way I see this is we had the initial move during the PAL, conference and everything, and then this is a pullback, and we're about halfway from that pullback.
Yes, we are.
So we'll see what we could do here.
Yes, we will. We are
Do we
selling
just
off
trade
here.
Buy
this?
stop underneath 66.28. 15 lap buy stop
66,
underneath for sell stop.
66.28. I could buy 20. I could buy 30s right now. I could buy. Oh, you want to sell?
I was thinking sell.
What are we doing? What are we doing? We're selling. We're selling. I mean,
I don't know.
we just got away with one. We just got away with one with that long. All right,
Yeah,
let's be honest with that. We got away with one big time.
Why? You made money on it.
I know we got away with it. That break even button. That break even button, guys. How about that? Saved us money. Made us money.
I do have a much wider stop loss than normal because of this high volatility.
Mm-hmm.
Don't call it a
Give us house,
pullback.
Danielle.
I mean, I still feel like this is only a pullback, and we could get a push back up to 700.
Yeah. All right. Here we go. We've got. We are selling off 1600s. What do we got? What's the view up? We are gonna go. We are gonna go. Thank you, Anne-Marie. Anne-Marie with that short. Nice trade on that short there, Anne-Marie. Beautiful. Here we go. Dakota, talk to us. I know you're perma bull, but we are breaking here.
I mean, I have not much on this. I mean, I'm just viewing this as a pullback. I mean, it's not anything can happen. We could continue to sell off and you take a loss.
Mhm.
I'm going to look for this to hold above 600s. If not, I'll just take this loss.
Yep. Man, you're not feeling well either, man. I don't know how much NyQuil you got. Don't be crazy.
No,
You
the
need your
2
rest.
lots is not crazy for me.
It's
2
not,
lots
but even
is
trading.
very, very small.
All right. You got it. But the man likes to trade. This is a rotation, Trader Hack says. All right, trade 17,000. We're going to trade 17,600. The NASDAQ. Dolby, that's a nice short up there we could have taken.
You know what? If you don't take the trade, it never happened.
Yeah.
Wave goodbye to that 5-minute consolidation and hope for another one.
Yeah, that was indeed. Powell starts talking. They pulled the rug out from this market. It's almost like he tried talking. Let's take a quick look at what bonds are. Let's see the 10-year
This is a
up to
decision point for me.
4.62%. Sorry, Dakota.
No, we're good. This is a good decision point for me. I might just close out of this trade if we break down right now.
Zagar says buy 17,560 full port.
Yep.
I'm
out. I took a loss on that one.
Yeah.
It is halfway. They're going to close. They're going
halfway
to close the
point
sucker.
of this
Close
range
this
is
sucker.
17,597.
597
is the midpoint
More.
of from low to high.
Pop. Yeah, it is.
So from 398 to 793, midpoint is 599, 597. But I think if we reject the top of range, I think we go to bottom of range and test new lows, and then maybe do a stop run down there, and then head back up to VWAP.
All right. Well,
Just to make sure
okay.
one is
Let's
as miserable as possible.
Yeah, we got away with one there with that long.
Yeah, you guys were in and out.
580s.
Really
Here we go.
quick.
Sellers are in control. We are hammering this market right now. We are getting hammered right now. Hands off this price action. There is levels are irrelevant at this point. I would say
1538 or sorry, 538 is VWAP, right?
Exactly.
538.
Exactly. But does it matter at this point? I mean, fuck.
I don't know.
I can't
listen.
see these prices. I can't even see these prices right now. I'm trying.
Man,
I'm
we're
trying. I'm
just
locked in here. I
selling
cannot
off.
see prices.
Wow. We gave up that whole move.
The entire thing.
538 could be a cheap buy for 15, just for a little scalper Rooney.
There's slipping. There's. I'm locked in here. 538s. 538s.
We're right back to where we started.
Yep.
Let's see. That was it.
Yeah, I think it's tough. I mean,
538s,
honestly,
Dolby.
it feels like we've gone
Can't see
from
this price.
from structure
38s.
to just guessing what the market wants.
That's what we're
and
doing
what
right now,
market
Dolby.
participants
Buckle
are
up.
gonna do.
We are guessing right now, Dolby. Buckle
I'm
up,
hands
baby.
off. I'm hands
I'm
off. I
buckled.
was looking for the pullback, and it's just dropping.
Yeah,
I'm
we got
really
the 38s. Just bought VWAP
Yeah,
and NQ. Nice, Anne Marie. That was the play. I don't know how long you can hold on to it for, though.
You could try a super
Stop.
tight short here.
Oh, those 38s, Dolby. Damn it.
I mean, come on. We never knew. We know we're not going to have time. We're not going to have time to discuss this stuff. You got to just slam the button and then just talk about it later.
Yeah, I know.
The market's not going to have,
son.
The best trades sitting there
As Jay
for
Cook
5
will say.
minutes.
As Jay Cook says, the market will wait. Don't worry, the market will wait. Nice
Market
trade,
will be
Anne
here
Marie. Anne
tomorrow.
Marie carving it up today, Anne Marie. When you're on again, we need to talk about this trading day. From the morning to
Ranges.
the afternoon, just absolutely beautiful. Oh, that's 38. Dolby time, my partner, man. I let you down.
It's okay. There'll be more. There will be more.
Jay Cook, the market will wait. Yeah. Up to 600s. We got about 19 minutes left in this session. Eddie, when you get those MOCs, we should see some serious volume today. I would think.
We'll see. I know we had some good stuff yesterday. We'll find out here. I'll be watching.
Yeah. I don't know if we're going to have time for top quiz results today just yet. Markets are moving, rocking and rolling. I do want to hear what happened in the day after the very controversial top quiz session from yesterday.
What was the controversy?
Very controversial. Eddie's questions were deemed a bit too difficult for the chat's liking, so they got their pitchforks and they got their pitchforks out.
Really?
And they came to raise hell.
I still think close. I still think close. Cycling Grandpa, the break-even button in Topstep X is only available after you place a trade, and it will be by your dome.
And the trade needs to be in the money. The trade needs to be in the money for it to activate. Yep.
Yeah. Have a trade and have it be in the money. Short through VWAP, Trey? Sell stop below 538?
530. What market are we talking? Sorry.
NQ.
NQ short. You want me short for 538?
Just sell stop right through 538. Tight stop.
If we want to sell 538, here's my question. If I can sell 538s, why wouldn't I just sell 540, 550s right now? Just momentum play? No, I'm just saying. I'm just asking.
Yeah, I mean, I feel like momentum plays play out a little bit better in the NASDAQ.
I'm kind of hands off right now, though. We got 15
minutes.
We are
15 minutes from the close.
15 minutes today. It'd be nice to get a green, put up some posy day on the week. Pretty much scratch yesterday, which we'll take. I know we don't trade P&Ls, but we do account manage, and I look at account management on the whole over the week. You manage the account over the week. Right now, we kind of got yesterday back, so we just got Monday to work on. We got 2 days left to do it with a lot of stuff. We got non-farm coming up. We got some heavy earnings tomorrow. We will see. John, what's the delta? There you go, John.
I got in long.
What do you got?
40 and a quarter. 540 and a quarter.
Nice. It's a good trade.
Yeah. Thank you, John. Plus 30, plus 5,500. ES plus 3,400. NASDAQ. Okay. It's a little long. Yeah, I'm taking a bit of heat.
This is going to be such an insane close, Trey. Are you ready for this?
Yes, it is. Yes, it is. Yeah, we got 15 minutes here.
Minutes are going to be absolutely bonkers.
All the way around.
I wonder what the MOC imbalance is going to be. Nuts.
Over a bill. I'm guessing over a bill.
Sell side. Probably sell side.
I like the longs right here.
Yeah, that's a great trade.
Yeah.
VWAP bounce.
Yeah, I think we could get back up to 600 again. Maybe this is a double bottom.
Is this it?
This could be the double bottom. If we want to get long.
You got 40s? You got long from 40?
I got 540 and a quarter.
Beautiful, beautiful, beautiful. How many times, Dakota?
One contract. I did close off another one before that.
Okay,
I'm up.
You're already up like $500 though. That's insane. NASDAQ never change, baby.
Never change.
One contract. One contract only.
So the sell stop idea, Dre, is because I think if it gets below VWAP, it might make a real strong push lower. But if it's hanging out above VWAP, then maybe that theory is invalidated.
I like that. Thank you for explaining that. I followed your logic there. Yes, it's if we're gonna go, we're gonna go, and if we're gonna go, let's catch it. Basically, is what we're
right, and then we can set like a tight stop if that. I mean, Dakota's a cheap trade on too.
Yeah, I just seeing using this as a stop. This
yeah, that's awesome. I mean, if you believe in a level, you got to take it.
You are true. This is true. Nice. I like Dakota's better. Yeah, George. 540s. Push for Dakota. Push.
Yeah, let's see if we could get into the 600s again. Better late than never.
I'm curious to see if Chad is bullish or bearish because we're right in the middle of the range.
Put Z poll up if you don't mind. Chat, it's bullish or bearish? NASDAQ 17,600. Just call it 17,600. You bullish or bearish? NASDAQ 17,600. You bullish or bearish? If you're bearish, you got 10 points. You're 10 points in the money. No, you are not.
Okay. Here we go. If we break above 605, 606,
wow.
we are going
to
push.
Beautiful, Dakota. Beautiful.
Man, it's what,
We'll see if this could be a valid double bottom.
NASDAQ. Wow.
No one been in the polls. Okay. All right, we got 14 minutes left here. Delta was, last we checked, plus 3,400 ES. They may have just, they're liking that action. Plus 3,400 ES, plus 5,500 NASDAQ. We trade right up to 17,600 in no time. Well done, Dakota. Took very little heat on that second attempt to the upside.
Markets are moving fast. So fast.
Yeah. Fast markets in power hour. How about it? Be sure to tune into Slow Markets this evening with Dakota and Coach Jay. Great duo. Great duo. Bullish or bearish equities right now? Get it in there. Trading about 17,600. I am bullish.
What do we have? Well, 13 more minutes. We'll see. I'm trading off the 5-minute chart. So I'm looking for us to have a 3-bar reversal and a break above 606. That's what I'm looking
606?
for. We're just kind of consolidating. Yeah, 606.
606.
This 100 tick chart makes it look really dramatic. But yeah, 5-minute chart, we're just, I mean, that average true move on this 5-minute chart is like 100 points. So yeah, it's pretty disgusting.
Sell stop, Dre. Smash your sell stop, 15 lots. Let's just rip the Band-Aid off, buddy.
Yeah. I got this lockout button in my sights right here. Dolby time. I got the lockout button.
I'm gonna keep on tempting you with trades until you press that button.
What do you have? 4,500
so
bucks?
You know.
4,500. Much needed $4,500, Dakota. A much needed.
Why do you say much needed?
It was a much needed $4,500. Just to reinforce the process, we got the decision tree that we added to the arsenal today. We got in some good levels from our best traders. And it's nice to bank a positive day for the account on a Wednesday. It's good for the psyche.
What is the decision tree?
The decision tree provided us by Deeyana this morning. First, we get a community level from our community, people like yourself, Dolby Time, Rips, Jay Cook, Isaac, all the Nick T. Then we check the price to see where we are in relation to that level. From there, we look at the ladder, look for liquidity blocks to see if we can get confirmation that way. Then we look at see if the price, where we're at in the active level, if the price is valid, then we get confirmation from those, and we say yes or no to the trade. A lot of steps, eh? A lot of steps, but less steps.
You know what our
than
account
before.
balance is, Dre? You know what the
I do
account
not.
balance is? Like, are we?
I do not. Wow, it's getting thin and wide. I'm not sure. I think they're behind the scenes. They are working on that. They'll probably make it nice and pretty for TV. What is going on this NASDAQ? This ladder is just trash. Where did everybody go?
We're just consolidating right here on this 5-level
zone. Is that what you call this? Okay. Here we go. Wow, it is thin. Yeah. Miss Delta, Tyler McClin. I know. Today's a different type of day, though, Tyler.
Range. Really nice 5-minute
yes, it is.
range.
Final 10 minutes.
Yes, it is.
Yeah, it's going to be so crazy in the last
Just
10
inside
minutes.
candles.
Yep.
We'll see if we can find some buyers, or if we break down below the last 5-10 minute candles. I'll just close out of this.
I mean, no newer highs on the 1 minute.
All right. MOC and balance 1.3 billion. I'm sorry, 1.3 billion to the sell side.
Sell side.
Dolby called it. Dolby Time called it.
Oof. Yeah, didn't make higher highs on the 1 minute. So there might be some sellers coming in here.
Yeah. Freddie A just said it. Top step on top. Let's go. Real traders, real trades, real accounts, real Chicago guys. Bada bing. That's right. The real ones.
So
here.
I finished.
Don't forget that.
I'm finished 50 or 4,600 up.
Beautiful,
Nice,
beautiful.
It's awesome.
Good job.
About $1,600 power hour.
Not a bad power hour. Power hour
Hey,
again proves to be profitable. Here comes some sellers.
Yeah, that was a great trade. I mean, if this happened again,
we're getting away
probably
with
would have taken it over and over. You guys got
robbery here. Those upside trades. Almost got the 600s though. Actually, we did get the 600s. So there's some opportunity in here. We got 9 minutes, less than 9 minutes left in Power Hour.
So we're where we started the FOMC, right?
Right back, like it never happened. Like it never happened.
Yep.
Down we go. What do we think? I think at least 420s.
Target 420. Shout out.
Yep. That's what I think. Yeah, I mean, pretty much range to range is kind of the gist of it.
Well, yes, it is. Yes, it is. Here we go, 17,500.
Nice job. Down we go.
It was just a blip. That's all it was.
Which what? The little pop there, the 17,600?
That whole past 1 hour was just a blip.
Oh,
2 hours.
Dakota, this is all one big blip, man. This is all one big blip.
Dakota, we're just on a rock spinning around the sun, man.
Yeah, we are, if you think about it. It's all one big simulation.
Yep. Andre has clones.
Very many. You don't know
Robert's
which one
my
is
dad.
present. You don't know which one is talking to you as we speak. All right, we got less than 7 minutes here on Power Hour. Looks like it's gonna be a profitable day today. I'm gonna hit that lock button. Just
keep on doing it.
Engage. Button has been locked.
Just smash
locked
it.
out.
All right.
Had to. Yep. Let's
on my 15-minute candlesticks. Looks like the Sears Tower.
Yeah, kind of nice. I feel that, Eddie.
Damn straight,
30
Eddie.
minute too.
It's not the Willis Tower.
No,
That's right.
Sears Tower. Maybe
Sears
the Hancock
Tower.
building.
Yep,
I
I'm
think
on
it
to
is
work
still
there.
Hancock. Yeah.
Believe it or not, I was on the roof of the Hancock building.
Really?
On purpose? On purpose or against your will or willingly? Okay.
The Hancock. My dad was a superintendent construction, and he brought me on the roof, and I was maybe about 11.
That's why.
No, Dad, don't. You're going to fall. No, Dad, don't. Come on, stop.
Yeah, my neighbor's a union elevator guy. So he has all sorts of crazy shots from the top of roofs of buildings downtown. It's wild.
That's cool.
Yeah, he has fun stories.
All right, folks, here we go. Coming up to 5 minutes till the close, the big liquidity injection. Watch this. You're going to see some fireworks. I'm going to switch over to the S&P ladder because this is when you see some real action.
300 points up, 300 points down.
Gotta love it. Gotta love the volatility. Gotta love it. Gotta love this job. Gotta love TopstepTV, Topstep X. Great shares like Dakota, Deeyana this morning. True, that guy's the man. Anne-Marie carving it up today. Jay Cook, Nick T, Rips, all y'all. All y'all, man.
Down we go.
You guys made money in the house account this morning too, right?
Yeah, we did. Yeah, right back to 50-50 in the S&Ps. I'll be damned. Here we go. 55 has how? Boy, it's still thin.
No, I'm not in the trade. People ask me if I'm still in the trade. I closed out. I took most of my contracts. I had that loss around what was it, like 60, like 17,650s. I took the loss there.
Yes.
But then I made up pretty much most of it and then some on that bounce off of like what was it, 550 or 500 or something.
What a rug pull is right.
Mm-hmm. Down we go.
Right.
What do we got? Ooh, 4 minutes left. Pure action.
So we are right back to 50-50s. All right, big day tomorrow. Sure, Eddie, you got bell and outro. Camera on, please. Eddie will have give you a rundown for what's coming up tomorrow. We got big days coming up tomorrow. To keep in mind, this is an Employment Friday week as well. Before we get there, we got some earnings coming on. getting released tomorrow as well. We got some volatility. Also, the market's going to digest everything that happened today. They're going to reread the transcript from Powell's press conference and his prepared remarks before that press conference. They're going to reread it and look for clues in there that he may have gotten that we may have missed in real time. So there might be some digestion and some market. Could be a hangover day as well. We also see that. So be prepared for both. Don't necessarily come out guns blazing tomorrow. Sometimes I was always guilty of. Big volatile action-packed day like today, I'd come out guns blazing, expecting more of the same, and just land on his face. So be agile and adapt to what the market gives you.
I'll see you guys tonight. Slow markets. We'll review the same thing and see what tonight goes through.
Absolute trooper.
Absolutely, Danielle. We're gonna postpone quiz winners till tomorrow, as the markets were super volatile. So we just stuck with markets and trading. 2.5 minutes. Guys, yes. Delayed trades after the session. Thank you. Dakota, cannot thank you enough for joining us in the chat. A real trooper. Sticking it out.
I think I'm, after today, I'm right back at my high water mark almost.
Wow. Love to say that. Love to see that. I'm telling you, this is the best. We got the best right here. The best right here. He's got his own show coming up this evening. And we'll have him, Coach Jay, on Fast Markets sooner than later. And we'll take some house account trades and grow the sucker. Yeah, Coach Jay, Coach Dakota, Friday morning, Fast Markets.
Yeah, Coach Jay and Coach me, or whatever, tonight. I will have Coach Jay on as a guest.
Very cool. I will tune in for that. Absolutely tune in for that. Great VWAP smash call, Dolby. Great call.
You know, they couldn't hold it.
VWAP. 80 seconds. One hell of a session.
I'm just looking for 420s. That's all I'm looking for.
Absolutely.
That's my call.
I wonder if there was. I'm going to be curious to hear shoulder tap tomorrow to see if there's any traders that were holding long from up in the 700s. That is going to be an interesting segment tomorrow. Shoulder tap.
Shoulder tap.
Yeah,
Yes, it
that's
will.
going to be a messy one.
Who broke the rule? Who was a naughty trader? 60 seconds here.
Oh, 60 seconds
So
till 420. I think we can hit it.
Back to where we started. Right back to where we started. R.I.P. to Nate Dogg. 50-50. It's like there's a damn magnet on this thing. Take a quick look at the 10-year yield before we sign off here for the day. 4.62%. 4.62%. We did get as low as 4.59% mid-Powell compressor. Wasn't watching it tick for tick. I do see we added a couple pips to that. Thank you, everybody. 10 seconds. Everyone, thank you so much to the bellers. Please click like, subscribe one more time. Let's get to 85,000 subscribers by end of day. That'd be really tight. Dakota, you are the man. Dolby time, as always. We are.
Oh, so
Eddie.
close.
Eddie, you got it, Eddie.
So close.
Did I just shut you down there in D time? I'm sorry.
No, we were 5 points away from 420, Eddie. It went to 425. We almost had it.
Oh,
almost had
it.
Smoke weed every day.
There you go.
All right, take care, guys. I'm out. I'm gonna go hit the.
Yeah, have a good one.
Hit the day club. See ya.
See you, Dakota. All right, tomorrow is a very fruitful day. As far as economic numbers throughout the day, there's an early one. We got a 6:30 Challenger job cuts. Minor number, but I think we're going to get more into it when we have our jobless, as Hoag says, the jobless clams. Jobless claims at 7:30. We got import-exports also at 7:30, initial jobless claims. And we have our non-farm productivity at 7:30. That's not it. Hold on a second. We've got a trade balance and unit labor cost. This is all coming out at 7:30. So be ready for this. I will make sure that hopefully I'll give you some reminders in the chat. Scrolling down here at 9 o'clock, we have our durable, excluding defense, transport, and the factory orders. We got to keep an eye on that one also. And those are going to be the month over month for March. Also, we do have total vehicle sales at 9 o'clock. Scrolling down here at 10:30, 4-week, 8-week bill auction. And later in the day, we'll get a Fed balance sheet and that reserve balance with the Federal Reserve banks later in the day. Well, as far as our menu for tomorrow's the 2nd of May. You're ready. My goodness, April was a blink of the eye. Join us tomorrow, 8 o'clock Central Time, where Hoagland and myself will get the party started. We'll light that fuse and start up the show. Fast Markets, Andre, Hoag, JD, Jack, and Anne Marie. Power Players, Dolby, Robert, and Coach Jay. We also do have TopQuiz again with me, so get ready for some, probably, we'll go if you're smarter than a 6th grader question. We'll move it up a level. Vanessa's going to join me. Andre Mick for Shoulder Tap, JD Robert for Group Coaching, Andre, Nick T, Isaac R for Funded Traders taking over. Yes, they will be taking over that 1 o'clock p.m. Central Time segment. And to end the day, we got the dynamic duo, Andre Dolby and Justin. Justin Werling is going to be with us here for Power Players. Now, hopefully, you learned something today. And if it was just one thing, then you are moving forward in your trading journey. So we love having you here each and every day with us, and we hope that you love being here each and every day. So now it's time to get some rest, re-energize. Remember, family time now. Log off, shut it down, and go enjoy your family. So anyway, stay safe, stay healthy. Until we meet again, I'm Eddie Horn, and this has been Topstep TV.
How's it hanging, Topstep TV? It's your boy, the chairman of Stealing Yo Girl, back to give a little preview of this afternoon. You might have noticed that the inflation numbers lately have been stickier than Andre's mom. Get your mind out of the gutter, chat. The woman just loves taffy. And Daddy Powell. But I'm here today to personally express my gratitude to Topstep for doing its part to reduce the money supply and tame inflation by racking up those losers in the house account. Every one of those red days is a step in the right direction for America. You boners have my eternal gratitude. Now, if you'll excuse me, I have to go to a suit fitting for the Met Gala. I can't tell you who my date is yet, but it's Zendaya. Trade slow, muchachos, because I'm coming for that ass at 1:30. Vaya con Dios. Powell out.